Good morning, everyone. So, we were into the discussion related to value of supply. In that we have seen section 15, and now we are looking into summary on CGST rules related to valuation. So, you can see this, when these rules are applicable mainly when price is not the sole consideration or supplier and recipient are related. So, first rule 27 we have. What does rule 27 says? When price is not the sole consideration, means consideration is partly in money and partly in other form, or consideration is in non-monetary form, then in that case rule 27 will be applicable. Then when 28 is applicable, in case of transaction between related parties including distinct persons, rule 28 is applicable, and rule 29 is applicable in case of principal agent transactions. So this information is in page number 73. So three rules are there, rule 27, 28 and 29. 27 is when price is not sole consideration. 28 related party transactions including transaction between distinct persons. 29 principal agent transaction. First we are seeing rule 27. It says that, so when price is not sole consideration, you please take the open market value. So if open market value not ascertainable, the first priority is open market value. If that is not available, then only we need to take money received plus money value of non-monetary consideration. So suppose if this is also not available, why this is not available? Money value of non-monetary consideration is not available, then we need to take like, kind and quality. Like, kind and quality also not available, then rule 30 which says that we need to take cost plus 10%. So when we are taking cost plus 10%, so below in note 2 I have given, so what should be taken as a cost? The cost will be in case of manufacturer cost of production. In case of a trader, it is cost of acquisition. In case of service provider, it is the cost of providing the service. Suppose if I am a manufacturer and I am giving it to a person where I am getting partly in money and partly in non-monetary form. Now open market value not available. So and price money received plus money value of non-monetary consideration. I got some non-monetary consideration from the recipient. So that also not available here. So like, kind and quality also not available. Then what I will do, I will take cost of production, add 10% or into 110%. Anyway, you can remember, and that will be taken as a value for payment of GST. And here, what is the difference between open market value and like, kind and quality? So first we need to check open market value. If not available only, so then the second money received plus money value of non-monetary consideration, if that is also not available, then like, kind and quality. What is the difference? So OMV and LKQ. Comparable time, if you see, for OMV it is the same date. Open market value, it is the same date, which means that today what is the price at which the transaction has happened. So I am making sale today. So for that, what is the open market value I need to take? Open market value also today only, same date. Whereas like, kind and quality need not be the same date, it can be any nearest date also can be taken, that is this. And comparable value, open market value should be like transaction value. Transaction value means, so that is only the price involved in the transaction. It should not be value under any rules. Whereas in case of like, kind and quality, either it can be transaction value or value as per rules also. And who is the supplier? Comparable supplier. In case of open market value, same supplier or any other supplier. Whereas in case of like, kind and quality, it should be same supplier. And comparable goods. In case of open market value, it should be same goods. So different goods and all will not be taken. Whereas in case of like, kind and quality, so minor differences are acceptable. So that's what usually I tell in the class. So you take a washing machine. For a washing machine, so if you take front load washing machine, the open market value should be another front load washing machine only. And in case of like, kind and quality, also it should be front load washing machine only, but minor differences. Minor differences means what? So change in the color or change in the capacity, little bit there could be a change, but more or less it should be same. So minor differences are acceptable. That is what like, kind and quality is. And in case when money received plus money value of non-monetary consideration is available, we will go by that. But remember, when we have open market value as well as this, we cannot decide here. It's not up to the option of the supplier. So first open market value available means we need to go by open market value only. So what are the four priorities? OMV, money received plus money value of non-monetary consideration, like, kind and quality, cost plus 10%. What if cost is also not ascertainable? Then fifth point is there, that is residual value, where the value will be determined by the officer. So if the above value is not possible, then the value will be determined as per rule 31. Rule 31 is residual value. So we will follow the principles of valuation and we can determine the value, or alternatively we can go for provisional assessment. We can request the officer to determine the value. So that is this residual value, rule 31. Now, in the second case, what is the second case? Related party transaction, including transaction between distinct persons. So we will be taking, so only 4 points. So in the second case, second point is missing. So what is the second point here? Money received plus money value of non-monetary consideration is not there in the case of rule 28. So for, remember, for second situation, second point is missing. Okay. So first open market value. If that is not ascertainable, like, kind and quality. Immediately we will jump to like, kind and quality. If like, kind and quality also not available, cost plus 10%. If that is also not available, residual value. Related to this open market value, there is one point. What is that? If recipient is eligible for full ITC, whatever is the transaction value in the invoice, that itself will be deemed to be the open market value. For example, I am making sale to a related person. I am raising an invoice for some 100 rupees. That 100 rupees itself will be taken as the value, provided my recipient is eligible for full ITC. When my recipient is eligible for full ITC, if his outward supplies is fully taxable, if his outward supply is partly taxable, partly exempted, he cannot take full ITC. If his outward supply, my recipient's outward supply is fully exempted also, he cannot take ITC. So therefore, recipient is eligible for full ITC means what? His outward supply. Whose outward supply? Recipient outward supply fully taxable. Then only he is eligible for full ITC. Then only whatever price that I declare in the invoice, that itself will be taken as the open market value. What if recipient is not eligible for full ITC? Then we need to determine the open market value. Sir, in question, if it is silent, they have not given anything about recipient eligible for full ITC or not eligible for full ITC. You take that recipient is not eligible for full ITC. If recipient is eligible for full ITC, specifically it will be given in the question. If the question is silent, which means that recipient is not eligible for full ITC, and we need to determine the open market value. That is this point. Now, alternatively means instead of following this OMV, like, kind and quality, cost plus 10%, alternatively we have another option also for the supplier, and the supplier can choose between either OMV, LKQ, cost plus 10% or this option. What is this option? 90% of the resale price option. Means I am selling to you, you are my related person, I am selling to you. You in turn sell it to an unrelated person. So that sale to an unrelated person into 90% will be taken as my value. For example, I am selling to you for 10,000 rupees and that will not be taken. Why that will not be taken? Because that may not be the true value, because you are a related person and you are not eligible for full ITC. So this 10,000 irrelevant. Now you are subsequently selling to an unrelated buyer. What is the price at which you are subsequently selling? Say 20,000 rupees. That 20,000, assumption here is 10% is the profit margin that you will make. So 20,000 into 90%. What is 20,000 into 90%? 18,000 will be taken as my value. So that should be taken here. So this is alternative only, which means either I can go for OMV, LKQ or cost plus 10%, or I can follow 90%. For example, open market value is only 15,000 and 90% of resale price is 18,000. So now what I can choose? I can choose 15,000, whichever is lower option only that I will be choosing. But remember, this 90% of the resale price option is available only in case of goods, not in case of services. Rule 27 is common for both goods and services. Rule 28 also common for both goods and services. But this 90% of the resale price option is only applicable in case of goods. And one more condition for this 90% of resale price is that recipient should not process that. For example, I am selling to you, you are my related person or you are my distinct person. You should be selling it as such. You should not do any processing. If you do any processing, this 90% resale price option will not be applicable. So recipient should not process those goods but should have been sold it as such. Then there is one more proviso that has been added. This is an amendment, so which is applicable for May 24 exam onwards. What is that it is about? In case of corporate guarantee, which is given by one company to the another company for the purpose of borrowal. So here usually what happens whenever we make some borrowals, unsecured loans and all, so banks expect someone to give guarantee. Secured loan means there is a proper security available, but when it is unsecured loan, there is no security, so the bank will expect so as to get some guarantee. This guarantee can be given by any person, so who is having some good financial standing, and this guarantee can be given by individuals also, or this guarantee can be given by corporates also. Okay, now there is a company which is borrowing some money. So now when it is borrowing some money, another company, usually who will give guarantee? Holding company will give guarantee to the subsidiary company. Suppose if the subsidiary company is so sound, then the subsidiary company sometimes will give guarantee to the holding company, but that is minor case only. But usually holding companies will give the guarantee when the loans are being taken by the subsidiary company. Now holding company and subsidiary company are treated as related parties. Usually in case of this guarantee, there is a concept called as guarantee commission. So if I am guaranteeing a loan taken by you, so I expect a commission from you because I am giving you the guarantee for the loan that you are taking. So therefore a commission will be expected. So here holding company, when it gives the guarantee to the subsidiary company, so the subsidiary company will pay a guarantee commission to the holding company. So now in that case, it's a related party transaction. Sometimes the guarantee commission may not be paid also. Consideration may be there or consideration may not be there. But here the logic is, it is coming under 7(1)(c). Why it will come under 7(1)(c)? Holding company and subsidiary company are treated as related parties. Any transaction between related parties is treated as supply under section 7(1)(c). So in this case, what should be taken as the value? The value should be taken as the open market value logically, correct or not? So because it's a related party transaction, rule 28 should be applied. But in case of corporate guarantee between related persons, they have added one proviso. What does it say? Supplier of services providing corporate guarantee to any banking company or financial institution on behalf of the recipient, that is related party, value of supply will be 1% of the guaranteed amount or the actual consideration, whichever is higher. According to me, it is one stupid provision, because holding company is giving guarantee to the subsidiary company for 100 crores. Now in the case of this 100 crores guarantee, the commission, guarantee commission, which is paid by the subsidiary company to the holding company, could be somewhere like 10 lakhs. 10 lakhs could be the actual guarantee commission. Now when 10 lakhs is the actual guarantee commission, but GST will be payable not on 10 lakhs. Okay, see this, there is a holding company, and this holding company is giving a guarantee to the subsidiary company for the loans being taken. Okay, guarantee with respect to loans, for which subsidiary company will definitely pay a guarantee commission. So what is that guarantee commission? Let's take the guarantee commission as 10 lakhs. Guarantee commission, that guarantee commission, let it be 10 lakhs. 10 lakhs is taken as guarantee commission. And what is the loan amount? The loan amount is 100 crores. The loan amount is 100 crores. Now, is it supply or not a supply? Definitely it is supply under section 7(1)(c). Why it is supply? Actually 7(1)(a) itself will come, because there is a consideration. As there is a consideration, it will come under 7(1)(a). It's a supply. But we need to determine the value as per rule 28, because they both are related parties now. So due to that reason, value under rule 28. Here this holding company and subsidiary company are treated as related parties. So value under rule 28 is simple. 1% of guaranteed amount. What is the guaranteed amount? 100 crores. 1% of 100 crores or actual consideration. Actual consideration is 10 lakhs. Whichever is higher or whichever is lower? Whichever is higher. Means even though the actual consideration is only 10 lakhs, so therefore the value will be taken as 1 crore. Correct? 100 crores into 1%. So that will be taken as 1 crore will be taken as the value, and on which GST is payable. Now, what if there is no guarantee commission? What if there is no guarantee commission? There is no guarantee commission. Even in that case, the answer will be same. So in case when the guarantee commission is not there also, still the value will be taken as value under rule 28 will be 1% of 100 crores or actual consideration. There is no actual consideration. So whichever is higher is what? Definitely 1 crore in 1 crore. 1 crore will be taken as the value of supply, which means just because a guarantee is being given, unnecessarily the holding company is required to pay GST on this 1 crore, and whatever GST that they pay, and definitely they can recover it from the subsidiary company, and the subsidiary company can take ITC with respect to this. But the twist here is, what if the subsidiary company is engaged in exempted supplies? The entire GST is lost for them now. So that is the stupidity in this provision, but we need to do. But remember, this provision is applicable only in case of corporate guarantee, not in case of personal guarantee. Personal guarantee means what? So wherein a director will be giving guarantee with respect to loans taken by the company. Okay, so director giving guarantee is called as personal guarantee. So that personal guarantee point we are not discussing right now. We are discussing only about the corporate guarantee. Okay, now, so there are multiple combinations in corporate guarantee that could be possible. So let's try to understand the corporate guarantee situations. So what are the various situations that will be possible in case of corporate guarantee? Corporate guarantee, so given by unrelated company to company, between unrelated companies or between related companies, possible. So even unrelated company also can give corporate guarantee. Yes, given by one related company to another related company, one related company to another related company. So when the corporate guarantee is given by one related company to another related company, so is it supply or not a supply? Yes, it will be supply. It will be supply under section. Now we need to see whether it is for consideration or without consideration. So for a consideration, so then it will become supply under section 71A. And suppose if it is corporate guarantee given by one related company to another related company, without consideration, another related company without any consideration, So in this case, it will become supply under section 71C. Supply under section 71C. In both these cases, what should be taken as the value? In both these cases, the value will be common. So value under rule 28. Value under rule 28 is what? 1% of guaranteed amount or actual consideration, whichever is higher. Actual consideration involved, whichever is higher. Suppose if it is by related company to another related company without any consideration, value under rule 28, what will be taken as value under rule 28? Only 1 point, 1% of guaranteed amount. 1% of guaranteed amount. Suppose if an unrelated company is giving the guarantee, then what will happen? Can unrelated company give guarantee? Yes, they are basically associate companies. So not holding subsidiary company. Holding and subsidiary only will be treated as related under GST, but associated companies are not treated as related. So for example, one company has invested 26% in the other company. As per income tax, they are treated as associated companies, but under GST, they are not treated as related persons. So due to that reason, but sir, there is one point related to 25% in related parties. What is that 25%? There are two companies having a common shareholder, and that common shareholder has invested 25% or more. Then these two companies will be treated as related. But here I am not talking about that. I am talking about one company investing 25% in the other company. So they are associated, or 26% in the other company, they are associated. But they are unrelated for the purpose of GST. Now what will happen in that case? So third point, corporate guarantee given by unrelated company for a consideration. Is it supply or not a supply? Definitely it will become supply under section 71A, because there is a consideration that is involved. Then what will be taken as the value? So definitely rule 28 will not be applicable. Why rule 28 will not be applicable? Because they are not related. As they are not related, we need to take the value under section 15. What is the value under section 15? That is transaction value, which is nothing but the actual consideration that will be taken in this case. And then another point, so number 4, what if it is given by unrelated company without consideration? Is it supply or not a supply? It is not a supply. Why it is not a supply? Because it is unrelated and there is no consideration. So in order to become supply under 7(1)(c), 4 points will come. DRIP, DRIP. D for disposal of business asset on which ITC is availed. That is not applicable here. Related party transaction including transaction between distinct persons. That is also not applicable here. And then we have import of service from a related person, not applicable. Principal agent transaction, that is also not applicable. Consequently, it is not a supply. When it is not a supply, we don't have to determine the value for payment of GST. So this is in case of corporate guarantee. Now, one more point is also possible, that is guarantee given by government. So what if the guarantee is given by government to a company, whether it may be with consideration or without consideration, then what is the impact of that? So this point also we will write, that is guarantee given by government to whom they will be giving public sector undertakings. They will not be giving it to normal companies, they will be giving it to PSUs. What about this? Is it supply or not a supply? And it may be for a consideration. Definitely it is for a consideration called as guarantee commission. For a consideration. Is it supply or not a supply? Definitely it will become supply under section 7(1)(a). But should we determine the value here? No. Why? Because it is called as exempted supply. Why it is exempted supply? We have seen some activities of government to business entities. In that list of 14 activities, there are 14 specific exemptions with respect to services provided by government to business entities. In that 14 exemptions, one of the exemption is guarantee commission earned by the government. So government will give the guarantee with respect to loans taken by PSUs, for which the PSUs will pay a guarantee commission. That guarantee commission which is received by the government will be exempted. So we don't have to bother about any valuation here, because the activity itself is an exempted supply. Then what if it is a personal guarantee? What if it is a personal guarantee? So who will be giving the personal guarantee, and what is the treatment related to that? So personal guarantee can be given by a director or a ex-director. So director giving guarantee to the company, so that we are taking, so continuing to this. So the sixth situation is director giving guarantee to company. Director giving guarantee to company. Is it for consideration or without consideration? Definitely it should be without consideration. Why it should be without consideration? Because there is a RBI circular which says that whenever a director gives the guarantee to the company with respect to loans taken by the company, so the company should not pay any consideration as per RBI circular. So due to that reason, director giving guarantee to company, so will be without consideration. Without consideration. Why it should be without consideration? So as per RBI circular, consideration should not be paid. Consideration should not be paid. So due to that reason, consideration will not be there. Will this become supply or not a supply? It will become supply under section 7(1)(c). Why, sir, it will become supply under 7(1)(c)? Because this circular says that director and company are deemed to be related. They are treated as related. Under which point they are treated as related? Such persons or officers or directors of one another's business. Under that point, so director of a company and the company will be treated as related. So director and company are treated as related. and moreover it is without consideration, so it will become supply under 7(1)(c), and we need to determine, as they are related, we need to determine the value under rule 28. What will be taken as value under rule 28? Whether this 1% of the guaranteed amount or actual consideration, whichever is higher, is applicable in this case. Not applicable, because that proviso is applicable only in case of corporate guarantee. But what we are discussing is not a corporate guarantee, it is a personal guarantee which is given. So, but value will be determined as per rule 28. What will be the value as per rule 28? Open market value. What is that open market value? Nil, as per CBIC circular. Why as per CBIC circular the value will be taken as nil? Because RBI circular says that there should not be any consideration involved. Means consideration should not be paid by the company to the director. Means open market value, generally there won't be any consideration. So how to determine the value? It cannot be determined. Due to that reason, here the open market value should be taken as nil. This is as per RBI circular. So, and CBIC circular, these two are connected. That's what I have already given here in the note. In case of personal guarantee by director to company without consideration, value shall be considered as nil as per CBIC circular. Why? Why like that they have given? Because as per RBI circular, consideration should not be paid in case of personal guarantee by director to company. So there should not be any consideration for that reason. Sir, but can this circular be overridden? Yes. So we can override this circular. Companies can override this circular, but they will not do this. So because we are not talking about the provisions when the companies breach, so they will, if RBI circular is given, they will follow that. But what if they are not following RBI circular and all? It's not useful for exam, because those kind of questions in exam they will not be asking. Okay. So this point only will be tested in exam. Don't worry about that. Then next, what if ex-director giving guarantee to company? Here whether RBI circular will be applicable? So no, because RBI circular is applicable only in case of director giving guarantee to the company, not ex-director giving guarantee to the company. Means when ex-director is giving guarantee to the company, will there be consideration involved or not? May or may not be. So therefore, 7th case, ex-director giving guarantee to company for a consideration. Is it supply or not a supply? Definitely it will become supply under section 7(1)(a). But rule 28 will not be applicable. Why rule 28 will not be applicable? Because they are not related parties. Ex-director and company are not read as related. So therefore we need to determine the value under section 15. What will be taken as value under section 15? That is transaction value. That will be actual consideration. Whatever is involved will be taken. Okay. Now, last case, what if there is a ex-director and that ex-director giving guarantee to company, without consideration? Possible? Yes, without consideration. Then what will be the activity? Is it supply or not a supply? As it is without consideration, we need to refer to 7(1)(c), and as per 7(1)(c), they are not related parties, and even principal agent also will not be applicable. Consequently, it is not a supply. When it is not a supply, we don't have to bother about the valuation. So therefore, these are the 8 different combinations which are possible on this amendment. Now any question can be tested in exam. So you should be clear with respect to the treatment. So it is again a very, very important area. If you are not getting question on this, return the paper and come. That much important it is. Trust me, it will come. Many times my intuition didn't go wrong. So even every attempt I was telling this. So this attempt, definitely this area will be tested. So these 8 combinations, any combination can be tested. At least worst come scenario as a MCQ they will be testing it. Okay. So that is about this area, and this is an amendment we have seen. So we have seen so far rule 27 and rule 28. Then next, principal agent transactions. And here in this regard, one more point also. So that, sir, what if director is giving guarantee to company? So will it come under RCM? I am telling the value itself is nil. There is no GST at all. When there is no GST at all, why RCM, FCM will be applicable? So when RCM will be applicable, first there should be a value and there should be a GST, then only RCM will be applicable. Moreover, here RCM will not be applicable. Why? Because there is another amendment which is there in RCM which says that one circular has been given. So whether director who is providing services to the company in his personal capacity, generally director service to company will come under RCM, but what if the director is providing service to the company in his personal capacity? For example, director is having an immobile property, commercial property which he is giving on rent. So now in that case, will it come under RCM or FCM only? FCM only, it will not come under RCM. Generally, director service to company comes under RCM. If it is director service, if the director is acting in a personal capacity, in his personal capacity, that will never come under RCM, it will be FCM only. And that discussion is not at all applicable here, because here first of all the value will be taken as nil and there is no GST liability. Rule 29 talks about principal agent transactions. In case of principal agent transactions, Rule 29 is applicable only in case of goods, not in case of services. Rule 27 is applicable for both goods and services, 28 is applicable for both goods and services, but this 29 is applicable only in case of goods. What should be taken? In the third point is missing. So in the second situation, second point gone. In the third situation, third point is gone. So what should be taken? OMV, if not available, cost plus 10%. But for this OMV, they are asking us to compare with 90% of the resale price. So we need to take open market value or 90% of the resale price at the option of the supplier. Otherwise, then cost plus 10% will be taken. And see these notes. Suppose if any of these is not possible, so Rule 31 will be applicable, and Rule 30 cost means what we have seen. So in such case, that is when open market value is deemed to be transaction value, when the recipient is eligible for full ITC, any value declared in the invoice will be deemed to be the open market value. Means 1 rupee invoice also can be raised, yes. 1 rupee invoice also can be raised in that case. Invoice can be generated for any value, even 1 rupee is considered as value. Then in case of services, Rule 30 will not be applicable. Why? Because Rule 30 talks about cost plus 10%. So cost of providing the services is difficult to ascertain. So therefore, in case of services, we can skip Rule 30 and directly go to Rule 31, that is residual value. And this is the difference between OMV and LKQ. So here we have completed Rule 27, 28, 29, 30 and 31. So these are the 5 rules that are connected in this. Now we are looking into Rule 31A. So Rule 31A is applicable in case of specified actionable claims. So there is an amendment in this aspect here, that previously all actionable claims other than lottery, betting and gambling was excluded from supply. But now they modified this to all actionable claims other than specified actionable claims are excluded from supply. So what are these specified actionable claims? So you remember this keyword HC block. So what are these specified actionable claims? The specified actionable claims is HC block. What is that H? H refers to horse racing, and C refers to casinos, and B refers to betting, and L refers to lottery, and O refers to online money gaming, not online gaming, online money gaming, and G refers to gambling. Sir, why online gaming will not come under specified actionable claims? Because online gaming is treated as OIDR services. Due to that reason, it will not be coming under specified actionable claims. So that's treated as service. And these specified actionable claims are treated as goods. All these specified actionable claims are treated as goods. What is the difference between online gaming and online money gaming? Online money gaming means, so generally we deposit some money and with the objective of winning the money, we play the game. That is known as online money gaming. Online gaming means normally we spend money to play the game, but there the objective is not winning the money. So that is not the objective, just playing the game, but we spend the money to play the game. So that is known as online gaming. Like for example, so there's a Sniper 3D or PUBG or Free Fire. So a lot of Call of Duty, these are all some games which people will play and they will spend money to play the games. Even GTA also, GTA Vice City, etc. So these are like where we spend money to play the game, that is online gaming. Whereas online money gaming is like betting platforms like Rummy Circle, Online Rummy or Dream 11. So these are all some websites wherein we spend money to play. Lot of games are there, betting games like Ludo also there. Ludo betting game is there. You can put 100 rupees, you can play Ludo, and if you win you will be getting 400 rupees. So that is called as online money gaming. Betting is involved. So that will come under specified actionable claims, and these are all treated as goods. And what is the rate of GST for this? The rate of GST will be 28% in all these cases. Now, what should be taken as the value in this case? In case of lottery, so there are total 6 specified actionable claims. In that, for lottery, we are discussing the value first. What should be taken as the value? So lottery tickets always assumed to be inclusive of GST, always assumed to be inclusive of GST, and we need to take face value of the lottery ticket or the price notified by the organizing state, whichever is higher, into 100 by 128 will be value, GST will be 28 by 128, always inclusive only, and we will never calculate in case of lottery on exclusive basis. And face value of the ticket means that price that is printed on the ticket. Price notified by the organizing state means, so sometimes the price may be lesser than the face value of the ticket. So if the demand is less, so they will try to reduce the price of the ticket. If the demand is high, they will increase the price of the ticket, who the organizing state. So therefore, whichever is higher will be taken, into 28 by 128 will be GST, into 100 by 128 will be taken as a value. That is with respect to supply of lottery, and always inclusive basis only. Okay. And here rate of GST, so this 28% is the rate of GST, this 12% is not applicable. GST rate is 28% and always assumed to be inclusive of GST. Always GST computed on inclusive basis. Computed on inclusive basis. Then, in case of specified actionable claim related to betting, gambling and horse racing, for three cases. So, horse racing, betting and gambling. For these 3 cases, they are telling 100% of the face value of the bet or the amount paid to the totalizer. For example, there is a horse racing, 10 horses are there and people will randomly place bets on different horses, but only one horse will win. Now, all the horses people have placed the bet now, that is called as a total bet value, not the people who place bet on the winning horse, all the horses. So whether you are winning or losing, government will always be winning. So therefore the total bet value will be taken as a value for payment of GST. You understood? Means even on losing horse also people will place a bet. So that amount also GST will be payable. So the total bet value or the total amount collected in the bet. And here whether it will be computed on inclusive basis or exclusive basis, that depends. This they are not telling, it will be always on inclusive basis. So you go by the question. If the question says inclusive, you take inclusive. If the question says exclusive, you take exclusive. But here we don't have any mandatory provision like it should be computed on inclusive basis. So in case of lottery ticket, what should be taken as a value? Come on. And this valuation is given in Rule 31A, B, C. Rule 31A, Rule 31B and Rule 31C. Previously Rule 31A was only there. Now they have added Rule 31B and Rule 31C. So first, in case of lottery, what should be taken as a value? Face value of the ticket or price notified by the organizing state, whichever is higher. And it should be always computed on an inclusive basis. Number 2, in case of betting, gambling and horse racing, these 3 cases, what should be taken as a value? So 100% of the face value, like 100% of the amount collected. So it is like, so total amount collected by the totalizer or organizer, that should be taken as a value, not the commission, total amount collected. Then next we have Rule 31B and 31C. 31B is in case of online money gaming and 31C is in case of casinos. Okay. So in case of online money gaming, sir, what about online gaming? For online gaming also we can apply Rule 31B. So, but online gaming will not come under specified actionable claims. Online gaming will come under which category? OIDR services. But online money gaming will come under specified actionable claims. But when it comes to valuation, the valuation will be common for both online gaming as well as online money gaming. And 31C is in case of supply of actionable claims in casinos. First we will see online gaming and online money gaming, what should be taken as a value. The value will be amount paid or payable or deposited with the supplier by way of money or money's worth, including virtual digital asset, by or on behalf of the player. So usually what happens is that when we play the online money gaming, so we will deposit some money to play the game. So either it can be money or it can be virtual digital assets like cryptocurrency. Using cryptocurrency also we can place the bet. So this money deposited will be taken as the value. For example, so you have downloaded one Rummy app or some betting app, and you started playing. First you need to deposit money. Say you deposited 10,000 rupees, and this 10,000 rupees will be chargeable to GST. 10,000 rupees should be taken as the value. Now when you play the game, say for example 6,000 rupees you have spent for playing the game and you lost 6,000 rupees. Now how much is the money left? 4,000 rupees. Now you realize usually people will not get this habit. So what they will do is that let's spend this also so that the 6,000 we can win, because it will become an addiction. Only a great heart will have the guts to withdraw the money. Okay. So therefore you realize 6,000 rupees you spend, at least 4,000 rupees you want to save. So therefore 4,000 rupees you have withdrawn, which means how much you placed as bet is only 6,000 rupees, but the GST is payable on 10,000 rupees. If you withdraw 4,000, you will not get any GST refund, which means GST is payable on the amount deposited. If any amount is withdrawn out of that, we will not get any reduction in the value. Is it clear or not? Then suppose 10,000 rupees you have deposited, you paid GST on 10,000 rupees. In that 6,000 rupees you have spent for playing the bets, and you won some bets and you got more money. Say for example you deposited 15,000, now in your account 15,000 is there. You deposited 10, in your account 15,000 is there. That 5,000 rupees is what? Gain. On that gain, are you required to pay any GST? No. Either if you withdraw, no need to pay GST. Even using that 5,000, again you will play the game, then also no need to pay any GST on the winning amount. Okay, only on the amount deposited initially we need to pay. Now see the twist. You are withdrawing that 5,000 rupees. Again you are putting that 5,000 rupees to play the game. Now it will be considered as a new deposit. Again on that GST will be payable. So without withdrawing, if you use it for playing the game, on that there won't be any GST. The moment it is withdrawn and again deposited, it will account for new deposit and again new GST will be attracted. So see this. Value of supply will be, remember, amount deposited. Value of supply is what? Amount deposited. That amount can be in the form of money, or it can be in the form of money's worth, or it can be in the form of virtual digital asset. Anyway it can be. So sometimes what will happen, some betting platforms and all, they will not allow you to deposit the money. So the moment you want to play the game, so they will be giving you some mobile numbers. To that mobile numbers, you need to do GPay. The moment you make GPay to that mobile number, so in your account, they will be giving some tokens or coins. So these tokens or coins or points, etc. So is money's worth. So you did not deposit money, but you got some tokens or points. How it is that it is money's worth? Sometimes without attracting any GST, people will try to play the games or betting using the cryptocurrency like Bitcoins or Ethereum coins or Doge coins or Raven coins, etc. Even those coins also will be considered as money's worth only, and on that GST will be payable. That is this money deposited or amount deposited. Now see this point, any amount returned or refunded by the supplier to the player, including amount paid or deposited with the supplier, which is not used by the player, shall not be deducted from the value of supply. So 10,000 rupees we deposited, that's the example I gave you. So 10,000 deposited. For this first point, what is the example I gave you? 10,000 deposited, 10,000 deposited, 6,000 used for playing, and 4,000 withdrawn, 4,000 withdrawn. Now GST payable on 6,000 or 10,000? 10,000. So this withdrawn 4,000 rupees withdrawn will not be reduced. So whatever money that is withdrawn which is not used by the player shall not be deductible from the value of supply. Okay. And next, second, any winning amount which is used by the player without withdrawing shall not be considered as the amount paid to or deposited with the supplier. What is that? Say this, 10,000 deposited and used for playing, and one 15,000, okay, which in turn is used for playing, So now GST payable on 10,000 rupees. Any winning amount which is used by the player without withdrawing shall not be considered as the amount paid to or deposited with the supplier. Suppose in this case 10,000 deposited and used for playing and won 15,000, 5,000 withdrawn and again deposited for playing. Now what will be taken as the value? So GST will be payable on 15,000. So simply remember, whatever is the money that you are depositing, on the deposit there will be GST, okay. And one friend has given super nice point. So GST on deposits and income tax on withdrawals, correct? Of course. So when you deposit you need to pay GST, when you withdraw you need to pay income tax, because it comes under gains, betting, etc. Correct. Then so, but it's not on the withdrawal literally, it is on whatever gain that you are getting, on that you need to pay. So this is about online money gaming, whereas casino also same point, no change. For casinos also same story, but only difference is what? In casinos you will not directly deposit the money, you will spend money to buy the coins, chips. In casino there will be like something called as chips, like green color, red color, yellow color chips and all will be there. So to buy these chips we will be spending money. So that money spent for purchasing of chips will be treated as the value. And suppose we win the money, we win the chips and we redeem it. At the time whether we get any reduction in the value? No. So same story, everything same. Only difference is what? In online money gaming we deposit and here we spend money to buy the chips. Say this. Value of supply will be amount paid or payable for purchase of token, chips or coins or tickets for use in the casino by or on behalf of the player, and these points are common in this case. So again this is another area which you can definitely expect a question, at least a MCQ on this. So MCQ, at least a 2 marks MCQ they will be testing on this specified actionable claim, what should be taken as the value. Then rule 32 we are moving on. So this rule 32 is applicable in case of 5 specified transactions. Rule 32 is a optional valuation. Either we can follow the transaction value or we can follow the value as per rule 32. What are the 5 cases where rule 32 is applicable? Number 1, foreign exchange transactions including money changing. Number 2, air travel agent. Number 3, life insurance business. And number 4, second hand dealer in goods. And number 5, vouchers, coupons, etc. So these 5 cases only rule 32 will be applicable. Again remember, rule 32 is a optional valuation, which means that either we can follow transaction value or we can follow the value as per rule 32. So value of supply in special situations, either a transaction value or value under this rule at the option of supplier. For each supply, with respect to each invoice we can decide. The first one is foreign exchange transactions including money changing, means basically here we will exchange one currency to another currency, and in that again we have 2 options. Rule 32 itself is an option. In that rule 32 again we have 2 options. Option 1, rule 32 2A, what does it says? Check whether one of the currency exchange involves Indian rupee and RBI reference rate is available for that currency on that day. Then either bid rate or ask rate and the RBI reference rate into units of currency will be taken as a value. Say for example, there is a quote which is available, rupee per dollar, that is 82 and 85. So this is the quote, and in this case what happens is that we are exchanging $10,000 for Indian rupees. Now RBI reference rate and RBI reference rate for that day is 83.5 per dollar, rupees 83.5 per dollar. What will be taken as the value? Value under rule 32 sub rule 2A. A refers to first option. We need to take, so either bid rate or ask rate, depends. Which rate should be taken? Here bid rate should be taken because we are exchanging $10,000. When we are exchanging $10,000, bank is buying $10,000. So therefore the relevant rate will be bid rate 82. And what is the RBI reference rate? 83.5. So the difference will be 1.5. On that 1.5 into units of currency. How many units of currency? 10,000. So that will be equals to 1.5 into 10,000. 15,000 rupees will be taken as the value. So when one of the currency exchange involves Indian rupee and RBI reference rate is available for that day, we need to take either bid or ask depending upon the transaction and the RBI reference rate. The difference should be taken into units of currency. This will be taken as the value under rule 32.2a. Suppose in the same case, what will be taken as value under rule 32.2b? Another option. Rule 32.2b is like a slab rate model. In this slab rate model, what will happen is that if the gross amount does not exceed 1 lakh, then 1% of the gross amount or 250, whichever is higher, will be taken. If the gross amount exceed 1 lakh but does not exceed 10 lakhs, 1000 rupees plus 0.5% of the gross amount exceeding 1 lakh. If the gross amount exceed 10 lakhs, 5,500 plus 0.1% of the gross amount exceeding 10 lakhs subject to maximum 60,000. You need to remember these percentages, 1%, 0.5% and 0.1%. Say for example, if the gross amount exchange is 60,000 rupees, 60,000 rupees into 1%, that is 600 rupees or 250, because 60,000 will come in the first slab. So 60,000 into 1%, 600. 600 or 250, whichever is higher, will be 600. Suppose if the gross amount exchange is 20,000, still it is in the first slab. 20,000 into 1%, 200, 200 or 250, whichever is higher, will be taken as 250. Suppose if the gross amount exchange is exactly 1 lakh, 1 lakh into 1% will be 1000, 1000 or 250, whichever is higher, will be 1000. So when you are moving into the second slab, the minimum amount will be 1000. Say for example 3 lakhs. 3 lakhs means you are coming into the second slab. For the first 1 lakh it will be 1000 and remaining 2 lakhs. 2 lakhs into 0.5% will be 1000. So 1000 plus 1000, 2000 rupees will be taken as a value. What if it is 9 lakhs? So again second slab. First 1 lakh 1000, remaining 8 lakhs. 8 lakhs into 0.5%. So that will be 4000. 4000 plus 1000 will be 5000. What if it is exactly 10 lakhs? Still second slab. First 1 lakh it will be 1000, remaining 9 lakhs. 9 lakhs into 0.5% will be 4500. 4500 plus 1000 will be 5500. So the moment you are moving into the third slab, it will be 5500 rupees plus. So there will be extra amount into 0.1%. Say for example, if it is 80 lakhs. 80 lakhs means you are in the third slab. First 10 lakhs it will be 5500, remaining 70 lakhs. 70 lakhs into 0.1%. So 70 lakhs into 0.1% will be 7000. 7000 plus 5500. So that will be 7000 plus 5500 is what? 12,500 will be taken as the value. Now what if it is like 800 lakhs? 800 lakhs, first 10 lakhs will be 5500, remaining 790 lakhs into 0.1, 79,000, but the maximum amount is only 60,000. That will be taken as a value. Now applying this here in this case, what is the gross amount? Suppose if you are determining the value under rule 32 sub rule 2b, what will be taken as a value? Take the gross amount exchanged in Indian rupees. What is the gross amount exchanged in Indian rupees? $10,000 into 82 rupees. So gross amount in Indian rupees, gross amount is $10,000 into 82 rupees per dollar. That will be how much? 8 lakh? 8 lakh 20,000. 8 lakh 20,000 means that comes under which slab? Second slab. For the second slab, what should be taken? first 1000, minimum 1000 rupees plus what is the extra amount? 7,20,000. 7,20,000 into 0.5%. So please do this. 7,20,000 into 0.5% plus 1000. 4,600 will be taken as a value. So this is how we need to arrive at the answer. Then second, what if RBI reference rate is not available? If in above case, RBI reference rate not available. So then what we will do? Simple, we will be taking gross amount exchanged in Indian rupees into 1%. Say this. One of the currency exchange involves Indian rupee and RBI reference rate not available for that currency on that day. So gross amount in Indian rupees into 1%. So this is in case of rule 32(2)(a). So the value under rule 32(2)(a), value under rule 32(2)(a) is gross amount into 1%. What is the gross amount? 8,20,000. 8,20,000 into 1%, that will be 8,200 will be taken as value. Whereas what will be taken as value under rule 32(2)(b), no change. So whether RBI reference rate available or not available, this will be always same. 1000 rupees plus 7,20,000 into 0.5%, that will be coming to 4,600. Then next we will be taking number 3. What if both the currencies exchange involves in foreign currency? So when both the currencies exchange involves foreign currency, convert both the currencies into Indian rupees using RBI reference rate into 1%, whichever is lower will be taken. Say for example, we have dollar per pound, so is 1.5 and 1.8. We are exchanging, so 6,000 pounds for dollars. Okay, RBI reference rate for rupee per dollar is 85 and rupee per pound is 140. Then what will be taken as the value in this case as per 32(2)(a), value under rule 32. Value under rule 32(2)(a) will be gross amount exchanged in Indian rupees using RBI reference rate into 1%. So lower of what? So take the sold currency, that is 6,000 pounds. 6,000 pounds into RBI reference rate, that is 140 per pound into 1%. So 6,000 into 140 into 1%. How much that will come to? 8,400. Now 6,000 pounds, 1.5 rupees means how many dollars? So dollars wise, if you see 6,000 pounds, if you take 1.5, you will be getting $7,500. Now that $7,500 into exchange rate 85 rupees per dollar into 1%. So how much that comes to? 9,000. 6,000 into 1.5, 9,000. 9,000 into 85 into 1%. 7,650, whichever is lower, therefore 7,650 will be taken as the value. So therefore the purchased currency as well as sold currency, convert both the currencies into rupees using RBI reference rate into 1%, whichever is lower will be taken as the value in this case. And in this case, whether 32(2)(b) is possible? No. Value under rule 32(2)(b) not possible. Why 32(2)(b) not possible? Because both the currencies are exchanged which are foreign currencies, so we cannot determine the value in case of rule 32(2)(b). So this is about 32(2)(a) and 32(2)(b). Now in these two options, which option I should choose? I can choose any option, but that option chosen in the beginning of the financial year will be applicable throughout the financial year. But sir, you said invoice wise we can choose. Yes, invoice wise we can choose transaction value and value under rule 32. But the moment you go into rule 32, in rule 32, we have two options that we need to decide in the beginning of the financial year that will be applicable throughout the financial year. Option to be decided in the beginning of the financial year, which shall be applicable throughout the financial year, and what will be taken as a transaction value. Currency conversion fee or currency markup fee. So whatever is the actual consideration that the bank or forex dealer is collecting from us for doing the currency exchange, so that markup fee or currency conversion fee will be taken as a transaction value. We can go by transaction value also. Wherever rule 32 is not possible, we can determine the transaction value. This is about 32 sub rule 2. Then 32 sub rule 3 is in case of air travel agent services. In case of air travel agent services, so air travel agent is required to pay GST on 5% of the base fare in case of domestic bookings and 10% of base fare in case of international bookings. Base fare will be the basic amount that will be there in the ticket. In air ticket, there are three components: base fare, fuel surcharge, other charges and taxes. In that, the base fare is the first component. On that first component, into 5% in case of domestic bookings, 10% in case of international bookings. Then life insurance business. In life insurance business, so if it is a risk cover policy means term insurance, wherein we will pay the premium. If nothing happens, we will not get anything backwards. So that is called as term insurance. In case of term insurance, entire premium will be income to the insurance company. So therefore, on entire premium, GST will be payable by the insurance company. Whereas in case of reinvestment policy, in reinvestment policy, whatever premium that we pay will not go into the hands of the insurance company. In that, they will deposit a percentage in the stock market or some debt instruments, etc. So the remaining amount will be taken as value on which they will pay GST. So premium collected minus amount allocated for investment, but condition, important condition is that the amount allocated for investment should be communicated to the policyholder at the time of collection of the premium. So where the amount allocated for investment is intimated to the policyholder, gross premium minus amount allocated for investment. Then single premium annuity policy, there is only one premium that is involved. Rather than paying every year, a single premium will be paid. So in that case, 10% of that single premium will be taken as the value. So risk cover policy, entire premium collected. Single premium annuity policy, 10% of the single premium. Reinvestment policy, amount collected, premium collected minus amount allocated for investment. If amount allocated for investment is not communicated to policyholders, then what it will be? It will be like a normal life insurance policies. In case of normal life insurance policies, so what should be taken as a value? 25% of premium in first year and 12.5% of premium of subsequent years. So every year insurance company will have first year premium and subsequent year premium. So this year, whatever new policies that they have given, premium collected is first year premium. Those who already took the policies in the previous years, they will pay premium this year, that is on a subsequent year premium. So first year premium into 25%, subsequent year premium into 12.5%, that will be taken as a value in this case. Then next one, rule 32 sub rule 5, buying and selling of second hand goods. In case there is a person, a dealer, who is engaged in purchase of second hand goods and sale of second hand goods, so then only this will be applicable. My purchase also used goods, my sale also used goods. Then I need to take the margin scheme. What is margin scheme? Sale price minus purchase price will be taken as the margin scheme, and on the difference only GST will be payable. For example, I am purchasing a used car for 1,50,000. I am selling this used car for 2,50,000. Now what is the margin here? 1 lakh. So I need to pay GST only on 1 lakh. Sale price 2,50,000, purchase price 1,50,000. So 2,50,000 minus 1,50,000, on 1 lakh only GST will be payable. So value equals to selling price minus purchase price, that is margin scheme. What if it is negative? For example, I am purchasing a car for 2,50,000 and I am selling it for 2 lakhs. So 50,000 rupees is loss for me. Whether I need to pay any GST? No. As the margin is negative, so you don't have to pay any GST, value will not be there. ITC should not be availed on the purchase. So I should not avail any ITC. If the ITC is availed, margin scheme is not possible. Means at the time of purchase of the car, I should not have taken any ITC. So if ITC availed, anyhow I will pay GST effectively on margin only. So due to that reason, this margin scheme is not applicable. Even though I gave you example of car, but this is applicable in case of all second hand goods. And then suppose in case where we do the repossession and sale, we are a finance company. We would have given finance with respect to an asset, motor vehicles or assets, etc. Now the person has not repaid EMIs. When he is not paying the EMIs, as a financier we will do repossession of that asset, and this repossessed asset we will sell. At the time of repossession, whether this asset is a new asset or a used asset, and we are selling that used asset to recover our finance amount. So which means we will also come under the category of second hand dealers. So in this case, what should be taken as the sale price, the price at which that repossessed asset is sold. But what will be taken as a purchase price? We are not buying it, we took it as a repossession, then what should be taken as a value? So we need to give a depreciation. How to calculate the depreciation? 5% for every quarter or part thereof from the date it is purchased, the asset is purchased, till the time it is sold. So repossessed and sold. So we need to count that. So purchase price is original purchase price to the defaulting borrower, who is an unregistered defaulting borrower, minus 5% for every quarter or part thereof from the date of purchase till the date of disposal of that repossessed asset. So that should be taken as a value in this case. Then in case of coupons or vouchers, so the value will be money value of supplies redeemable against such voucher or coupon. So for example, we have got a voucher. That voucher, if you redeem, you will be getting goods worth rupees 1000. Then what will be taken as a value of this voucher? 1000 rupees will be taken as a value of this voucher. Money value of supplies redeemable against such voucher, that will be taken. Then there are some notified service between distinct persons without consideration. The value should be taken as nil, but the services are yet to be notified for this purpose. So this rule is not applicable at present. So you don't have to remember this. Then next point is related to TCS. Generally, as per 15(2)(a), all taxes, duties and cess by whatever name called other than GST should be included in the value. Then whether the TCS which is collected by the supplier from the recipient under Income Tax Act should also be included in the value? No, because TCS is not a tax on income. TCS is a tax on expenditure. So it is an interim levy, not having the character of tax. For example, I am a car dealer. I am selling a car to you, and apart from the price of the car, I am also collecting TCS at 1% from you, plus GST also I am collecting. While computing GST, whether this 1% TCS should be included in the value of the car? No, because this is basically your expenditure. On your expenditure, I am collecting this 1%, which is an interim levy, and I will deposit it so that you have to show the source of income to the income tax department, and you need to pay tax. Suppose if you don't have any income tax, that 1% you will fully get it as a refund. So due to that reason, it is not having the character of tax, it is basically interim levy. So CBIC Circular says that this TCS collected by the supplier from the recipient under Income Tax Act should not be included in the value. That is this. Any taxes, duties and cess shall be included in the value, but TCS is not includable in value as it is an interim levy but not having character of tax due to that reason. Then next, usually in case of banking companies, financial institutions, they will be appointing business facilitators and business correspondents. These people are basically like agents. So whichever work the bank has to do, that work will be done by these business facilitators and correspondents. So they will be collecting some service charges. So these service charges they collect and they remit to the bank. So on these service charges, they are not required to pay GST. The GST is payable by the bank. Then what will be included in the value of their supply? It is only the commission. So they get a commission, that will only be their value of supply. See this, there is a banking company and there is a business correspondent or business facilitator and there is a customer. Now business correspondent or facilitator will provide the service on behalf of bank to the customer, and they will be collecting service charges from the customer and they will remit that service charges to the banking company. For doing this activity, so they will get a commission. Now what will be taken as value of supply in the hands of BC and BF? It is commission. What will be taken as value of supply in the hands of the banking company? It is the service charges. Then next, we have rule 34, which talks about relevant date for determination of exchange rate in case when the transaction is in foreign currency. I mean sale of goods or purchase of goods or supply of services or any import of services. We need to pay GST on that. Now the invoice is in foreign currency. Now for me, I have to pay GST in Indian rupees. So I have to convert the invoice which is in foreign currency into Indian rupees. For that, what exchange rate should be taken? In case of goods, I need to take CBIC notified exchange rate. In case of services, GAAP rate. Usually GAAP rate is average of the buying rate and the selling rate. So that will be taken. So in case of goods, CBIC rate. In case of services, GAAP rate. Prevailing on which date? Prevailing on the time of supply for this transaction. For every transaction, there will be a time of supply. You see the time of supply for the transaction. On that date, whatever is the CBIC rate or GAAP rate you take and multiply, you will get the value in Indian rupees. On that, you pay the GST. Suppose if I have taken 85 rupees per dollar and I paid the GST on import of goods, and actually, so I am paying 86 rupees per dollar. 85 is the CBIC notified rate, but at the time when I made the remittance, it is 86 rupees per dollar. Now on that extra 1 rupee, again should I compute the GST? Not required. So ignore the foreign exchange gain or loss. So exchange gain or loss shall be ignored for the purpose of GST. So these are the various points related to value of supply. We completed this. And there are few queries. So let's see. Sir, what will be the value of a second hand car if ITC is available? If ITC is available, the value will be full value, sale value. Don't go for margin scheme. Full sale price will be taken as the value. In rule 32 sub rule 5, quarter means calendar quarter. Everywhere in GST and customs, yesterday itself I told you that we need to take only calendar quarter only. It should not be like, so January 15th to April 15th if you see, actually it is 3 months only. But it should be taken as 2 quarters. Why it should be taken as 2 quarters? Because calendar quarter logic we should apply. So everywhere it will be, wherever quarter comes in GST and customs, it will be calendar quarter only. Okay. Then next. Gaming agency is a supplier. So supplier of online money gaming has to pay GST. Yes. So definitely supplier only will be paying GST even if the supplier is located outside India. So that point comes in section 14A, place of supply. There I will discuss with you. So online money gaming supplier is only liable to pay GST. Online money gaming is not covered under RCM. It is covered under FCM. Always supplier only will pay. Sir, what if the supplier is located outside India? Then also that supplier only will be paying GST. Then, sir, the gaming agency is only has to pay GST. Yes, correct. Then what about the bonus given Rummy Circle into the user account? See, that bonus is basically not coming here because bonus will be coming under an incremental amount only, like a winning amount only they will be giving. So on winning amount there is no GST now, only on the amount deposited there will be GST. So how much amount you have deposited, that only should be taken into that user account. Yes, fine. Then we will move on to the next area, that is composition scheme. So please take that. Page 98, segment 10. Section 10 deals with composition scheme. So in this composition scheme only some minor amendments are there, and composition scheme under section 10 is applicable. So 2 composition schemes are there, 10.1 and 10.2a. 10.1 composition scheme is applicable for manufacturer, trader and supplier of food service provider. But 10.2a composition scheme is applicable to any person, manufacturer, trader and any service provider. Now 10.1 composition scheme is applicable if my aggregate turnover during previous financial year does not exceed 1.5 crores. Whereas in case of 8 states, it will be taken as 75 lakhs. So what are the 8 special category states for which 75 lakhs will be taken? You can see that MMTN, USAM, Manipur, Mizoram, Tripura, Nagaland. MMTN, Manipur, Mizoram, Tripura, Nagaland. U for Uttarakhand, S for Sikkim, A for Arunachal Pradesh, not Assam, and M for Meghalaya. So these are the 8 states for which the limit will be 75 lakhs. For other state, the limit will be 1.5 crores. So I am talking about 10.1 composition scheme. I am a registered person. My aggregate turnover during the previous year does not exceed 1.5 crores or 75 lakhs in the 8 states. Then current year I can opt for composition scheme. Now, what if I am having business in 2 states? One in Tamil Nadu, another in Nagaland. Tamil Nadu, the applicable limit will be 1.5 crores. Nagaland, it will be 75 lakhs because Nagaland will come in the list of that 8 states. Then what should be taken as my effective limit so that if it crosses current year, I cannot go for composition scheme, 75 lakhs. Because in composition scheme, you remember one point, all in, all out. If one registration is ineligible for composition scheme, all other registrations of the person is ineligible for composition scheme. When you see Tamil Nadu registration, Tamil Nadu I can go for composition scheme because aggregate turnover is 1.5 crores. Whereas in Nagaland, I cannot go for composition scheme because aggregate turnover will be only 75 lakhs. As I am unable to go for composition scheme in Nagaland, so consequently I will not be able to go for composition scheme in case of Tamil Nadu also. So therefore the limit will be taken as 75 lakhs. The lower limit only will be taken. If in few states we are under 150 lakhs and few states it is 75 lakhs, 75 lakhs only should be taken as the limit. Then next point is that to whom it is applicable. So first, when applicable. When applicable, aggregate turnover during previous year does not exceed 1.5 crores or 75 lakhs in case of 8 states. What are those 8 states? MMTN, USAM, Manipur, Mizoram, Tripura, Nagaland, Uttarakhand, Sikkim, Arunachal Pradesh and Meghalaya. And to whom it will be applicable? Manufacturer, trader, supply of food service provider. Only 3. Manufacturer, trader, supply of food service provider. But we have a relaxation here. What is that relaxation? We can provide services up to 10% of turnover during previous year or 5 lakhs, whichever is higher. That is, I am a manufacturer, I am a trader, I am a supplier of food service provider. I can also provide any other services. Up to what limit? There is a limit. Being a manufacturer, being a trader, being a supplier of food service provider, so I can provide services, but I should ensure that the turnover for these services, being a manufacturer, I have an outer limit of 1.5 crores or 75 lakhs, but I can provide services. To what extent I can provide the services? 10% of turnover during previous year. Say previous year my turnover is 120 lakhs. 120 lakhs into 10% is 12 lakhs. 12 lakhs or 5 lakhs, whichever is higher. So I can provide services only 12 lakhs during the current year. So what services? Any services other than supply of food. Supply of food, there is no restriction. Being a manufacturer, being a trader, being a supplier of food service provider, no restriction. But other services I can provide only 10% of turnover during previous year or 5 lakhs, whichever is higher. Why 5 lakhs is given here? Because previous year, this is the first year I am starting the business. My previous year turnover is 0 and 0 into 10% will become 0. So that's why minimum 5 lakhs services can be provided. And what is the benefit of reduced rates? Now, if I am a manufacturer, the applicable rate for me is 0.5% CGST and 0.5% SGST on what turnover? Taxable turnover or total turnover? Total turnover. Whereas if I am a service provider engaged in supply of food service provider, then what is the rate of GST? 5%, that is 2.5% CGST, 2.5% SGST on what turnover? Again, total turnover. Suppose if I am a trader or provider of services up to 10% limit. In these two cases, I am a trader or limit up to which service is provided is 10% na, the 10% services, the rate will be same. 0.5% CGST, 0.5% SGST on what turnover? Taxable turnover. So 1%, that is 0.5 CGST, 0.5 SGST on taxable turnover in case of trader or service provider up to the limit allowed. This is the benefit of reduced rates. And current year up to what limit I will be into composition scheme? Up to 1.5 crores or 75 lakhs I will be in composition scheme. After crossing that, I will be going into normal scheme. And what is the situation in case of 10-2A? So 10-2A applicable when? If my aggregate turnover during previous year does not exceed 50 lakhs. For 10-2A the limit is 50 lakhs. And to whom 10-2A is applicable? Manufacturer, trader and any service provider. So I can be into anything. So basically if 10-1 is not applicable, then only people will go for 10-2A, because for a manufacturer 10-1 is only preferable because the limit is 150 lakhs or 75 lakhs, whereas 10-2A it is only 50 lakhs. So for manufacturer, trader and supplier of food service provider, 10-1 is only best. So 10-2A is basically for a service provider other than supplier of food, they will go for 10-2A. In 10-2A, the limit of 10% is not applicable. They can provide any amount of services, but the overall limit, outer limit should be 50 lakhs. What if current year we cross 50 lakhs? Means we will go out of the composition scheme and we will move into normal scheme. And what is the benefit of reduced rates? This is 3% CGST, 3% SGST on total turnover. Okay. So rate wise also for 10-2A it is high than 10-1. And next, is there any difference in the conditions? Yes. So people who are making certain supplies during the current year cannot go for composition scheme in case of 10-1. So that list of conditions is S9 RCM that you can see in the page 100, third page. So S9 RCM. So persons during the current year, all these conditions you should see for the current year. Previous year is not applicable. Current year, the moment you opt for composition scheme, you should not make these supplies. What is that? Yes. This is about 10-1. Yes is with respect to service providers other than supply of food and beyond 10% limit. So if I am a service provider providing service other than supply of food or beyond 10% limit, I cannot continue in composition scheme 10(1) na. So that is a restriction. Then N for non-resident taxable person. So already we know non-resident taxable person. I asked you to remember cricketers who are coming from outside India to India, not having any fixed place of business. So they are NRTP. Then I, interstate supplier of goods or services. So if I am under composition scheme, I should not make interstate supply of goods or services. If I make, I am disqualified from the composition scheme. And N, non-taxable supplies. So what are non-taxable supplies? Alcoholic liquor for human consumption and petroleum products. If I make those supplies, I am disqualified from the composition scheme. Then another point is E, supplier of services through e-commerce operator, that is the amendment. Previously, if you are supplying goods or services through e-commerce operator, you cannot go for composition scheme. But now they have amended this. Only supplier of services through e-commerce operator cannot go for composition scheme. Sir, supplier of goods through e-commerce operator can go for composition scheme? Yes. For example, I am a trader. I am selling goods through e-commerce operator. Can I go for composition scheme? Yes. But remember, the other condition should be satisfied. What is that? You should not make interstate supplies. Means you can make only intra-state supplies. See, through e-commerce operator you make supplies, but ensure that you are not making inter, because through e-commerce operator if you make inter, the other condition is breached, because of which you will be disqualified from the composition scheme. Means you should make only supplies within the state. So that's the reason why many times in Meesho, etc. and all, when you enter the pin code, they will tell this product cannot be shipped to your location, because that supplier might be under composition scheme. So he can make supplies through e-commerce operator, but they should not make interstate supplies. That is a restriction. So services, no, services not possible. For example, restaurant which is supplying food through Swiggy, Zomato, etc. Can they go for composition scheme? No. Being a restaurant, they can go for composition scheme. But the moment they make services through e-commerce operator, it is not possible. Then R for RCM under 9 subsection 4. You remember this easily. Yes, 9 RCM. So section 9 is RCM. Usually section 9 is RCM. So yes, 9 RCM. Yes for services other than supply of food or beyond 10% limit. 9. N for non-resident taxable person. I for interstate supply of goods or services. Another N, non-taxable supplies. E, supply of services through e-commerce operator. R, RCM. In that RCM, 9 subsection 4 RCM. To whom 9 subsection 4 RCM is applicable? To a promoter or builder who is having some inward supply from a unregistered person. So they need to pay GST under RCM. If they have not paid any GST under RCM 9(4), then they cannot go for composition scheme. Even otherwise they cannot go for composition scheme, because promoter or builder, by selling one flat itself, they will be making a huge amount. So therefore this point is practically irrelevant. Then C for casual taxable person. Who is a casual taxable person? A person who is coming from other state to this state, who is not having any fixed place of business in this state, is called as a casual taxable person. So basically actors who come from other state to act in these movies, so of this state, will be coming under CTP. So like NRTP outside India to India, CTP is from other state to this state, and both case they don't have any fixed place of business in this state. And casual taxable person also cannot go for composition scheme. Then M for manufacture of certain notified goods. What are those notified goods? Ice cream, edible ice, pan masala, tobacco and tobacco products, aerated waters, bricks and roofing tiles. So these are the only goods. So what are those notified goods? First, related to ice cream, edible ice. Then tobacco products, pan masala, tobacco products. Then aerated waters, beverage industry. Then bricks and roofing tiles. Manufacturer of these goods only cannot go for composition scheme, but a trader of these goods can go for composition scheme. Yes. So this is about S9 RCM. Whereas in case of 10(2)A also this S9 RCM is applicable, but in that S point we don't have. Why we don't have? Because any service provider can go for 10(2)A na. So difference in conditions, if you see, here it is S9 RCM, here it is only 9 RCM. Then next one, what is the meaning of aggregate turnover for determining the eligibility for composition scheme? So both cases, these are the only differences between 10.1 and 10.2a, and all other points will be common between 10.1 and 10.2a. So apart from this page, the next page information and all, so will be common. So therefore, first aggregate turnover, in both places we come across aggregate turnover. Here aggregate turnover during previous year should not exceed 1.5 crores, and here aggregate turnover during previous year should not exceed 50 lakhs. So what is that aggregate turnover? Generally the meaning of aggregate turnover is it will include taxable supplies, exempted supplies, non-taxable supplies, zero rated supplies. Usually aggregate turnover will be computed on a all India basis, and aggregate turnover excludes only two things, that is inward supplies covered under RCM, and then taxes, GST, CGST, SGST, UTGST, IGST and compensation cess. This is the general meaning of aggregate turnover for determining the registration, etc. Now, what is the difference between that aggregate turnover definition and aggregate turnover for the purpose of composition scheme? Ditto, same, but except for two differences. Difference number one, interest on loans, advances, deposits, generally part of aggregate turnover, but for composition scheme, interest on loans, advances, deposits should be excluded. And then pre-registration turnover will not be taken generally, that aggregate turnover for composition scheme, pre-registration turnover will be included. So these are the two adjustments you need to remember. So aggregate turnover will be computed on the basis of turnover on an all India basis and will include the value of all taxable supplies, exempt supplies and exports made by all persons with the same permanent account number, but would exclude inward supplies under reverse charge as well as GST. And interest income will not be considered for calculating aggregate turnover as well as turnover in a state or union territory. Now, you can see in the last page I have given the turnovers, various turnovers that we come across. So that I have given in page number 244. You can see that page number 244. So I have given meaning of various turnovers under GST. So there you see what and all. First we have aggregate turnover for determining eligibility for registration. So what will come in this turnover? Taxable supplies will come, exempted supplies will come, non-taxable supplies will come. But inward supplies under RCM, basically turnover means outward supply. So inward supplies under RCM will not come in turnover even though you are paying GST. Then GST, all GSTs you should exclude, it should not come in turnover. Then old indirect taxes, whether old indirect taxes will come in turnover? Yes, only in one place I told you it will not come. Where? For ITC purpose. For ITC purpose, rule 42, rule 43 and section 20, old indirect taxes will not come. But that also I have given here. Say this. So turnover for computing reversal of ITC and distribution of ITC by input service distributor, this old indirect taxes will not come in the turnover. Okay, I gave the comparison over there. Then next, interest on loans, advances, deposits, generally in aggregate turnover it will come, whereas interest on account of delay in receipt of consideration also it will come. And this aggregate turnover for determining eligibility for registration, whether we do it on all India basis or state wise, we do it on all India basis. And whether we will check it for the current year or the previous year, current year. For registration, first we are discussing the general meaning of aggregate turnover. For registration purpose, we will check it for the current year. And whether interstate supplies also will be included in this? Yes. Whether pre-registration turnover will come, that is not applicable because we are determining this aggregate turnover only for the purpose of registration. See, this is the general meaning of aggregate turnover. So what and all you should remember? Taxable supplies, exempted supplies, non-taxable supplies, zero rated supplies, and inward supply under RCM will not come, GST will not come. And so this is the basic meaning of aggregate turnover. Now, from this aggregate turnover for determining the eligibility for registration to aggregate turnover for determining eligibility for composition scheme, you see what are the differences. So this aggregate turnover for composition scheme, we see for the current year or for the previous year? We see it for the previous year. So that's what we studied. If my aggregate turnover during previous year does not exceed 1.5 crores or 75 lakhs, for the current year I can opt for composition scheme. So therefore I need to check this aggregate turnover for previous year. Whereas Usually aggregate turnover will be computed for current year, but for composition scheme purpose, we check it for the previous year. That's the difference. Then another difference you see, generally aggregate turnover includes interest on loans, advances and deposits, but for composition scheme, aggregate turnover do not include interest on loans, advances, deposits. Then pre-registration turnover should be included in the aggregate turnover for composition scheme. Apart from this, is there anything that is changed? No, everything will be same. Okay. Now, you may get a doubt, sir, if you are making non-taxable supplies, you said we cannot go for composition scheme, but we are including in composition scheme aggregate turnover, so non-taxable supplies. That's what I said. So previous year you can have non-taxable supplies, previous year you can have interstate supplies, previous year you can have anything, but current year the moment you go for composition scheme, you should not have any of those S9 RCM. If you have any of those S9 RCM, you are disqualified from the composition scheme. So now, what are the extra points you need to remember from regular meaning of aggregate turnover to aggregate turnover for determining the eligibility for composition scheme? So first, aggregate turnover will be taken for previous year. Then number 2, interest on loans, advances, deposits will not be included, and pre-registration turnover should be included. Remaining points are same. Then next we have turnover for determining 10% limit. What is the difference between aggregate turnover and turnover for determining 10% limit? What is the change? You see this, generally aggregate turnover will be computed on all India basis, but turnover will be computed state wise. It will not be on all India basis, it will be state wise. Then another point is that, so here aggregate turnover, whatever we have seen, everything is same, only this difference, correct? Only this difference. So what is the difference between aggregate turnover and turnover for computing 10% limit? What is the purpose of aggregate turnover? To check whether I am eligible for composition scheme during the current year. What is the purpose of this turnover for 10% limit? Because during the current year I can provide services up to 10% of turnover during previous year or 5 lakhs, whichever is higher. For that purpose we need to know what is the difference between these two. Both are same. Aggregate turnover definition as well as turnover definition, both are same. Only difference is that aggregate turnover will be computed on all India basis, turnover will be computed state wise. How it is going to impact? So it so happens that during the previous year, so we are doing business in 3 states, Tamil Nadu, Karnataka and Kerala, and turnover if you see 60 lakhs, 30 lakhs, 60 lakhs, 30 lakhs and 40 lakhs. So this is the turnover during previous year. So the total turnover if you see 130 lakhs is the total turnover during the previous year. Now during the current year, what is the limit up to which services can be provided? Current year limit for services. Current year limit for services under section 10.1. We are under composition scheme 10.1. So what is the limit up to which services can be provided under 10.1? You take the previous year, so 130 lakhs. 130 lakhs into 10% is what? 13 lakhs or 5 lakhs. Whichever is higher will be 13 lakhs. That is the correct answer. Correct? Wrong answer. So because the 10% should be computed state wise, it should not be taken on all India basis. So 10% of turnover during previous year, it's not 10% of aggregate turnover, 10% of turnover during previous year. So that is 60 lakhs into 10% or 5 lakhs, whichever is higher. So whichever is higher is what? 6 lakhs. That is the service up to which we can provide in Tamil Nadu. Whereas in Karnataka, 30 lakhs into 10%, 3 lakhs or 5 lakhs, whichever is higher. So what is the limit up to which services can be provided? 5 lakhs, not 3 lakhs. Then 40 lakhs into 10%. 40 lakhs into 10% is 4 lakhs or 5 lakhs, whichever is higher. So what is the limit up to which services can be provided? 5 lakhs. Then what is the overall limit up to which services can be provided? 16 lakhs is the limit up to which service can be provided, and this 16 lakhs is divided like 6 lakhs in Tamil Nadu, 5 lakhs in Karnataka and 5 lakhs in Kerala. If you cross 6 lakhs in Tamil Nadu or 5 lakhs in Karnataka or 5 lakhs in Kerala, you are disqualified from the composition scheme in one state. Consequently, you are disqualified from composition scheme in all other states as well. So mainly turnover is state wise. That's how this will be tested. Then next one. So in composition scheme, we come across 3 turnovers. One is aggregate turnover for determining the eligibility, whether you can go for composition scheme or not. Number 2 is turnover for computing 10% limit. The third turnover is turnover for payment of GST under composition scheme. What should be taken in that case? So turnover for payment of GST under composition scheme, whether we pay GST based on current year turnover or previous year turnover? Current year turnover. So we should not see previous year turnover, we should take the current year turnover. The moment you see turnover, turnover will always be state wise, and then pre-registration turnover will be included or excluded. Pre-registration turnover will be excluded. Also, you should not have interstate supplies, because if you have interstate supplies during the current year, you are disqualified from the composition scheme. And even non-taxable supplies you should not have. If you have non-taxable supplies also, you are disqualified from the composition scheme. So that is the difference, and remaining points and all will be same. No change in that, and only difference is what? From regular turnover for 10% limit to turnover for payment of GST under composition scheme. Turnover for computing 10% limit, we take the previous year turnover, but turnover for payment of GST under composition scheme, we need to take the current year turnover. And this S9 RCM should not be there in the current year, means non-taxable supplies, interstate supplies and all should not be there in the current year. And pre-registration turnover, that's the main point. Pre-registration turnover will be included generally for aggregate turnover as well as turnover for computing 10% limit. But for computing tax payable, so this pre-registration turnover will not be included. How that will be connected? Say this. So this is like we have got during the current year. So during the previous year, our turnover is 0 because we have not commenced the business. During the current year only we commence the business. Current year only we commence the business. Okay. And after commencing the business, we crossed a threshold limit of 40 lakhs. We crossed a threshold limit of 40 lakhs. This is the threshold limit for registration. And thereafter, our turnover is somewhere like 180 lakhs. 180 lakhs is our aggregate turnover during current year. Aggregate turnover or turnover during current year is 180 lakhs. Now, this person is a trader. This person is a trader. And what is the GST that will be payable? Now, what is the overall aggregate turnover or turnover? Aggregate turnover or turnover? How much? 180 lakhs. In this 180 lakhs, what is the turnover under composition scheme and normal scheme? Composition scheme is 150 lakhs and normal scheme is 30 lakhs. Now, in this composition scheme, pre-registration turnover you need to exclude. Pre-registration turnover. What is the pre-registration turnover? 40 lakhs. That we need to exclude. Take out the pre-registration turnover. So what is the balance turnover? 110 lakhs. Okay. So on this 110 lakhs, you need to pay GST at 1%. Correct. That is 0.5 CGST, 0.5 SGST. Whereas on this 30 lakhs, we need to pay GST at what rate? Normal rates. Whatever is the normal rates that is applicable, that should be taken. So this is the meaning of pre-registration turnover will be excluded. So first overall turnover you take, divide into 2. What is the turnover under composition scheme? What is the turnover under normal scheme? Whatever is the turnover under composition scheme, you reduce the pre-registration turnover. So remaining turnover will be coming under composition scheme. So that is the meaning of this statement. So these are the 3 turnovers that we come across in composition scheme. One is aggregate turnover for determining the eligibility to opt for composition scheme. Second is turnover for computing 10% limit, and third is turnover for payment of GST under composition scheme. Now, so coming back to the discussion where we started. So this appendix turnover will help you because in many places, it will be useful. Then, so what is the meaning of aggregate turnover? You understood. Then next point, person opting for composition scheme can provide service up to 10% of turnover. This point also we have seen. And 10% of turnover during previous year or 5 lakhs, whichever is higher. And while determining this, interest on loans, advances, deposits will not be taken. Yes, we have seen even for aggregate turnover, 3 turnovers, interest on loans, advances, deposits will not be taken. If you want, you check the appendix. So aggregate turnover definition also, we will not take interest on loans, advances, deposits. Then turnover for computing. Look into book, don't look in my face. When I ask you to look, turn your pages, little bit effort you put. So you are studying, you are not sitting here to watch a movie. You are sitting here to study. Okay, turn the pages, see the last page. So you can see their aggregate turnover. So interest on loans, advances, deposits will not be included. Even for 10% limit also, interest on loans, advances, deposits will not be included. Even for payment of GST under composition scheme, interest on loans, advances, deposits not included. So this is a common point between these 3 turnovers, correct? So therefore, for computing the 10% limit also, interest will not be included. Then the tax rate applicable for these services, that is, sir, during the current year, I am providing some service up to 10% limit. So for these services, what is the rate applicable? I told you, the rate applicable to a trader. What is the rate applicable to a trader? 0.5 CGST, 0.5 SGST on taxable turnover. Then other procedural provisions. So how to opt for composition scheme? If I am already a registered person, I need to make application. So for composition scheme, so in CMP2, when I can go for composition scheme before commencement of the financial year, during the year, that is mid of the year, I cannot go for composition scheme. If I am already a registered person, I need to wait till commencement of the financial year and then only I can go for composition scheme. Suppose if I am not already registered, now only I am getting registered. At any time can I go for composition scheme? Yes. At any time I can go for composition scheme. Along with registration application, I will select the option to go for composition scheme. And every person opting for composition scheme should display composition taxable person in every notice, signboard displayed at the principal place of business and additional place of business. And they are required to file a quarterly return. So that quarterly return is in CMP 8. What is the time limit? By 18th of the month following every quarter. And even they need to pay tax also by 18th of the month following every quarter, means along with CMP 8, they have to discharge the liability as well. And GST will be payable on value as per bill of supply. So there is one concept. Generally, GST is not payable on advances in case of goods. So because of section 12 subsection 2 read with notification number 66/2017, in time of supply this provision is there, which says that if you are making supply of goods on advances, you are not required to pay GST. GST is payable only on the basis of invoices, but that is not applicable in case of composition scheme. So a person opting for composition scheme is required to pay GST on advances also. So therefore what they need to do is that they need to take the value of bill of supply during the quarter and they pay GST on quarterly basis. So all bill of supplies during the quarter, value as per bill of supply. Why bill of supply? They will not be giving tax invoice. Why they will not give tax invoice? Because a person opting for composition scheme should not recover the GST from the recipient. So what is the name of the document? Bill of supply. You take the value as per bill of supply during the quarter. Add advances received during the quarter for which bill of supply will be generated in future. Means supplies will be made in future, but you received advance. You add minus advances already received in the past for which bills are raised in the current quarter. So because these advances would have been already taxed in the past, so now we need to reduce that. So this adjustment we need to make. GST payable on value as per bill of supply during the current quarter, add advances received during the current quarter pertaining to next quarter minus advances received during the previous quarter pertaining to the current quarter. Then a person opting for composition scheme is also required to file an annual return, and that annual return will be filed in GSTR 4 by 30th April of the succeeding financial year. So these are some procedural aspects, and this already we have seen. Validity of composition scheme: if all conditions are satisfied, option remains valid. So we don't have to submit the CMP2 every year. So once we have submitted CMP2, if all the conditions are satisfied, you will be in the composition scheme. Suppose if the conditions are not satisfied, means you cross the turnover limit, or you made supply of service through e-commerce operator, or you made interstate supplies, etc. When conditions are not satisfied, you need to exit from the composition scheme and go for normal scheme, and you need to file one form for exit. For entry, what is the form? CMP2. For exit, it will be CMP4, and that CMP4 you need to file within 7 days from the breach of conditions, and issue tax invoice for taxable supply. Voluntarily also, even if you have not breached the conditions, voluntarily also anytime you can exit from the composition scheme by filing CMP4. Now, whenever you are filing CMP4, exiting the composition scheme, 18(1)(c) will be applicable. So what is that? You were under composition scheme, now you are going for normal scheme. Now you can avail the ITC on closing stock. So along with this CMP4, you need to file one ITC form. What is that ITC form? ITC1. So CMP4 and ITC1 is one combination. CMP4 and ITC1 is one combination. CMP4 is exit from the scheme. When you exit from the scheme, you will avail the ITC on closing stock. And when you need to exit from the composition scheme, whenever you breach the condition within 7 days. And when you need to file this ITC1 for availing ITC on closing stock, from the day you migrated from composition scheme to normal scheme, within 30 days. 30 days. Then next, the moment you enter into composition scheme, you need to reverse the ITC on closing stock, 18 subsection 4. So the moment you enter into composition scheme, so these two will become a combo, CMP2 and ITC3. For reversal of ITC on closing stock, we file ITC3 na. So CMP2 is for entry into composition scheme. When you can enter into composition scheme? So this is entry into composition scheme, intimation prior to commencement of the financial year, and you need to reverse the ITC on closing stock. That reversal of ITC on closing stock is in ITC3. What is the time limit? Within 60 days from the commencement of the financial year, because you can go for composition scheme only in beginning of the financial year na. The moment you go into composition scheme, from there within 60 days you need to file ITC3 for reversal of ITC on closing stock. Then mainly these are all tested for MCQ purpose. Suppose you breach the condition, but still you are continuing in the composition scheme. So proper officer will give a notice in CMP5. So proper officer has reasons to believe that taxpayer not eligible or contravene the act or rules. A notice will be given in CMP5, and within 15 days from notice, a reply should be given in CMP6, and after reply within 30 days, so proper officer will pass a order in CMP7, either accepting the reply, means you will continue in the composition scheme, or denying the composition scheme, means you need to exit from the composition scheme. So CMP5 is notice, CMP6 is reply to notice, CMP7 is order, and notice whenever they identify, reply 15 days, and order within 30 days from notice. CMP8, what is CMP8? Quarterly return. Quarterly return to be filed by 18th of the month following every quarter. Now whether this denial of composition scheme is prospective or retrospective, whenever we breach the condition and we continued in the composition scheme, department will identify and will give an order na. That order of denial will be prospective, or it can be retrospective, backdate also, but not before the date of breach. For example, on 18th January we breached the condition and we continued in the composition scheme. Next year, they identified that we have breached the condition on 18th of January. Now they can deny the composition scheme prospectively whenever they identify, or retrospectively, but not before 18 January, because 18 January only I breached the condition. Up to 18 January I am supposed to enjoy the composition scheme. You got it? So in case of denial of option to pay tax under composition levy by the tax authorities, the effective date of such denial shall be from a date including any retrospective date as may be determined by tax authorities. However, such effective date shall not be prior to the date of contravention of provisions of the act or rules. Then, when is it advisable to opt for section 10(2)(a)? So you tell me, when it is advisable to opt for 10(2)(a)? If I am providing services other than supply of food, or I am providing services beyond 10% limit, then I cannot continue in 10(1). I am providing services beyond 10% limit, then I cannot be in 10(1), so I can go for 10(2)(a). So who is exclusively engaged in supply of service other than restaurant, or who is engaged in supply of services along with supply of goods under a restaurant service of value exceeding 5 lakhs in the current year. Why 5 lakhs? Because my previous year turnover should not exceed 50 lakhs. And 50 lakhs into 10% is what? 5 lakhs or 5 lakhs, whichever is higher, 5 lakhs. If I cross the 5 lakhs of services, I can go for 10(2)(a). Then, this is the meaning of various turnover. Already I gave you this table at the end also, and here also for reference purpose I have just given. So, aggregate turnover for determining eligibility for composition scheme, turnover for determining 10% limit, and turnover for payment of GST under composition scheme. Here, if you are making non-taxable supplies, export of goods or service, or interstate supply during the current year, you cannot go for composition scheme. So, not applicable means these supplies cannot be made during the current year, and if made by the person is disqualified from the composition scheme. Okay. So, with this we completed composition scheme. We will take a break and then we will continue with exemptions and RCM. Okay. If you have any doubts, you can ask. Okay. So there are few queries. Let's answer those queries first. Sir, in case of demerger, you said credit shall be transferred in net assets ratio. What if one demerged entity receives entire assets on which ITC not availed and balanced by other entity on which ITC availed? Whether ITC availed or not on that net assets, it is irrelevant. For example, I am transferring it to A Limited and B Limited. A Limited I am transferring 4 assets. B Limited I am transferring 2 assets. Now in that case, don't see whether ITC availed or not availed on that assets. So in the assets ratio, we need to distribute the ITC. So whether ITC availed or not is irrelevant. Then next. What will be the value if PA transactions under services? That I didn't understand your question, dear. Then gaming agency only has to pay GST. Yes, gaming agency only has to pay GST. Problems related to HC block. There are no questions and all on this. It's only the concept which I already told you through numbers. So that only will be tested. And point 10 2A point B. It is simple here. My previous year turnover is 150 lakhs. So my previous year turnover, if you see, yes. So previous year turnover, previous year aggregate turnover, if you see, is somewhere like 50 lakhs, exactly 50 lakhs. And current year I am a trader. I am a trader. So naturally I would have gone for which composition scheme? Composition scheme under 10.1. Composition scheme under section 10.1. And I want to provide services. What is the limit up to which services can be provided? Limit up to which services can be provided is 5 lakhs, correct? Is 5 lakhs. Now I want to provide more services. So beyond this, then automatically I should go for which composition scheme? 10.2A. So composition scheme under 10.2A, composition scheme under section 10.2A, if services greater than 5 lakhs needs to be provided. Okay. If the services greater than 5 lakhs needs to be provided, we need to go for 10.2A. That is the point which I have explained. Okay, sir, if my turnover during previous year is 60 lakhs, then what is the limit up to which I can provide services? 6 lakhs. Now I want to go beyond 6 lakhs. Is it possible to go for 10.2A? No. Why it is not possible to go for 10.2A? Because previous year turnover is 60 lakhs, which is more than 50 lakhs, which is not possible. So that is that. Then next. Sir, if existing composite taxpayer had a turnover of 140 lakhs and provided other than restaurant service for 15 lakhs. So 140 plus 15 means it will be like 155 lakhs. 155 lakhs means they will be disqualified from the composition scheme for the current year, and even next year they cannot go for composition scheme, because for next year this is the previous year na, so next year they cannot go for composition scheme. Then can you please tell us any of these GST concepts also important for IBS? Everything is important for IBS. No, yes. IBS is not separate subject here. IBS is definitely the merger of all the subjects. But I can say that whatever topics yesterday I told you as important, very important for GST, those concepts only are being tested in the case studies. So ICAI has released around some 15 case studies, and then 3 case studies in this student journal and 2 case studies in the RTP. So in all these case studies, what I have observed is that they tested only on these areas, whichever areas I said as important. Yesterday 10 chapters, 10 topics I said na, from that only, so that only focus for IBS as well. Then next, value of supply when business asset disposed on which ITC avail other than capital goods. No, everything will be covered. Business asset means not only capital goods, even other goods also, current assets also will be coming under that point. Then what will be the transaction value if principal agent transaction under services? First of all, principal agent transaction under services, if it is without consideration, is not a supply. So the activity itself is not a supply. 7(1)(c) DRIP is there na, P for principal agent transaction, that should be only goods. If it is services, it will not be coming. And suppose if it is for consideration, it will come under 7(1)(a). So 7(1)(a) normal transaction value only will be taken. First of all, principal agent transaction without consideration becomes supply only in case of goods. In that case only we will be applying rule 29. Okay. Then next, so these are the queries they have asked. We are moving on to this supply. We will see first, because some students are asking even doubts on supply. So supply we will complete, and then we will see RCM. Otherwise, while discussing RCM, you will ask doubts on supply also. Maybe you guys have not at all studied and you are attending rocket revision here. So see this page number 13. Maybe studied too many subjects now, would have forgot. So possible, I am not blaming you. So look into page 13, supply under GST. So what is the taxable event? Taxable event under GST is supply of goods or services or both, and that supply is defined under section 7. Section 7 of CGST Act. 7 subsection 1 talks about inclusions in the meaning of supply. 7 subsection 2 read with schedule 3 talks about exclusions from supply. 7 subsection 1A is classification of supply into goods or services. 7.3 it is reclassification of supply of goods into supply of service and vice versa. But at present we don't have anything notified for this purpose. So we have only these 3 subsections: 7.1 inclusion, 7.2 exclusions, and 7 subsection 1A classification of supply into goods or services. Now 7 subsection 1, so we have supply includes. In that supply includes we have 7.1A, any activity for consideration in the course or furtherance of business. 3 points, any activity, and that should be for a consideration. It should be in the course or furtherance of business. 7.1AA, any activity between a person other than individual and its members. Again, it should also be for a consideration. Between a person other than individual means HUF, company, firm, AOP, BOI, cooperative society, etc. and members. That is HUF, you take members of HUF, that is co-partners. So there is a karta or other members of the HUF. Between HUF and them any activity, or between firm and partners any activity, between company and the shareholders any activity. So between them for a consideration it will also become supply. Then 7.1b, import of services for a consideration whether or not in the course or furtherance of business. So you are importing services for a consideration, it may not be in the course or furtherance of your business, even then it will become supply under 7.1b. 7.1c comes under activities in schedule 1 even though without consideration. When there is no consideration, then only you need to refer to 7.1c. In 7.1c we have 4 activities: D, R, I, P. D for disposal of business asset. This business asset can be capital goods or other than capital goods on which ITC has been availed. R for related party transaction including transaction between distinct persons. I for import of services from a related person or another establishment located outside India. Then P for principal agent transaction with respect to goods. Okay, principal agent transaction with respect to goods where agent is acting on behalf of principal. So these are the 4 activities, and in detail, so this 7 subsection 1 difference table you can see in page number 15. So in 7.1a, any activity and consideration should be there. Course or furtherance of business. From whose perspective we need to see whether it is in the course or furtherance of business or not? Supplier point of view. And the coverage is both goods and services. 7.1AA. What is the difference between 7.1A and 7.1AA? Everything is same except that 7.1A is between any person to any person, but 7.1AA is between a person other than individual and its members. So now there is a partnership firm which is giving some remuneration to the partner, whether that will come under 7.1AA. So it will not come under 71AA. It is nothing but withdrawal of profit. But if there is a separate contract between the partner and the partnership firm, where partner provides some services to the partnership firm, for which partnership firm will pay some amount of consideration to the partner, then it will come under 71AA. But mere remuneration arising out of the partnership deed is withdrawal of profit. That will not come under supply, okay, because this point can be tested in the exam. So what is it we have to see here? What is it we need to understand? So remuneration to partner, remuneration to partner, to a partner by firm is withdrawal of profit, and not a supply, However, consideration to partner for services provided to firm is supply under section 71AA. So the 71AA mainly come into picture in case of activities between a person other than individual and its members, either members to the person or person to the members anyway. One more example is a company which is providing share transfer to the shareholder. So shareholder requests the company to transfer the shares from his name to some of his relative name or his wife's name, for which there is a share transfer fee which will be collected by the company. So this share transfer fee collected from the shareholder also will come under supply 71AA. So basically 71AA is between any person to any person. 71AA is between a person other than individual and its members. Then 71B, what is the difference between 71A and 71B? In 71B only one activity is there, that is import of services. Consideration, yes, and it may or may not be in the course or furtherance of business. And 71B, import of service, should always be interpreted from the recipient point of view. For example, you are importing Amazon Prime or Netflix OTT platform services for which you will make some payment. So it is import of service for a consideration, not in the course or furtherance of your business. Even then it will become supply under 71B. And 71B, the coverage is only services. Then 71C, DRIP, D for disposal of business asset. In that, all these four cases, consideration is not required. But in case of disposal of business asset, whether it should be in the course or furtherance of business, it may or may not be in the course or furtherance of business. We are disposing the business asset. It may be related to CSR obligation, or it may be to an employee under employee welfare, or it may be to an outsider, not in the course or furtherance of business. But if you dispose of the business asset on which ITC is availed, it will become supply. And here, supplier point of view and the coverage is only goods, whereas related party transaction should be in the course or furtherance of business. Supplier point of view, coverage is both goods and services. Import of services, wherever import of services comes, so always we need to see it from the recipient point of view. What is the difference between import of service under 71B versus import of service under 71C? Import of service 71B should be for consideration, here it is without consideration. Here it is may or may not be in the course or furtherance of business, but here it should be in the course or furtherance of business. And principal agent transaction, only goods, coverage is only goods, service is not there, and it should be in the course or furtherance of business from supplier point of view. This is about inclusions, and whenever you are referring to 71C, you need to write read with schedule 1. And then when an activity will be excluded from supply, so as per 7 subsection 2, supply excludes. So this is read with schedule 3. So you need to remember spelled slow. Yes, for sovereign functions of government, that is all activities of government other than the following is excluded from supply. Only 4 activities of government is covered under supply. What are those 4 activities? Department of Post, transportation of goods or passengers, and airport or port services, and services to business entities. These are the 4 activities which are covered under supply, and all other activities of government is excluded from supply. P refers to post. Post, that is constitutional post, government post or nominated post. Government post means MLA, MP, etc. Constitutional post means president, governor, Supreme Court Chief Justice, etc. Then nominated post means there is a body where the head of that body or any member of that body is nominated by the government. So that is nominated post for which government will pay money to them. That will also be coming under exclusion. Example, RBI governor, SEBI chairman, or any nominee director appointed by government in the company, government company. So all these are nominated post. Then that is also excluded from supply. SPA, A for actionable claims other than specified actionable claims. So what are these specified actionable claims? HC block. So horse racing, casinos, betting, lottery, online money gaming and gambling. Okay. Here this online gaming basically will not come under specified actionable claims. So this online gaming will not come, only online money gaming, because online gaming is shifted to OIDR services due to that reason. So online gaming falls under OIDR services. Then gambling. So this will be coming under specified actionable claims. So previously lottery, betting and gambling was there, and now they have changed it to specified actionable claims. So yes, sovereign functions. P post. A, actionable claims other than specified actionable claims. L, legal fees. Legal fees collected by whom? Collected by court or tribunal. And L, land sale. Any sale of land is excluded from supply. Even sale of building is also excluded from supply. But when sale of building is excluded from supply, when entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier. And then E for employee to employer in the course of employment. So employee getting salary from the employer will be excluded from supply. D for death related, that is funeral, burial, mortuary, transportation of deceased, etc. that will be excluded. This is about SPALT. Then slow. S for sale on high seas, that is we are importing the goods. Before the goods being imported, we sold these goods by way of transfer of documents to title to some other person. Now whatever money that we receive is known as sale on high seas. So that is excluded from supply, because the subsequent buyer is going to file a bill of entry and pay the customs duty along with IGST. So our sale is excluded from supply. That is known as sale on high seas, that is sale before import. Then liquor license granted by state government. State government will be giving license to sell liquor to various people, and for which they will collect a license fee. That license fee is also excluded from supply. Then outside the country movement of goods. Supplier is located outside India, and like supplier is in India, recipient is in India, but the goods are moving from outside India to India. For example, it's like I am person located in India, you are my recipient located in India, and I have a branch in Australia. From my branch in Australia, the goods are coming to India, then it will be import of goods. Import of goods is covered, but not in GST, it is covered under customs. Okay, that's why in GST we don't have any discussion related to this. But what is this point? Outside the country movement of goods means goods originate outside India, terminates also outside India. Means you have a branch in Germany, I have a branch in Australia. From my branch in Australia to your branch in Germany, the goods are moving, but the financial impact of the transaction is happening in India. Even then, it will not be chargeable to GST, it will be excluded from supply. Then warehoused goods sold under customs, we saw that in input tax credit. Warehoused goods in the sense like, so I have deposited the goods in the warehouse. I am the importer, I imported the goods, I kept the goods in the warehouse, and thereafter I transfer the document of title to you, warehouse receipt to you. Now you will pay some money to me, I will not pay any GST on that, because anyhow when you clear the goods from the warehouse, you pay the customs duty along with IGST. So I am excluded from supply. That is the sale of warehoused goods under customs. So these are the activities which are excluded from supply. Whenever you write exclusion from supply, you write section 7 subsection 2 read with schedule 3. Then see one more point here, gifts by employer to employee. Employer and employee are treated as related parties. If employer is giving any gift to the employee, and if the value of the gift does not exceed 50,000 per annum per employee, then also it is not a supply. What if the value of the gift exceeds 50,000? Entirely it will be treated as supply and chargeable to GST. Then next one, so there is like when an activity becomes supply or not. First you need to check 7 subsection 2. If the activity is covered under 7 subsection 2, it is not a supply. So first you need to check while reading the question. So you see the activity. The first thing you need to see is that, is the activity given in the question covered in 7 subsection 2? Yes. If it is covered in 7 subsection 2, it is not a supply. If it is not covered in 7 subsection 2, no. Then you check 7 subsection 1 inclusions. Is it covered anywhere in 7 subsection 1? Yes. Then it will become supply. If it is not covered under 7 subsection 1 also, then it is not a supply. You need to write that the said activity is not a supply. So first you need to see the activity or transaction. This activity or a transaction, okay, is covered in 7 subsection 2. Is covered in section 7 subsection 2, read with schedule 3. See, this is how you need to interpret in the exam. Okay, that's why I am giving you. First you need to see the activity or transaction given in the question and check whether it is covered in 7 subsection 2, read with schedule 3. Yes, it is covered in schedule 3. Then what will be your answer? If this is yes, is it supply or not a supply? It is not a supply. So what is it you need to write in exam? The said activity. First you need to write as per 7 subsection 2, read with schedule 3, employee to employer, in the course of employment is excluded from supply. In the present case, employee getting salary, therefore it is not a supply. Like that you will write. Okay. Suppose if it is no, it is not covered in schedule 3, that is 7 subsection 2, read with schedule 3. Then you check whether the activity or transaction is covered in section 7 subsection 1, that is inclusions anywhere, either 7.1a or 7.1aa or 7.1a or aa or 7.1b or 7.1c, anywhere it can be covered. Okay, anywhere it can be covered. Suppose if the answer is yes, it is covered in 7 subsection 1, then what will be your answer? If this is yes, the activity is supply. Suppose if it is no, it is neither covered in 7 subsection 2 nor covered in 7 subsection 1, then also the activity is not a supply. So what is it you will write? Say for example, disposal of business asset on which ITC not availed. So now you will write as per 7 subsection 1 C, disposal of business asset on which ITC availed is supply. In the present case, ITC not availed. Consequently, the said activity is not a supply. Like that you will write. And this 7 subsection 2 is called as neither supply of goods nor supply of services. That is the correct name which is given in the law. So the name for this is neither supply of goods, nor supply of services, So this is the correct name that is given in the law. Okay, so you write that not a supply, but not a supply is generic, but specifically it is neither supply of goods nor supply of service. Why? Because in one MCQ, one attempt, they have given this transaction in securities is dash. Option A, neither supply of goods nor supply of services. B, not a supply. Both are correct. Neither supply of goods nor supply of services is also correct, not a supply is also correct. So which should be taken as the answer? Not a supply. So neither supply of goods nor supply of services will come into picture when only when the activity is excluded from supply as per 7 subsection 2 read with schedule 3. That's spelled slow. In the case of that spelled slow only, you need to write neither supply of goods nor supply of services. In other cases and all, you should write it as not a supply. Okay, so therefore that is how. Now once the activity becomes supply, what's next? So the next aspect is that you need to check, is that activity taxable or exempted? So that is the next aspect. But do we have taxable list? No, we have negative list only. Means we have what are all exempted. So the balancing figure will be taxable. So where is that exempted? We need to check whether the said supply is exempted. Whether the said supply is exempted. Where we need to check for that? Section 11, read with notification. One notification is there where they have given list of services. What is that notification number? 12 of 2017. So this is for services. Sir, what about goods? Goods related exemption we don't have. So you don't have to remember. Goods related exemptions is not in syllabus or not required. Whether the said activity is exempted. If it is yes. So activity is supply, but it is exempted. If it is yes, Then whether GST payable or GST not payable, GST not payable. Now what is the explanation that you will write? Because majority of the answer sheets that I have seen, and what I have observed is that every student who shared with me the answer sheet, they are writing correct answers only, but the explanation is pathetic. They are not writing the reason, proper reason they are not writing. So whatever is analysis in your mind, that should be written in the answer sheet, otherwise you will not get marks. So don't expect full marks and all when you are not writing proper justification. So now what is the justification you will give? You will say that even though the said activity is supply, but the same is covered under section 11 read with notification 12/2017, therefore it is exempted and consequently GST not payable. Like that you should write. Okay. So develop the habit of writing. We have ample time now that the revision get over. So try to solve more and more questions and write the answers. Then only you will know as to how that should be presented in exam. Okay. Justification is very, very important. You remember, it's like you are married and you need to give explanation to your wife. How you will give explanation? Everything. You sit, you give explanation. Stand, you give explanation. You sleep, you give explanation. You come late, you need to give explanation. Out of experience, I am telling you. Therefore, everything you think you have to give explanation. You understood? In your life, you think like that only in exam hall also. So in exam hall also, you read something, you write something, for that you need to give explanation. Justification is important here in life, you understood? So that you have to write in the answer sheet. If you are not giving explanation, your life will be hell. Your answer sheet also hell, you understood? So please ensure that properly you are giving. So this is the explanation that you will give. What is that? The activity is supply, but it is exempted. Okay. So consequently GST not payable. Suppose if it is no, it is not exempted, then what is the answer for this? The said activity is taxable. So supply, it is a taxable supply. It is a taxable supply. If it is a taxable supply, what is the next thing that you need to see? Who is liable to pay GST? The next aspect is who will be liable to pay GST. So for that you need to check RCM. FCM is not there. FCM is balancing figure. So whether the said taxable supply, is covered under RCM. RCM means reverse charge mechanism. So where we need to check, in case of goods, you need to see section 9(3) read with notification number 4 of 2017. So goods related provisions we have for exam. Then services. If it is services, section 9(3) read with notification number 13 of 2017. Sir, should we remember all these things? Then why am I writing? Am I an idiot or what to write all these things? I have a lot of work to do, but I am writing it because I know important. You have to remember this. Don't put a question there. Should we remember all these things? Remember. You are writing CA final exam. At least this you remember. Okay. So that the valuer will think you are a knowledgeable person. Okay. Because you are writing notification numbers and all and section numbers and all. Remember, nothing wrong. So goods notification 4/2017, services notification 13/2017. Suppose if it is covered under RCM, if the answer is yes, okay, if the answer is yes, so who will pay GST? Liability to pay GST is on. Liability to pay GST to government. To pay GST to government is on recipient. Suppose if it is no, it is not covered there, then who will be having liability to pay GST? Liability to pay GST is on supplier. Now wait, we cannot conclude here. One more aspect you need to see. whenever the liability to pay GST is on the supplier, check whether that supplier is required to get registered or not required to get registered. That's the fourth aspect. The first aspect you need to see is whether an activity is supply or not. The second aspect you need to see is whether it is taxable or exempted. The third aspect you need to see is who will be liable to pay GST. The fourth aspect is registration. So if the supplier is not required to get registered, then GST not payable. So therefore, in this, whether supplier is registered or liable to get registered, if this is yes, then who will pay GST? Supplier shall pay GST to government. Suppose if it is no, GST not payable. If it is no, I am just connecting to this, or separately also you can write, if it is no, GST not payable. So what you need to write? Don't change the service as exempted. The said activity is taxable and it is coming under FCM, but as the supplier is not registered, GST not payable, like that you need to write. And suppose if the transaction is covered under RCM, then what will happen? Liability to pay GST is on recipient. For recipient also should we check? Yes. Is the recipient exempted from registration? You check. If the recipient is exempted from registration, compulsory registration is not applicable. Otherwise, the recipient is liable to pay GST. Okay. So therefore, the next aspect that we check here is whether recipient is exempted from registration. Recipient is exempted from registration. If the recipient is exempted from registration, if this answer is yes, GST payable or GST not payable? GST not payable. If the answer is yes, GST not payable. Suppose if the recipient is not exempted from registration, no, then compulsory registration. Compulsory registration and recipient shall pay GST to government. And wherever this GST not payable, in this place, you remember section 23 overrides section 24. Section 23 talks about exemption from registration, section 24 talks about compulsory registration. So therefore, section 23 overrides. If a person is exempted from registration, section 23 overrides section 24, so they are exempted from registration and GST not payable in this case. So this is how you need to analyze a transaction and you need to arrive at the answer. Okay. So accordingly, here we need to check that. That's what I have given. If an activity is not covered in 7 subsection 2, exclusions, then 7 subsection 1 should be checked. If the activity is not in 7 subsection 1, then the activity is not a supply. Then you can see circulars related to exclusions. There is one point, sale of land. So this sale of land is usually excluded from supply, but I am not selling the land as such, I am selling the developed land. In that case, what is the treatment? If the developed land is sold and if a single consideration is collected towards the sale of land, so I will buy a piece of land which is like a undeveloped land. I will do the leveling and I will put it like a plots and I will lay down the roads, I will put the electric connection, pipeline, water pipeline, etc. and all. Now the developed plot I am selling. So like plots 1200 square feet or 500 square feet, 800 square feet, like the developed plots I am selling. Now I charge a single consideration like 3000 rupees per square feet, everything all inclusive. Now in that case, this 3000 rupees will be excluded from supply. Suppose if I charge 1,800 rupees per square feet for land, 1,200 per square feet for development charges. I developed the land now, so I incurred some charges. Suppose if I bill it like that. Now, 1,800 rupees per square feet for sale of land is excluded from supply, but the 1,200 rupees per square feet for development charges, so that will be covered under supply. That's what circular says. Sale of land after some development such as leveling, laying down of drainage lines, electricity lines, etc. is also sale of land is excluded from supply. However, services provided for development of land is not excluded from supply and shall attract GST. So, towards development charges, if we collect some amount, that will attract GST. Then another point is related to perquisite. If any perquisite is given by employer to employee, that will not be treated as gift. So, the difference between perquisite and gift is that perquisite will be covered under the offer document, whereas gift will not be covered under offer document. So, for gift only you need to check that 50,000 rupees point. For perquisite, whatever may be the amount, it will be excluded from supply. Why perquisite excluded from supply? Because perquisite will be coming under salary. It forms part of salary. So, perquisite given by employer to employee in terms of contractual agreement entered into between them will not be subject to GST when the same are provided in terms of contract. Then next, you can see some important definitions below. See page number 15. So, first definition is related to goods. So, goods is given under section 2 clause 52. So, goods means any kind of movable property. So, that will be coming under the meaning of goods. So, immovable property will not come under goods, and this includes actionable claims, growing crops, grass and things attached to or forming part of land, which are agreed to be served before supply or under a contract of supply. So, actionable claims will come under goods. Which actionable claims? All actionable claims. But out of these actionable claims, other than specified actionable claims are excluded from supply. Same way, anything which is attached to earth like trees, plantations, etc. will also come under goods if we have agreed to sever it, cut it before delivery. So, then it will be treated as goods. And goods excludes money and securities. Not only goods, even service definition also excludes money and securities. So, money and securities is neither goods nor services. And services means anything other than goods will be coming under services, and services includes, generally service excludes money, but transaction in money for a separate consideration will be included in the service. And service excludes securities, but facilitating or arranging transaction in securities is treated as service. Example, stockbroker service, depository service, etc. It is not sale of securities. Sale of securities excluded from services as well as goods. But transaction in securities, facilitating or arranging transaction in securities means stockbroker service, depository service, underwriting service, etc. will be coming under services. Then transaction in money for a separate consideration. I have 500 rupee note, I am giving you and you are giving me 500 rupee notes. It is transaction in money without consideration. It is neither goods nor services. Suppose if I am giving you 500 rupee note and you are giving me 400 rupee notes and 150 rupees note, and 50 rupees is a commission for you, means separate consideration, that will be treated as service. Which will be treated as service? That 50 rupees will be treated as supply of service. And what is the meaning of money? Money is Indian currency or foreign currency or any instrument recognized by RBI, but does not include old currency which is not in the circulation. So, currency means what? Indian currency or foreign currency, includes any instrument recognized by RBI. But old currency will not come under money definition. So, sale of old currency will be treated as sale of goods and it will attract GST. Even cryptocurrency. Cryptocurrency is also not treated as instrument recognized by RBI, correct? So, therefore, sale of cryptocurrency also treated as supply of goods and it will attract GST. Okay. So, sale of old coins, sale of old coins, sale of old coins, or sale of cryptocurrency, treated as sale of goods and attract GST, attracts GST. Then next, so remember securities, transaction in securities is only not goods or services, but any other activity connecting to securities. So any other activity connecting to securities is what? So we have, this security, lending, like that one concept is there. Security lending means we are renting the securities or lending the securities. That is not transaction in securities, not sale of securities. We are just lending the securities. That will be coming under facilitating or arranging transaction in securities. Okay. Then next, actionable claims. Actionable claims means any instrument which entitles right to receive a benefit. So 4 conditions should be satisfied, then only it will be called as actionable claims. What are those? First, you should have an instrument that will give you right to receive a benefit or recover a debt that can be transferred from one person to another person, and it is legally enforceable, and the holder of that instrument is entitled to receive the benefit or recover the debt. Then it will be called as an actionable claim. So bill of exchange, promissory note, check, lottery ticket, and even in casinos the chips are there na. All these are called as actionable claims. But in this actionable claims, if it is covered under money definition, because check, bill of exchange and promissory note is covered under money definition. As it is covered under money definition, it is neither goods nor services. Say this. Actionable claims which are covered under money definition, that is bill of exchange, promissory note and bearer check, it is neither goods nor services, whereas other actionable claims are treated as goods. In this other actionable claims, so this specified actionable claims is covered under supply and other actionable claims are not a supply. Okay. Then, so what is this specified actionable claims? Online gaming will not come under specified actionable claims, I told you. So online gaming means offering a game on the internet or electronic network and includes online money gaming. But online gaming other than online money gaming will come under OIDR services. Online money gaming, so basically these 3 are online gaming. Okay. Online gaming will be treated like OIDR services. Okay. Then online money gaming, so means online gaming in which players pay or deposit money or money's worth, including virtual digital asset. This is a highlight point in the expectation of winning money or money's worth. That should be there, then only it will be called as online money gaming. In online money gaming, there should be expectation to win the money, including virtual digital assets in an event, including game, scheme, competition or any other activity or process, whether or not its outcome or performance is based on skill, chance or both. So let it be a game of skill or game of chance. Game of skill. So definitely certain games will be game of skill. Chess, online chess is a game of skill. So people put bet on that and all and they will play and they will win the money. So it's a game of skill. Definitely it's not a game of chance. Whereas Ludo is a game of chance. There is no skill involved in that, because that dice when you throw, you don't know na, which number will be coming. So it's a game of chance. So then there is a dispute like Dream 11. So whether it is a game of skill or a game of chance. So for which, they have made this amendment. So if it is a game of chance, it will come under betting and gambling. If it is a game of skill, it will not come under betting or gambling. That's why they included both in the definition now. Whether it is game of skill or game of chance, everything will come under online money gaming. So they need to pay. And on Dream 11, they served a 9,000 crore, not 9,000, 90,000 crore, sorry, 90,000 crore tax demand has been served on them. Okay. So to pay the GST, and they ran away. So whether or not its outcome or performance is based on skill, chance or both, and whether the same is permissible or otherwise under any law for the time being in force. So this is about online money gaming. And then meaning of consideration. So we have seen meaning of goods and meaning of services. Look into the meaning of consideration that is given in section 2 clause 31. Consideration includes and consideration excludes. Consideration includes either monetary or non-monetary. Monetary means what? Payment received or receivable. Non-monetary means it can be in the form of goods or it can be in the form of services. that is not important, but consideration excludes what? Consideration excludes refundable security deposits and subsidy from central government or state government. So these two are excluded from consideration, and consideration can be received from recipient or any other person. What we need to see is presence of consideration. Example, yesterday we have seen that dealer will be providing free after sale service, which he will recover it from the manufacturer. So he is not getting money from the buyer, but he is getting money from the manufacturer. So whether he gets money from the buyer or he gets money from the manufacturer, there is a consideration that is involved in the transaction. So therefore, it is treated as consideration, not necessary that it should be received from the recipient. And consideration should be in respect of, in response to, or for the inducement of supply of goods or services. In respect of means we will tell in the beginning itself, like this is the activity, this is the consideration, this is the amount that you need to pay for it. It is known as in respect of. Whereas in response to, so we are not committing any amount, but for that activity in response to some amount is received. So example, I told you, usually this actors and all will be receiving car, etc. as gift from the producer for acting in the movie. So once a movie becomes hit, producer will give the car as a gift. Is that car coming under consideration? Yes, in response to acting in the movie. Had the person not acted in the movie, he will not receive it now. So therefore it will be coming under consideration. And inducement of means offering some gift to make the work done. So that gift given to make them sign a contract will also come under consideration, that is known as inducement of. Then activity without consideration or consideration without activity is not a supply under 7(1)(a). So activity without consideration, so like for example, I am taking classes now and I am not collecting 1 rupee also from you. So therefore it is activity without consideration. Is it supply or not a supply? Not a supply. And consideration, sir, tomorrow because of this you will be getting some students and therefore they will be purchasing your lectures. I don't think so. So because there is no guarantee, certainty element should be involved. There is no certain element here. Probable and all cannot be called as consideration. So therefore there is no consideration, consequently it is not a supply. Same way, consideration without activity. What is an example for that? Donations. So we are getting some money, but in return we are not doing anything for that. So then it will also not be treated as supply. What if we got a donation and in return we are doing something? So for that donation, then it is called as a conditional donation. Conditional donation will be treated as supply. So basically donations are divided into two: conditional donations and unconditional donations. Conditional donation means obligation on supplier to do something, whereas unconditional donation means no obligation on supplier to do anything. So therefore conditional donations means you are giving me some money and you are putting a condition on me to do something for you. You display my name somewhere on the top of the building. So I am doing the donation for it. It is known as what? Conditional donation. So means I have an obligation to do something for you. So this conditional donation is treated as consideration and the activity will become supply under 7(1)(a). Suppose if it is unconditional donation, you are giving me donation and you have not made me obliged for anything, means I don't have any obligation to do anything in return to you, then it will be unconditional donation, not treated as consideration, consequently it will not become supply. Now, you gave me money and you have not asked me to display your name anywhere, but as a gratitude I displayed your name. Is it conditional donation or unconditional donation? Unconditional donation. However, CBIC Circular says display of name gives a business advantage to the donor. By displaying your name, you are getting a business advantage. Then it is deemed to be conditional donation and it will become supply. If donor name is displayed anywhere in the premises against the donation, not obligated, but as a gratitude it is being done, display of name does not give business advantage to the donor, not a supply. So I have just mentioned donated by, so Mr. Ram, nothing else. So therefore it is not treated as conditional donation. Unconditional donation, not a supply. So donated by Mr. Ram, proprietor Ram Fancy Stores, like that I have mentioned. Now in that case, so display of name gives a business advantage to the donor, therefore it will be coming under supply under 7(1)(a). Display of name gives business advantage to the donor. Okay, then and I just said Ram as a person name, not that Jai Shri Ram, you understood. So people, those who are watching these lectures, don't put in the comment and all something, okay. I didn't mean anything about that, because if I speak anything, it is going in some other sense. Okay, now coming back to this, meaning of person. Meaning of person, so person under Income Tax Act, so we already know that is individual, HUF, company, body corporate or firm, everything will come. But extra we have central government and state government also, that is called as person under GST. So this is person under Income Tax Act, individual, HUF, company, firm, AOP, cooperative society, local authority, artificial juridical person and any other body corporate. Extra central government or state government, so that is called as person under GST. Sir, if we use Dr. Ram, then will it be coming under supply, sir, deemed supply? No, yaar, because Dr. Ram can be any person. We are not specifically giving. Suppose if you mention Dr. Ram and clinic name, his clinic name will be there, na? That clinic name if you put, automatically it will be coming under business advantage. So your name, because you will be having too much fancy towards CA and all. The moment you qualify CA, everywhere you will put a CA like that your name, because you like that. It's your effort, you have made lot of effort in getting that CA, nothing wrong in that. So you will put everywhere, in wedding card and all you will put. And suppose if, because you know, one invitation has been given, in that invitation that person is asking, no, my name only mentioned, where is CA, before that CA. So took the wedding card or invitation, CA, so and so, then only his ego got satisfied. So therefore people are like that. Now you donate, when you donate it, they will put your name, but you want them to put CA like that. Just because of this, you are not getting any business advantage. Suppose if your name along with your firm name comes, you will have a firm name, na? If the firm name is mentioned, then there is a business advantage like that. Then meaning of business. So business definition is relevant because there are many places we have in the course or furtherance of business, not in the course or furtherance of business, etc. So there is a general meaning of business and there are some specific activities. What is the general meaning of business? Trade, commerce, manufacture. First three, trade, commerce, manufacture. Next three, profession, occasion, adventure. These are related to skills. Profession is by way of qualification, occasion is by way of experience, adventure is as a passion you are doing it, and wager. Wager refers to betting activities or any other similar activity. So these 8 activities, trade, commerce, manufacture, profession, occasion, adventure, wager or any other similar activity. Its incidental or ancillary is also covered. So there is a chartered accountant who takes classes and he gets some money that will be incidental or ancillary to his profession, and he authors a book and he gets some royalty income that will come under incidental or ancillary to his profession, and he takes seminar and he gets some fees for giving lectures in seminar. So that is also coming under incidental or ancillary to his profession. Suppose if he starts acting in movie, that will come under adventure, because it is no way connected to his profession. That's a different skill, as a passion he is doing that, so that will come under adventure. So extension of these activities is incidental or ancillary. Altogether a different skill will be coming under adventure. Then irrespective of volume, frequency or regularity, sir, only one transaction we made, let it be, that is also treated as business. Whether or not for a pecuniary benefit, sir, there is a charitable trust. That charitable trust is selling some goods, but not for profit motive. Even then it is business, yes. Whether or not for a pecuniary benefit, whether it is for not profit motive or profit motive, it is business. Then there are some specific activities. First one, entry tickets. Entry tickets like admission to cinema theatre, admission to park or admission to museum, admission to temple, etc. All these are treated as business. Then holding an office which is accepted by a person in the course or furtherance of his trade, profession or occasion. So there is a trader who became a head of a trade union for which he is getting some money. So that will be covered under business. And then there is a actor who became head of a artist association for which he is getting some money. So that will also be coming under business. And there is a professional like a doctor who became head of the medical association, for which he got some money, that is also coming under business. So holding an office which is accepted in the course or furtherance of your trade, profession or occasion. Suppose there is a doctor who became secretary to a temple, and for becoming secretary to the temple he got some money. Will it come under business? No. Why it will not come under business? It is not in furtherance of his trade, profession or occasion. Then next, supply of goods or service in connection with commencement or closure of business. So at the time of commencement of business, I do some activity. That is not actually my business. For example, I purchased 10 ACs, and out of the 10 ACs, 4 ACs I used in the business. 6 ACs I am selling. That sale of 6 ACs is not my business. Even then it is in connection with commencement of business, so therefore it will be treated as business. I am shutting down the business. When I shut down the business, assets and all I will sell. Sale of assets is not my business, but it is in connection with closure of business, so that will also be coming under business. Then provision of facilities or benefits to its members by a club, society or association. There is a resident welfare association, that's apartment owners association. This apartment owners association will be incurring common area expenses like lift maintenance, parking maintenance, security, garden, etc. And they will be recovering the money from the members in the form of maintenance charges. So that will also be coming under business. Then any activity of a race club, including betting activities, all activities of race club. Betting activity anyhow coming under business, but all other activities like supply of food and beverages to the people who come over there, and supply of merchandise, parking tickets, all this will come under business. And all activities of government is also business. But in these all activities of government, only few activities of government is covered under supply, and remaining activities are excluded from supply. What are the activities of government covered under supply? Department of Post, transportation of goods or passengers, airport or port, and services to business entities. This is covered under supply, and remaining activities are excluded from supply, but all activities of government come under business. Then next one, meaning of related. What is the purpose of related parties? So two places we will come across related in supply definition, 7(1)(c), R and I. Related party transactions including transaction between distinct persons there, and import of services from a related person. In these two places we come across related. Whenever there is a transaction between related parties, even though without consideration it will become supply. And one more impact also is there, rule 28 will be applicable. Transaction value will not be applicable, and we need to determine the value as per rule 28. So transaction value under section 15 not applicable, and value determined in terms of rules. And total 9 relationships are there, and they will be treated as related. So first point, such persons are officers or directors of one another's business. So for example, X is appointed as officer of Y's business, and Y is appointed as officer of X business. Now X and Y are treated as related. And in this one more point also I have told you, director of a company and such company are also treated as related. So first point, such persons or officers or directors of one another's business. Second point, such persons are legally recognized partners of a firm. So there is a partnership firm. In that partnership firm there are 3 partners, A, B and C, and this is a legally recognized partners. Means what? That firm should be a registered partnership firm. There are 3 partners, A, B, C. A and B are related, B and C are related, and A and C are related. But the firm and partners are not related. Partners in a firm are related, however partners and firm are not related. Then such persons are employer and employee. Employer and employer are also treated as related. So first 3 points you should remember, such persons or officers or directors of another's business, they are legally recognized partners of a firm, employer and employee. Next 3 points is related to control. So point number 4, there are 2 companies having a common shareholder. We holding 25% or more in these 2 companies. Now these 2 companies are treated as related. So any person directly or indirectly owns, controls or holds 25% or more of the outstanding voting stock or shares of both of them. And same point, same 9 points are there in related definition in customs also. But the difference is that here 25% is there na, whereas in customs it will be 5%. Okay. So in customs, for this 4th point, in customs, 25% replaced with 5%. So no need to remember separately for customs, the same definition is there even for customs related parties. Then 5th point, one of them directly or indirectly controls the another. So when there will be control, Control can be by way of investment. Investment more than 50%, there is a control, or control can be by way of majority common board of directors. For example, two companies, company A and company B. For company A, X, Y and Z are the directors. For company B, it is X, Y and P are the directors. Now, these two companies, 2 out of 3 directors are common, majority are common, therefore these two companies are having control. So therefore they are treated as related. So either investment greater than 50% or majority common board of directors, or it can be control of operations. One company controls the operations of the another company, even though investment is not more than 50, even though there is no majority board of directors, even then they will be treated as related. Then point number 6, both of them are directly or indirectly controlled by a third person. So two companies having a same parent company. So X Limited, Y Limited. X Limited is under the control of A Limited, Y Limited is also under the control of A Limited. Because these two companies are having the same parent company, these two companies are treated as related. So what are the first 3 points? Such persons or officers or directors of one another's business, they are legally recognized partners of a firm, employer and employee. Next 3 points, two companies having common shareholder holding 25% or more. One company directly or indirectly controlling the another. Third point, two companies are under the common control of a third person. Then last 3 points, point number 7, together they control a company. So there is a company having many shareholders, but you take 2 shareholders, because always relationship we will see between 2 parties, supplier and recipient. So you take any 2 shareholders. Those 2 shareholders are having investment more than 50%. Now those 2 shareholders controls the company. Now these 2 shareholders are treated as related. So together, individually they may not control the company, but together they control the company. So these 2 shareholders will be treated as related. Then point number 8, they are members of the same family. So family is defined in GST, but family is not defined in customs. Family not defined in customs. Family not defined in customs. So what is the meaning of family for the purpose of GST? So family means parents, grandparents, brothers and sisters who are wholly and mainly dependent on that person. Whereas spouse and children, whether or not dependent on that person. Spouse and children, not necessary that they should be dependent, always family. But remaining means brothers, sisters, parents, grandparents, they should be wholly or mainly dependent on that person. Then sole agent or sole selling agent or sole distributor, they are also deemed to be related. Now there is a transaction between a principal and his sole selling agent. Whether we need to determine value as per rule 28 or rule 29, we need to determine the value as per rule 28. Generally principal agent transaction rule 29, but sole selling agent is related. When the sole selling agent is related, we need to determine the value as per rule 28. Okay. So transaction between principal and sole selling agent. Principal and sole selling agent. Which rule? Value under rule 28, not 29. Value will be under rule 28, but generally principal agent transaction will come under rule 29. But in this case, as sole selling agent is related, you should apply rule 28 only. So these are the 9 points related to related definition. The next, meaning of various supplies. We have taxable supply, exempted supply, non-taxable supply and zero rated supply. What are considered as zero rated supply? Supply of goods or services to SEZ or export of goods or services is known as zero rated supply. What are non-taxable supply? Alcoholic liquor for human consumption and 5 petroleum products will come under non-taxable supply. What are exempted supply? For payment of GST, 3 exempted supply: notified as exempted, nil rated and non-taxable. And the remaining balance is known as taxable supply. Whether taxable supply includes exempted supply? No. So supply of goods or services divided into 2, chargeable to GST, not chargeable to GST. Why is it not chargeable to GST? Maybe it is not leviable to GST, that is non-taxable, or maybe leviable to GST but nil rated, rate of GST nil, or it may be like notified for non-payment. All these 3 will come under exempted. So what is the meaning of exempted supplies? Notified for non-payment, notified as exempted, nil rated, non-taxable. So the balancing figure is taxable supplies, means whether taxable supplies includes exempted supplies? No, because exempted supplies includes non-taxable supply. So taxable supplies do not include in its ambit exempted supplies. Then meaning of aggregate turnover, just now we have seen aggregate turnover definition. So what and all will come in aggregate turnover? All these four will come in aggregate turnover: taxable supply, exempted supply, non-taxable supply and zero rated supply. But what are excluded from aggregate turnover? Inward supply on which GST is payable under RCM, because basically turnover means outward supply. So inward supply, even though you pay GST, it will not come. And CGST, SGST, IGST and compensations also will not come in aggregate turnover. Then next point you see GST on sale of flats and buildings. Generally, when it will be excluded from supply, sale of building, if the entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier. So now, if entire amount is received before completion certificate or first occupation, covered under supply or excluded from supply? Covered under supply. If entire amount is received before obtaining completion certificate, covered under supply, GST payable, and it will be treated as works contract service. If entire consideration is received after obtaining completion certificate, then it is excluded from supply, GST not payable, and we treat it as sale of immovable property. What if part consideration is before completion certificate and remaining consideration after completion certificate? Whether it is covered under supply? Yes. When it is excluded from supply? When the entire consideration is received after obtaining completion certificate, then only it is excluded from supply. Part before, part after, it is covered under supply, and GST is payable on the entire consideration, total consideration on entire amount, and it will be treated as works contract service. So here consideration can be either monetary or non-monetary, and CC refers to completion certificate, F4 refers to first occupation. Usually completion certificate is issued by the competent authority. First occupation means the date on which out of the flats, one flat is registered in one person's name. That is known as first occupation. Date on which flat is occupied by the buyer in the project, it is deemed as completion, and remaining flats unbooked will be excluded from supply. Then distinct persons. Why distinct persons is relevant? We have seen 7(1)(c), related party transaction, including transaction between distinct persons. There are 2 points in distinct persons. Number one registration of a person to another registration is known as a distinct person. Why a person is required to obtain more than one registration? If the person is doing business in multiple states, and if he is liable to get registered, he need to register in every state from where he is making taxable supplies, and that is mandatory. So for example, I am doing business in 4 states, and in 4 states I am making taxable supplies, and I am liable to get registered. Why am I liable to get registered? Because my aggregate turnover exceeds the threshold limit. Now I should register in each and every state. So now 4 states I will get 4 registrations. Now one registration to another registration, if any transaction happens, that's treated as a transaction between distinct persons. Even though without consideration it will become supply. What if I am doing business within the state, multiple place of business? I have an option either to go for separate registration with respect to each place of business, or I can go for single registration. If I go for separate registration, then one registration to another registration is also treated as distinct person. So you can see in the next page, I have multiple business and I am doing business in different states. Now separate registration with respect to each state is mandatory. I am doing multiple businesses in the same state but in different place of business. Is this separate registration mandatory? No. So optional. Separate registration with respect to each place of business optional. If I am doing multiple businesses, same state and same place, same building, I am doing multiple businesses. In that case, can I go for separate registration? No, I cannot obtain separate registration. Now one registration of a person to another registration of the same person is treated as distinct person. Every registration of a person to then another registration is distinct person. Next point, registered establishment of a person in a state and unregistered establishment of that person in another state is also distinct person. What is this? For example, I am having business in 4 states, say Tamil Nadu, Andhra Pradesh, Karnataka and Kerala. I am having business in 4 states. Now, what happens is that in Tamil Nadu, I am making taxable supplies and exempted supplies. taxable supplies and exempted supplies. So in Tamil Nadu, it is 8 lakhs and exempted supplies 2 lakhs, Andhra Pradesh 3 lakhs, 2 lakhs, Karnataka 5 lakhs and 5 lakhs, whereas in Kerala, it is, we don't have taxable supplies, we have only exempted supplies 10 lakhs. If you see, my aggregate turnover has exceeded the threshold limit. Say the applicable threshold limit for me is 20 lakhs. So my aggregate turnover exceeds the threshold limit. So what is my aggregate turnover? 8 plus 2, 10, 15. So 20, 25 plus 10, 35. So applicable threshold limit for me is 20 lakhs. Applicable limit is 20 lakhs. And here it crossed 20 lakhs. So I need to register. Where we need to obtain GSTIN? We need to obtain GSTIN in Tamil Nadu. We need to obtain GSTIN in Andhra Pradesh. We need to obtain GSTIN in Karnataka. But we don't have to obtain GSTIN in Kerala. No need to obtain GSTIN in Kerala. Why? Because I am not making taxable supplies. Even then, for Tamil Nadu registration, AP registration and Karnataka registration, Kerala business will be treated as distinct person, even though we don't have a separate registration over there. Between Tamil Nadu to AP or AP to Tamil Nadu, Tamil Nadu to Karnataka, Karnataka to Tamil Nadu, this will be covered in the first point itself, because one registration to another registration, it is distinct person. But one registration, one registered establishment to another establishment in another state, even though not registered, that is also treated as distinct person. Registered establishment of a person in a state and unregistered establishment of that person in another state. So between Karnataka to Kerala, if there is any transaction, that will also come under distinct persons. Okay. So even though there is no GSTIN, these are the 2 points that you need to remember. Now, what is the consequences of distinct person? If there is any stock transfers or branch transfers, that will be treated as, supply, because stock transfer, branch transfer will happen between head office, branch office, factory, depot, etc. So that will become distinct persons and it will become supply. The next one, meaning of recipient. So who will be called as recipient? If consideration is involved in the transaction, the person who is liable to pay the consideration is the recipient, not the one who pays the consideration. For example, I got an order from the holding company to provide the services to the subsidiary company. So to me, who is the recipient? Holding company or subsidiary company? Who is required to pay money to me? Who placed the order with me? Holding company. Means privity of contract is between me and the holding company. So holding company is my recipient, even though I provide the goods or services to the subsidiary company. So the one who is liable to pay the consideration is called as the recipient, if consideration is involved. If consideration is not involved, then the one to whom I am delivering the goods or the one to whom I am providing the services will be called as a recipient. So these are the points that we need to know related to supply. Once an activity becomes supply, then, so we have seen 7 subsection 1, 7 subsection 2, the activity became supply. Now we need to check whether the activity is supply of goods or supply of services. How to check that? For that we need to refer to 7 subsection 1A read with schedule 2. So 3 schedules you need to remember in GST related to supply. What are they? Schedule 1. Schedule 1 is related to what? 7.1c. Activities which are treated as supply even though without consideration. Then schedule 2. Schedule 2 is section 7 subsection 1 capital A. Classification of supply into goods or services. Then schedule 3. What is schedule 3? That is section 7 subsection 2. So exclusions from the supply. So remember these 3 schedules. 7.1, that is 7.1c when you are writing, read with schedule 1. 7 subsection 1a read with schedule 2. 7 subsection 2 read with schedule 3. Okay. So we are looking into 7 subsection 1a read with schedule 2. First you need to check movable property. When movable property will become, and remember when activity becomes supply only, you should refer to 7.1a. When activity is not a supply, we don't have to do the classification. So classification comes only when the activity becomes supply. So now there is a movable property. When it will become goods, if there is a transfer of title, it will be called as goods. If there is a transfer of right to use, it will be called as services. I have a car. I am giving you the title of the car, means sale of goods. I am not giving you the title of the car, I am giving you right to use the car, means renting, it will be coming under services. What if the title is transferred at a future date? Example, hire purchase. In case of hire purchase, what will happen? Today we enter into contract to deliver the product today, but the title will be transferred at a future date, correct, on payment of last installment. But the title is to be transferred at a future date is also treated as supply of goods. So hire purchase transactions are treated as supply of goods only. So transfer of title either at present or at a future is supply of goods. Transfer of right to use movable property is treated as service. Immovable property will never come under goods. So even though there is a transfer of title, it is excluded from supply, sale of land, sale of building, etc. So it will not come under goods, but it will come under services. When it will come under services, so if there is a transfer of right to use immovable property, or in case of bringing into existence a immovable property, that is construction activity or transfer of right in relation to immovable property. Then intellectual property rights. Intellectual property rights, example, copyright, trademark, patent, etc. And if it is a permanent transfer, it will come under supply of goods. If it is a temporary transfer of IPR, it will come under supply of services. Example for permanent transfer, patent of a technology sold to a company, permanent transfer, sale of goods. So music director composing music for a movie, it's not permanent transfer, temporary transfer, that will come under supply of services. Then point number 4, carrying out process on the goods belonging to the other person. Now, whether substantial material is given by the supplier or by the recipient, you need to check. For example, I am a tailor and you gave me cloth, I did the stitching. Substantial material who gave? Supplier or recipient? Recipient, which means it will come under supply of services for me because I am just doing the job work. So you gave me the material, I do the process. So it will be covered under supply of services. If I only buy the cloth and I only do the stitching and give it to you, means substantial material is supplied by me. So therefore it will be coming under supply of goods. So if substantial material required for the process is supplied by the supplier, it is supply of goods. If the substantial material required for the process is given by the recipient, then it will be treated as supply of service. Then suppose if it is supply of goods along with services. So means in a transaction, there involves both goods and services. Then in that case, 3 notified activities. These 3 notified activities will always be treated as supply of services. What are these 3 notified activities? Works contract, information technology software, and supply of food. These 3 involves both goods and services, but it will always be treated as supply of service. What are those 3 notified activities? Works contract, information technology software, and supply of food. Apart from this, other supplies, any other supply that involves both goods and services. Check whether it is composite supply or mixed supply. If it is a composite supply, the principal supply is goods, then entire activity treated as goods. If the principal supply is service, entire activity treated as service. For example, AC and installation is a composite supply. AC is goods, installation is service. So principal supply is AC. So the entire activity will be treated as supply of goods. Then coaching plus study materials is composite supply. Coaching is services, study material is goods. But here what is the principal supply? Coaching. So entirely it will be treated as supply of services. Then suppose if it is a mixed supply. If the highest rate is goods, entirely it will be treated as goods. If the highest rate is service, entirely it will be treated as service. For example, so TV is goods, optional warranty is service. The highest rate is TV, so entirely it will be treated as supply of goods. Then video lectures plus pen drive. Video lectures is service, pen drive is goods. The highest rate is video lectures, so entire activity will be treated as supply of service. So what you need to remember, if it is a composite supply, if the principal supply is goods, entire activity is goods. If the principal supply is service, entire activity is service. If it is a mixed supply, highest rate is goods, entire activity goods, highest rate service, entire activity service. Apart from this, any other activity, that any other activity will always be treated as service. What is that? Doing an act, not doing an act or tolerating an act. Balancing figure will come under services. Doing an act, so doing some activity. Not doing an act, example non-compete fees. I am collecting some money for not starting a competing business. So that is supply of service. Tolerating an act, damages. So usually breach of contract, some damages will be collected. So that will come under consideration for tolerating an act, even that is supply of services. Then you can see meaning of works contract and meaning of job work. Basically works contract means what I told you already. Works contract means that involves both goods element as well as service element, and that should be in relation to what? Immovable property, and there should be a lump sum amount. Then it will be called as a works contract. Works contract will always be treated as supply of service. Then job work, you see. Job work means carrying out process on the goods belonging to the other person is called as job work. Okay, but the other person should be a registered person, then only the activity name is job work. If it is not job work, then it will be treated as some other services. For example, I am a supplier and I am doing some process on the goods belonging to you. You have supplied some goods to me. I do the process. Now you are registered. So this activity name is job work. You are not registered. This activity name is services. It will not be called as job work, because what is the main ingredient to be called as job work? The recipient should be registered. In job work, who is the supplier, who is the recipient? The one who carry out the process is the supplier. The one who supply the goods will be the recipient. So job worker, supplier may or may not be registered, but the principal manufacturer should be registered. Process carried out may or may not be manufactured. Job work is supply of service. Usually in case of job work, the rate is 6% or 12%. And if it is not job work, if the recipient is unregistered, it is not job work but treated as some other service, and the regular rate of GST 18% will be applicable. Then this is about section 7, and in this supply chapter one more section we have is section 8. Section 8 talks about composite supply and mixed supply. So composite supply, mixed supply, so we have a definition. So first we need to understand the differences between these two. So composite supply means two or more supplies and taxable, two or more taxable supplies of goods or service or both or any combination thereof, which are naturally bundled in the ordinary course of business, one of which is a principal supply. Whereas mixed supply, two or more individual supplies. So in case of composite supply, all the supplies should be taxable, but in case of mixed supply, not necessary that it should be taxable. And in case of composite supply, it should be naturally bundled, but in case of mixed supply, not necessary, because it is not a composite supply. And in case of composite supply, one of which is a principal supply, but that is not relevant in case of mixed supply. So there are three differences between composite supply and mixed supply. First difference, in composite supply, all the supplies involved are taxable, but in mixed, either taxable or exempted or any combination. Second point, principal supply, is it required in case of composite supply? Yes, but in mixed supply, principal supply not required. What is the meaning of principal supply? The predominant supply in the transaction is known as principal supply. That's the main activity, and other activities are called as ancillary activities. Then third point, in case of composite supply, that supply should be naturally bundled in the ordinary course of business. Naturally bundled means what? One cannot be supplied without the another. Then it will be called as naturally bundled in the ordinary course of business. Whereas in case of mixed supply, it is not required that it should be naturally bundled. Now, what should be taken as the rate of GST? If there is supply of goods or services or both, and when there involves more than one supply, and if it is naturally bundled, it is composite supply. In case of composite supply, we will take the rate of principal supply. Suppose if it is not naturally bundled, it is mixed supply, and we will take the GST rate of supply having the highest rate. Suppose if there is no more than one supply, then the question of composite supply or mixed supply does not arise. And here you need to know that there should be a single price in case of mixed supply. If there is no single price, it is not treated as mixed supply, it will be treated as individual supplies and taxable at the respective rate. Okay. So what is that we need to know here is that first you need to check whether there involves more than one supply. So two or more supplies 2 or more supplies in a transaction. 2 or more supplies in a transaction. If the answer is yes, 2 or more supplies in a transaction, if the answer is yes, then only we will apply section 8. Suppose if it is no, section 8 not applicable. Section 8 not applicable. And there involves 2 or more supplies in a transaction. Now, 3 conditions you need to satisfy to become composite supply. What are the 3 conditions? All supplies are taxable. All supplies are taxable. Then naturally bundled in ordinary course of business. In ordinary course of business. It is naturally bundled in ordinary course of business. Yes. Then principal supply identifiable. Principal supply identifiable. This is also yes. Then what is the name of this? So it is called as composite supply. Don't bother about the price. The price can be separate or the price can be single. Okay. But these 3 conditions should be satisfied. All the supplies are taxable and naturally bundled in the ordinary course of business, and the principal supply is identifiable. Then it will be called as composite supply. If it is a composite supply, what is the rate of GST that will be applicable? Rate of principal supply. Rate of principal supply applied on entire transaction. Rate of principal supply applied on entire transaction. Okay. Suppose if any one condition is not satisfied, all the supplies are taxable. No. All the supplies taxable but not naturally bundled. All the supplies taxable, naturally bundled, but the principal supply not identifiable. If it is no, then only one condition you need to check, whether it is for a single price or not. Whether it is for a single price or not, you need to check. If it is for a single price, yes, it is for a single price. First, to become mixed supply, it should not be composite supply. First, always apply composite supply in the question. It should not be composite supply and there should be a single price. Then it will be called as mixed supply. If it is mixed supply, what is the rate that you will take? Highest rate. Highest rate applied on entire transaction. Highest rate means in those supplies, what is the highest rate? Applied on entire amount. Suppose if it is no, we don't have, like single price, separate prices we have, then it is neither composite nor mixed. Neither composite nor mixed means what? It will be individual supplies. In case of individual supplies, what we will do? Respective rate for respective supply. Respective rate for respective supply, that will be taken. So this is how we need to arrive at the composite supply or mixed supply or individual supplies. The main challenge that you will have in exam is about naturally bundled or not naturally bundled. Everything else will be given in the question. This is the place where you need to apply your mind and check whether it is naturally bundled or not. How to check that? Little bit of general knowledge is also required in this case, but it will be given in the question itself majority of the cases. Remember, one cannot be supplied without the another. It is called as naturally bundled. In the ordinary course of business, don't see the exceptions. See the most probable side. Example, AC and installation. Usually who sell AC will only do the installation. And so only AC we cannot buy. So because if we buy AC and get it installation, warranty will not be covered. So they will definitely do installation. So it is naturally bundled. Whereas laptop and laptop bag, sometimes laptop will be sold without laptop bag also. But in the ordinary course of business, they will sell laptop along with laptop bag. So most probable side only you see. So it will be again coming under naturally bundled. Don't see it from the recipient point of view, see it from the supplier point of view. Example, inverter and battery. Inverter and battery not naturally bundled. Why not naturally bundled? So inverter will not work without battery, battery will not work without inverter. But that you are seeing from the recipient point of view. See from the supplier point of view. When there is a seller who is selling battery and inverter, can the battery alone be sold without inverter? Yes. Can the inverter be sold without the battery also? Yes. Can it be sold together also? Yes. Therefore, it will not come under naturally bundled. Then, so look into 3 notes related to this. Note 1. In case of servicing of cars, composite supply test should not be applied. For cars alone they have given. Usually in servicing of cars, what is the goods element? Parts replaced during servicing is the goods element. And what is the service element there? So labor charges for replacement. Usually it is composite supply. Why? Part taxable, labor charges taxable, all are taxable. Naturally bundled, because service center only will sell the parts and they will only do the replacement. Naturally bundled. Principal supply is parts. If the part is not there, the labor charges for replacement of parts will not come. But don't apply composite supply. You have to treat always as individual supplies only in this case. So the test of composite supply should not be applied. Parts replaced and labor charges for replacement are treated as individual supplies if the amount is shown separately for each. What if it is given together? Then you apply composite supply concept. When it is given separately, so usually bills they will give separately only. They will clearly mention, so parts how much, labor charges for replacement of part how much. So therefore we will treat it like individual supplies only. Then second note related to food and beverages purchased in a theatre. Taxable as individual supplies. You go to a theatre, you book the ticket, then in the break interval you go and buy popcorn, coke, etc. and all you purchase. So this food which is sold in the theatre is taxable at what rate? Is taxable at the rate applicable to food, 5%. Supply of food is taxable at 5%, that 5% only will be applied. Okay. If the same is purchased along with the ticket, means what? Combo. So there are some theatres wherein for the ticket itself, they will give you the food also as a part of the ticket. Example, PVR director's cut. So one theatre is there in Bengaluru. Ticket price is 1500 rupees. Okay. So 1500 rupees when you pay, and luxury seat and all, amazing environment. Of course, you like to watch everything in Telegram itself. So for you it will not be applicable. So people who have money and can go and spend, so they will go. I didn't go. So I also belong to your category only. In OTT itself I will see. And therefore a lot of people who go there, they will put the post and all. So I went to this movie, etc. So in that I just inquired them, how much is the price? 1500 rupees, and they will get the popcorn and coke as a complimentary along with the ticket. Now in that case, that popcorn and coke is taxable at what rate? The rate applicable to the theatre. So cinema theatre rate is 28%, the 28% will be taken. If the same is purchased along with the ticket, then it may attract composite supply. In such case, food and beverages taxable at the rate applicable to entry to cinema hall. You got it? Suppose, sir, I am booking the ticket in the app, sir, and thereafter I also buy the food and beverages. In that case, will it come under composite supply? No. It will come under individual supplies. Why it will come under individual supplies? You are not paying the single price. For ticket separate, and for whatever you order by, so that is separate. That is individual supplies taxable at the respective rates only. You got it? Means food and beverages taxable at food and beverages 5%. Cinema theatre rate taxable at 28%. When it will come? Only when it is like a combo. You are buying it as a combo, and then in that case composite supply may get attracted. And what is the principal supply here? Entry to cinema, so that rate will be taken. Then if there are 2 or more supplies which is not a composite supply and also not involving a single price, then these are treated as what? Individual supplies, and it will be taxable accordingly. Got it? So this is about supply, composite and mixed supply. we have some circulars related to this. We'll take a break and thereafter we will continue with this, and few queries are there. So up to some queries we have completed. Then there is one good query. Can I opt for 10-1 in one state and 10-2A in another state? No. So I have composition scheme. 10-1 I am going for one state and 10-2A in another state. Not possible. All the states should be 10-1. All the states should be 10-2A. Mix and match is not possible. I should not do that. Then, sir, for warehoused goods, is it processed goods or relinquished goods? Any goods, warehoused goods which is sold. Any warehoused goods which is sold, the money what we receive, that is original importer is receiving money by sale of warehoused goods, is excluded from supply. Then can you give examples where the recipient is exempted from registration? I gave you, that is advocate. Advocate's outward supply, I gave you yesterday only this example. Advocate's outward supply is covered under RCM, either exempted or RCM. As advocate's outward supply is covered under RCM, advocate is exempted from registration. As advocate is exempted from registration, even though they are importing some services on which they need to pay GST and or RCM, but they are not required to get registered because section 23 overrides section 24, so they are exempted from registration. That's one example. Sir, securities are excluded from goods, but why security lending scheme is treated as supply? Because that is not sale of securities, it is lending of securities. Lending of securities will not be coming under sale of securities, it will be coming under facilitating or arranging transaction in securities. Then, sir, in related party definition, why 0.6 is relevant? Because anyway 0.4 explains, yes. 0.4 tells two companies with a common shareholder 25%. But point number 6 is not about investment alone. It can be majority board of directors. Any kind of control is given in point number 6. They are telling two companies having a parent company. The parent company either can control by way of investment, or can control by way of majority board of directors, or can control by way of operations. So point number 6 is so more broader than point number 4. Point number 4 is restricted only for investment, 25%. Okay. Then next. Point 6 explains common control. Yes, I have given. Sir, if another state is having place of business treated as additional place of business like for storage purpose, is it treated as distinct person in another state? Yes. So in another state, if you have a place of business, so even though it is unregistered, that is also your distinct person. You can do anything over there. If it is an unregistered establishment also, it is distinct. What if it is a registered establishment? That is also distinct. How we will consider if supply involves nil rated supply plus 18% supply in the normal course of business, then it will not come under taxable supplies, because nil rated is what? Exempted. One taxable and one nil rated means it will come under mixed supply only. It will not come under composite supply, because in composite supply all the supplies should be taxable. So one taxable and one exempted will come under mixed supply, and the highest rate should be taken between that, provided there is a single price. What if there is a separate price? For nil rated, no GST, and for 18% taxable, 18% will be taken. Okay, fine. So these are the queries. So at what time we will meet? So 1:45, we'll meet at 2:30. 45 minutes? Yes, we'll meet at 2:30. Okay, so we'll see summary of important circulars, which is in page number 24. These circulars are mainly related to the aspect of supply. So the first circular is with respect to interstate movement of any conveyances, that is between distinct person. So there is a lorry which is taking some goods from one distinct person to another distinct person. On that goods, definitely GST will be payable. But the question is whether GST payable on the lorry. No, GST is not payable on the lorry even though the lorry is goods. So first point you need to remember is that there is a conveyance which is carrying goods or people from one distinct person to another distinct person. GST not payable on that conveyance. Second point, if the conveyance is taken from one distinct person to another distinct person for repairs, whether GST payable on that conveyance if it is taken for repairs? No. So even on repairs also GST, like when the conveyance is taken for repairs also, GST not payable. Say this. It is clarified that such interstate movement of train, buses, trucks, trailers, tankers, etc. carrying goods or passengers or both, or for repairs or maintenance, shall not constitute supply and not chargeable to GST. So this is the first point you need to remember. Then, however, applicable GST as the case may be shall be leviable on repairs and maintenance activity done for such conveyance. So when we are sending the conveyance from one distinct person to another distinct person for repairs, GST not payable on the conveyance, but on the repair activity GST will be payable. For example, there is a factory. So A Limited is having a factory in Tamil Nadu. A Limited factory in Tamil Nadu to A Limited having a depot in Karnataka. So they are sending the lorry containing the goods. So whether GST payable on this lorry which is containing the goods. So goods GST payable, but on lorry GST not payable. So value of goods GST payable, whereas value of lorry there is no GST. Same way, the vehicle is being sent for repair purpose. Say A Limited is having a factory in Tamil Nadu and they have a workshop in Maharashtra. So A Limited is having workshop for repairs in Maharashtra. Now they are sending the lorry. Whether GST payable on the lorry? No, no GST. There is no GST on the lorry. Even after repairs, the lorry will be returned after repairs. So whether GST will be payable on the lorry which is sent after repairs? No, no GST. However, so A Limited workshop is providing the repair services. On that repair services, GST will be payable. Hope you understood this. GST will be payable on the repair activity done by one distinct person to another distinct person. Then one more point. So first point is related to movement of conveyance between distinct person carrying goods or people, GST not payable. Second point, movement of conveyance between distinct person for repairs, GST not payable. However, on the repair activity, on vehicle no GST, but on the repair service GST will be applicable. Third point is related to, so movement of goods or tools between the distinct person, not for further supply but for consumption in the distinct person. Also the above circular is extended to interstate movement of rigs, tools and spares and all goods on wheels, and except in case where the movement is for further supply. What is that? Usually some spare parts will be sent from one distinct person to another distinct person, not for further supply but for consumption in the distinct person. On that spare parts also GST not payable. Even though this particular circular is given for interstate movement, the same principle is applicable even in case of intrastate movement. So in the circular they did not specify about intrastate movement, but logically the circular can be applied for intrastate movement as well. Then another point, when an agent will be called as agent acting on behalf of principal. Why? Because principal agent transaction will come under supply 7(1)(c) only if agent is acting on behalf of principal. When agent is called as acting on behalf of principal, in case of sale transaction, invoice is raised by the agent in his name. In case of purchase transaction, the invoice is in agent's name. then only agent acting on behalf of principal. If agent is acting on behalf of principal, between principal and agent, if there is any activity, that will become supply. Okay. So when an agent is acting on behalf of principal, agent is representing principal on all aspects, and invoice is raised by the agent in his name in case of sale, and the purchase invoice is in the name of the agent. The next one is related to print activity. In print activity, what is the goods element? Paper and ink is the goods element. Printing and binding is the service element. Now, whether it is supply of goods or supply of services, further they are telling, if printing constitutes principal supply, when printing constitutes principal supply, in case of books, brochures, flyers, etc., the main element is printing. Paper and ink is just ancillary, so therefore it will be treated as supply of service. Whereas paper constitutes the major element, in which case tissue papers or letterheads or envelopes, etc., where the paper is the principal supply and the printing is ancillary, then it will be treated as supply of goods. So in the print activity, two elements are there. So paper and ink is the goods element, printing and binding is the service element. If printing constitutes principal supply, it is supply of service. If paper constitutes principal supply, it is supply of goods. Then next, whether the activity of bus body building is supply of goods or supply of service, again that should be determined based on principal supply. So in bus body building, so they will do fabrication of materials and they will construct one body. So in that, the metal or material used in the structure is called as goods element, and the fabrication, welding and installation is called as a service element. Usually what is the principal supply? Fabrication is only the principal supply, so it will be treated as supply of service. So print activity as well as bus body building, these two cases we need to classify based on principal supply, what constitutes principal supply. Then whether the activity of rethreading of tires is supply of goods or supply of services. In rethreading of tires, the old tires is taken from the buyer and the supplier is only doing the rethreading. It is like carrying out process on the goods belonging to other person, it will be coming under supply of service. Suppose if old tire is purchased by the supplier and he supplies the rethreaded tire, then it will be treated as supply of goods. The next, priority sector lending certificates. These certificates are sold by one bank to another bank which has the deficit in meeting the priority sector loan target. Every bank has to spend some money towards the loans for priority sector out of the public deposits. If there is any shortfall, they will buy the priority sector lending certificates from another bank which has given excess loans to the priority sector. So this sale of priority sector lending certificate will be treated as supply of goods, and moreover it will come under RCM. So transaction involving sale of priority sector lending certificate by one bank to another bank will come under RCM. So selling bank will pay GST or buying bank will pay GST. Buying bank will pay GST, that too it is deemed interstate. So always IGST will be applicable because this sale will be happening through e-Kuber portal of RBI. So supplier don't know who is the recipient. So it will be deemed interstate and chargeable to IGST. So in GST there is no exemption to trading in PSLC. Thus they are always taxable as goods, always chargeable to IGST under RCM. As we have list of goods which are covered under RCM, this point you need to keep in mind. So trading in PSLC comes under RCM. Then next, whether the artwork sent by artists to galleries, will it become supply on the date it is sent to the gallery? No. Artist sending the artwork to the gallery will become supply only when art gallery is subsequently selling it to a buyer. If the art gallery is not selling it to the buyer, in the hands of artist it is not a supply and GST not payable. Whether tenancy rights or pagadi system is chargeable to GST. Tenancy right arises in a situation where I transfer the tenancy right to another person. So tenancy right is like a lock-in contract. I will enter into a lock-in contract with the property owner and I get a tenancy right. This tenancy right, I can either transfer it or I can renounce it. For transferring the tenancy right or renouncing the tenancy right, I will get a premium from the another tenant called as tenancy premium. So this tenancy premium is for vacating the property before the end of the tenancy contract. So this tenancy premium, whatever I am receiving as a tenant, will always be taxable in my hands. But the tenancy premium received by the property owner will be taxable if the rent of that property is taxable. If the rent of that property is exempted, the tenancy premium received for that property is also exempted. Then when the rent of the property will be exempted? Generally, rent of property is always taxable. Only in two cases it is exempted. Renting of property is exempted only in two cases. Number one, if it is a residential property given on rent for residential purpose to a unregistered person, it will be exempted. Residential property, residential purpose to an unregistered person is exempted. Residential property, residential purpose to a registered individual for his personal family stay. In these two cases only it will be exempted. Remaining case, renting will be taxable. So tenancy premium received by the property owner also will be taxable. In these two cases, rent is exempted na. So for that, if any tenancy premium is received, that tenancy premium is exempted. So in relation to residential property, it will be exempted. In relation to commercial property, it will be taxable. In which case? In the case of a property owner. But for a tenant, always tenancy premium will be taxable. So just write down that. So tenancy premium is always taxable in the hands of tenant. Whereas this point is there na, in relation to residential property, commercial property. This discussion is only to a property owner. In case of owner, property owner, if it is residential property, then it is exempted. Commercial property, it will be taxable. But that too, residential property, when it will be exempted? If it's a residential property for residential purpose to an unregistered person, or residential property for residential purpose to a registered individual for his personal family stay. Anyhow, this discussion again comes in exemption. There I will connect that. Then another point, GST on director's remuneration. Generally, director getting remuneration from the company will be coming under RCM. But in case the director is acting in personal capacity, then whatever money that is received by the director will not come under RCM. So director is only required to pay GST under FCM. So, and one more point related to this is that what if the director is not a employee, then only it will be coming under supply. What if the director is an employee, then it is not a supply, because employee to employer in the course of employment is excluded from supply. How do we know whether a director is employee or not an employee? For that we need to refer contract of service or contract for service. The contract that is entered by the director with the company, if it is contract of service, then the relationship is employer-employee and the activity is not a supply. What if it is contract for service, then it will be supply and GST payable by the company under RCM. Suppose if the contract of or contract for cannot be ascertained, there is another test, that is under Income Tax Act. If the TDS is deducted by the company under 192, then the money received by the director will come under salaries and it is excluded from supply. If the TDS is deducted by the company under 194J, then the money received by the director will be coming under PGBP. So therefore it will be covered under supply, and liability to pay GST is on the company under RCM. Say this. Executive director or whole-time director is an employee of the company and TDS is deducted under 192, therefore it will not come under GST, because 192 means salaries na. Then suppose if that part of the director remuneration which is declared separately other than salaries and subject to TDS under 194J, then it will be treated as consideration and taxable under RCM. So who will pay GST? Company will pay GST under RCM. In this regard, one important point you should note is that, so if the director is acting in his personal capacity, if director is providing services in personal capacity, then it is taxable under FCM. This point already come in a different place. I am just connecting it here. Then next one, no claim bonus. So this no claim bonus already we saw in value of supply. Is no claim bonus treated as consideration? Yes, it is a discount, that's okay. But is this no claim bonus treated as a consideration? No. basically no claim bonus is not a consideration because no one is receiving that. It is just like a deduction from the premium that we need to pay, so that cannot be treated as consideration. Then whether interest received by a del creditor agent is chargeable to GST. So interest is divided into two in GST, interest on loans, advances, deposits, which is exempted, interest on account of delay in receipt of consideration included in the value and chargeable to GST. Now there is a del creditor agent who is getting the interest. Is it taxable or exempted? That depends. Now listen, if there is a del creditor agent who is raising invoice in his name, then del creditor agent is a supplier. So whatever interest that is collected by the del creditor agent, so that interest will be taxable because it is on account of delay in receipt of consideration. If del creditor agent is not raising invoice, the principal is raising invoice, means del creditor agent is a mere agent. So whatever interest that is collected by del creditor agent is for giving finance facility, therefore it is exempted. So you need to divide it into two. For the sale of goods, who raised the invoice? Del creditor agent raised the invoice. Then interest collected by del creditor agent will be taxable. Invoice is raised by the principal, not by the agent. Then in that case, interest collected by del creditor agent will be exempted. If del creditor agent is raising invoice in the name of the principal, so principal is raising invoice, then interest collected by del creditor agent is exempted. If the invoice is raised by the del creditor agent in his name, then whatever interest that is collected by del creditor agent is taxable on account of delay in receipt of consideration. Then next, whether owning controlling interest in the form of shares by a holding company in subsidiary company in supply of services. First of all, transaction in securities is neither goods nor services. One student has asked me, sir, since securities are neither goods nor services, shouldn't we call sale of securities as supply of neither goods nor services? See, that is different. I am telling neither supply of goods nor supply of services. Neither supply of goods nor supply of services, that word we should use when in case of exclusion from supply. For securities, the correct word is neither goods nor services, not supply, neither goods nor services, and consequently it is not a supply. That is the wording you should use, okay? Then, but here it is what holding company is having the shares of the subsidiary company. Holding the shares is not called as a activity, correct? Activity of holding shares of subsidiary company by a holding company cannot be treated as supply of service and cannot be taxed under GST. And this circular already we saw whether supply of food and beverages in cinema hall will be taxed under the service of cinema exhibition. Yes, provided it is along with the ticket. Suppose if it is separately, then it will be taxable as restaurant services, okay? So these are various circulars that we have, and now we are moving on to the next chapter, that is levy and collection under CGST. Then, so there are like three queries. How nominee director sitting fees is paid? So any director for that matter, nominee director or independent director or non-executive director, all these directors, whatever money that is received from the company will be coming under, RCM, taxable. It is 194J only. It will not come under 192. So therefore it will be taxable under RCM. The company has to pay GST under RCM. But if there is a nominee director who is getting some remuneration from the government, so then it will be coming under, excluded from supply. Why excluded from supply? Nominated post. Under the category of nominated post, it will be excluded from supply. Government post, constitutional post, nominated post is there, there it will be coming. Then next, earlier what I meant was if goods are disposed of as free samples but covered under 7(1)(c), then there is no need to reverse ITC. However, if these are capital goods, we have 18 subsection 6. What about other than capital goods? Section 15. So usually capital goods are disposed of, on which ITC avail. We will apply 18(6). What if it is not capital goods? Section 15. Normal transaction value we will be taking. What if there is no transaction value? Because it is disposed of without consideration. So when there is no transaction value, we need to determine the value as per rules. Which rule will be applicable? Rule 27 will not be applicable because price is not sole consideration, means there should be consideration but apart from price. And rule 28 not applicable because it's not a related party transaction. Rule 29 also not applicable, but rule 30 will be applicable. What is that rule 30? Cost plus 10%. If that is not there, then residual value will be applicable in that case. Then next, one student has commented yesterday that GSTR 2B is not 13th, it is 14th. Actually, it is 13th midnight it will be generated. Okay. So 14th we will be able to see. 13th morning we cannot see, 13th midnight we can see. So 13th midnight or 14th morning, both are same. Okay. So I didn't tell anything wrong in that. Then next, how nominee director already I said. Then we will move on to segment 3, levy and collection under CGST. So section 9 talks about the levy and collection under CGST. As per section 9 subsection 1, generally liability to pay GST is on the supplier, apart from alcoholic liquor for human consumption. And 9 subsection 2 says, in case of 5 petroleum products, right now there is no GST, but as and when GST council decides, it will come into the ambit of GST. So the general rule is that 9.1 and 9.2 liability to pay GST to government is on the supplier, whereas in case of 9.3, 9.4 and 9.5, supplier will not pay GST to government, but some other person will pay GST to government. In case of 9.3, who will pay GST to government? Recipient will pay GST to government. In case of 9.4, who will pay GST to government? Recipient will pay GST to government. In case of 9.5, e-commerce operator will pay GST to government. When this 9.3 will be applicable, there are some notified goods and notified services. In case of that notified goods and notified services, liability to pay GST is on the recipient. And that list of services and goods both are applicable for exams now. So initially at the time when we have sent this book for print, so they have not given the statutory update, and later on they have given. That's why at the end I have added, so what are the list of goods which are covered under RCM as additional amendments. So we sent the book, they got printed it, and last we have sent this. So it is there in the book, but at the end it is there. Additional amendments, this is the list of goods which are covered under RCM. Okay. So therefore, we have both goods as well as services which are covered under RCM, and the goods related notification is what? Notification 4 of 2017. So list of goods, this is applicable for exam. What is the notification? 4 of 2017. List of services which are notified, where is it given? 13 of 2017. So remember, exemptions are given in 12 2017. RCM service is given in 13 2017. RCM goods is notification 4 2017. So only for these notified goods and services RCM 9.3 will be applicable. Then who will pay GST? We know recipient. Supplier, should the supplier be registered? May or may not be. Supplier may be registered or supplier may not be registered. What about recipient? Whether recipient is compulsorily required to get registered? Yes, subject to exemption. So every recipient who is liable to pay GST under RCM is compulsorily required to get registered. Suppose if they are exempted from registration under 23, then they are not required to get registered and pay GST. Who are all exempted from registration? If my outward supply is fully covered under RCM, I am exempted from registration. If my outward supplies are fully exempted, then also I am exempted from registration. If my outward supplies are fully covered under fully non-taxable, then also I am exempted from registration. Or if I am an agriculturist, then I am exempted from registration. So 4 people are exempted from registration. Who are they? Exclusively RCM supplies, exclusively exempted supplies, exclusively non-taxable supplies, and agriculturists. So even though they are having inward supplies on which they need to pay GST under RCM, they are not required to register because section 23 overrides section 24. Otherwise, every recipient who is liable to pay GST under RCM is compulsorily required to get registered. So this is about 9.3. And when 9.4 is applicable, 9.4 is applicable only in case of one transaction, that is inward supplies of a promoter or builder from an unregistered person. So one student asked me, sir, 9.4 is not applicable for exam. No, yeah, 9.4 is applicable for exam because they gave the study guidelines. So for May 24 exam, in this May 24 exam, nowhere it is given that 9 subsection 4 is exclusion. So in the exclusion, they are talking only about ITC for the real estate sector which is excluded. So rate of tax for goods you don't have to remember, rate of tax for services you don't have to learn, exemption for supply of goods you don't have to learn, we will not discuss that. And Kerala flood cess, we have not learned that. I know that it will not be tested in exam. I have not discussed at all in any of my batch, regular batch or exam oriented batch or fast track batch. And manner of determination of ITC in case of real estate transactions. This also I have not discussed with you. So because I know that this was eliminated long back itself, so they will not be testing this for exam. And last, manner of reversal of credit of additional duty of customs in respect of gold door bar. This also I never discussed anywhere in my book also, it is not there. So these things are only excluded, but whatever I have given in the book, that is there in the syllabus, okay. So don't skip anything. 9 subsection 4 is there. 9 subsection 4 is applicable in case of promoter or builder. There is a promoter or builder who is of 9.4, recipient will pay GST. How the supplier should be? Definitely supplier should be an unregistered person, then only 9.4 will be applicable. Then 9.5, when 9.5 will be applicable, there are some notified services supplied through e-commerce operator. Then the liability to pay GST is on e-commerce operator. What are those notified services? HATE. Remember these 4. H for housekeeping services, example urban company, and A for accommodation services, Go Ibibo, Make My Trip, OYO, etc. will be coming, and T for transportation of passengers. Transportation of passengers by any motor vehicle. See, previously it was radio taxi, motor cab, maxi cab, motorcycle. Now any motor vehicle is covered. So, but it should be transportation of passengers, example Ola, Rapido, Uber, etc. Then eating food from the restaurant. So, example Swiggy, Zomato. So, these are the 4 activities which are covered under 9.5, where liability to pay GST is on e-commerce operator. So, tell me what are the 4 activities? H for housekeeping service, A for accommodation service, T for transportation of passengers by any motor vehicle, E for eating food from the restaurant. But in these 4, we have certain conditions. In case of housekeeping service and accommodation service, first 2 cases, the supplier should be unregistered, then only it will be coming under 9.5. What if the supplier is registered? It will not come under 9.5, supplier only will pay GST. See this. In case of H and A, housekeeping service and accommodation service, supplier should be unregistered. What if supplier is registered? It will not come under 9.5, supplier only will pay GST. Whereas the other two is what? T and E. For T and E, transportation of passengers and eating food from the restaurant, whether the supplier is registered or not registered, always e-commerce operator only will pay. There is a restaurant which is selling the food directly to their customers, no GST, because the restaurant is unregistered. Now that unregistered restaurant supply the food through e-commerce operator, so who will pay GST? E-commerce operator will pay GST on this. Even though restaurant is not registered, but if the food is sold through e-commerce operator will pay GST on that. Same is the case. There is a driver who is providing transportation of passengers through Ola or Uber. Now the driver is unregistered. So provided service through e-commerce operator, will there be chargeable to GST? Yes, e-commerce operator will pay GST. Even if the driver is registered or not registered, the position will be same. You got it? Then next, who will pay GST in case of 9.5? E-commerce operator will pay. So these 3 are the exceptions to the general rule. What is the general rule? Liability to pay GST is on the supplier. But in these cases, so e-commerce operator or recipient will pay GST. Now we are focusing on 9.3, that is list of goods and list of services which are covered under RCM. So we will complete this list of goods. So kindly look into the last page. I have given the list of goods which are covered under RCM. Section 9.3 read with notification number 4/2017. Sir, already in this one what is that? PSLC. Just now we discussed priority sector lending certificate. Who will be paying GST? Recipient will pay GST. So liability to pay GST is on the recipient. Priority sector lending certificate. Okay. And then next you need to know, I think it's not there. It's not there in that book. You quickly make note somewhere, na? Okay. I think I have given that. It might be there. Otherwise, you can make note of it. For the sake of this and all, don't buy new book, okay? Of course, if you buy it is revenue for me only, but what's the point? Many students ask me, sir, I have November 23 book, sir. Can I make use of it? I told them 2 options. Number one, if you can afford, you buy the new book. If you cannot afford, anyhow amendments and all I am sharing. In these lectures I am discussing. So just to pause the video and you make note of this amendment. Okay, that's the best thing. Anyhow it is free only, na YouTube it is there. How many times you want to pass, you can pass and you can make note of it. Okay, and say this, or if you want to buy, you buy, good only, anything is fine for me. Then so 93 Redbit notification for 2017, the first product that you need to remember is what? PSLC. Who will pay GST in this case? The recipient will pay GST. Now see this, 4 goods sold by agriculturist, 4 goods sold by agriculturist. What are those 4 goods? Cashew nuts, BD wrapper. BD wrapper leaves means, BD leaves means what? Tendu leaves. So they will take a leaf, put the tobacco on, roll it, na, that is BD leaf. Okay. So this poor man's cigarette, BD leaf, cashew nuts, BD leaves and tobacco leaves. What is tobacco leaves? This tobacco leaves will be used inside the product. Okay. Outside the product is BD leaf. Inside that we get pieces. Okay. In cigarette inside and all pieces will be there. In cigars inside and all pieces of leaves will be there. That is tobacco leaves. Okay. BD leaves, cashew nuts, tobacco leaves and raw cotton. Not processed cotton, raw cotton. From the plant they take the cotton, na? So one big kind of will be there, raw cotton, you would have seen, one seed will be there, to that seed cotton will be attached, so that they will pluck from that seed, so that is a raw cotton. These 4 are sold by whom? Agriculturists. Then the ability to pay GST is on the recipient. Okay, what is the first point you need to remember? Priority sector lending certificate, acquiring bank, that is buying bank, will be paying GST. Then second point you need to remember, 4 goods. What are the 4 goods? Cashew nuts, BD leaves, tobacco leaves and raw cotton. Okay, sold by agriculturists to any person, liability to pay GST is on the recipient. You understood? And in this case the recipient should be a registered person. What if they are selling to an unregistered person? As this is covered under 9.3 or not covered under 9.3? Not covered under 9.3, because 9.3 says the recipient should be registered. 9.3 says the recipient should be registered, then only it will come under RCM. So what if it is unregistered person? Means it is not covered under 9.3. When it is not covered under 9.3, then supplier unregistered, recipient also unregistered. Whether any GST is applicable? No, there is no GST. Why supplier is unregistered? Just now I said na yaar, agriculturist is exempted from registration, correct? 4 people are exempted from registration. Who are those 4 exempted from registration? Exclusively exempted, exclusively RCM, exclusively non-taxable, agriculturist. Agriculturist will never register. So supplier is definitely unregistered. And recipient, if registered, it will come under RCM. What if it is unregistered? What if the recipient is unregistered? It will not come under RCM 9.3, which means there is no GST on that, because this point can definitely be tested. They will tell sale of cashew nuts by an agriculturist to an unregistered person. And in the options, liability to pay GST is on supplier, recipient, either on supplier or recipient. D, none of these. The answer is none of this. Okay. Why none of these? Because there is no GST on that transaction. 9.3 will be applicable only if the recipient is registered person. You got it? So what is that you need to remember? First point, priority sector lending certificates. Supplier can be any registered person, recipient is any registered person. Whereas in case of 4 goods, what are the 4 goods? Cashew nuts, tobacco leaves, BD leaves and raw cotton. Supplier should be agriculturist. Who should be the recipient? Any registered person, And then along with this, we will also see, as raw cotton we completed, silk yarn also you see. Silk yarn. Silk yarn is sold by a manufacturer, a person who manufactures the silk yarn from raw silk or silkworm cocoons for supply of silk yarn to a registered person, then it will be coming under RCM. So people who do sericulture, they extract the raw silk from the silkworm cocoons, and even so this raw silk will be supplied to manufacturers. manufacturers will make the silk fabric, silk yarn, and that silk yarn they will be selling to garment manufacturers. So these people, any person, supplier can be any person, and the recipient should be a registered person, then it will be coming under RCM. See, you have to remember mainly the recipient. Supplier not a problem, recipient only you need to remember. Then only it will come under 9(3). Then next one. So 3 points you understood? Next, say this. Certain essential oils other than those of citrus fruit. There is a big list of essential oils. That list and all we cannot remember. Okay. Less peppermint oil, eucalyptus oil, like that lot of oils they have given. Okay. So remember essential oils other than those of citrus fruit. Supplier any unregistered person, and recipient should be a registered person. And then we have lottery. Who is selling lottery? State government is selling lottery. State government or union territory. Then only RCM. What if lottery is not sold by state government, is sold by lottery distributor to a lottery retailer? Will it come under RCM? No, it will be FCM. Okay. Then used vehicles, seized vehicles or goods or confiscated goods sold by government. So government is selling seized vehicles or seized goods or confiscated goods. So they will be selling, excluding Ministry of Railways. Why sir, Ministry of Railways it is excluded? Because write down below in the notes, Ministry of Railways is always covered under FCM. Ministry of Railways is always covered under FCM. We don't have any RCM with respect to this. Ministry of Railways, Ministry of Railways, this is also an amendment. Ministry of Railways always covered under RCM. Sorry. Always covered under FCM. So liability to pay GST is on the supplier. That's why they have given excluding Ministry of Railways. Okay. Then state government, union territory or local authority. So supplier is government here. Supplier is government. Government means central government, state government, local authority or union territory. They are selling it to any registered person. So the liability to pay GST is on that registered person under RCM. On what? These seized vehicles or used goods or seized goods or any confiscated goods. Then these are the points that you need to remember, but please remember the supplier and the recipient also, because don't remember only the goods. If you remember only the goods, you may end up with the wrong answer. 90% wrong answer only it will be, because goods you know that it is covered under RCM, but they will not play in the goods, they will play in the supplier and the recipient. So therefore they will be giving like recipient is unregistered person, you will tell RCM, and the recipient is compulsorily required to get registered and all you will write. No, actually it is not there. Okay. One more point also you write down. Sale of cashew nuts or sale of tobacco leaves. Sale of tobacco leaves by agriculturist to unregistered person. To unregistered person. What is your answer? No GST. There is no GST in this case. Only if it is sold to a registered person it will be coming. Then now one student has messaged, book is not very costly, no point in struggling with the old book and new amendments. That's what I said. But if I tell no, why new book and all, then they will say, see sir wanted to earn money, he want to construct 4 or 5 buildings, for the sake of that he is telling like that, people will think. It's up to you, you decide which you need. I will not force anyone. Okay. Then say this. One more point, sale of lottery tickets. Sale of lottery tickets by lottery distributor to retailer. Lottery retailer. FCM or RCM? FCM. Only when the lottery tickets are sold by government to the lottery distributor or agent, then it will be coming under RCM. But when any other person is selling it to lottery retailer or agent, that will not come under RCM, it will be FCM. Okay, like this points can be tested. So this is what you need to remember. Okay, so one last time I am repeating. So first you need to know priority sector lending certificates sold by any registered person to any registered person, it will come under RCM. Then second point you need to remember cashew nuts, BD leaves, tobacco leaves and raw cotton sold by agriculturist to a registered person. Number 3, silk yarn sold by any person manufacturer to a registered person, it will be coming under RCM. And then essential oils other than those of citrus fruit by any unregistered person to a registered person, it will come under RCM. 4 points. Then fifth one is like lottery sold by government to lottery distributor or lottery agent. And the last point you need to know is about that used vehicles, seized or confiscated goods sold by government to a registered person, correct or not? So now what if, say this, sale of used goods by government in brackets registered to unregistered person. What is your answer? Sale of used goods by government registered to unregistered person. GST applicable. Government is registered, FCM. Between two unregistered persons only, no GST. Don't write everything no GST and all. Between two unregistered persons only, no GST. Here government is registered to unregistered person. It is not covered under RCM. Why it is not covered under RCM? See the wording there. So sale of used vehicles, seized and confiscated goods and used goods by government to any registered person, then only it will come under 9(3) RCM. Okay. Then, sir, if agriculturist voluntarily taken registration, then agriculturist sold to unregistered person, liable to pay tax under FCM or not? So if they are selling it to unregistered person, it will not come under 9(3). First you should interpret like this. Agriculture is selling to unregistered person. It will not come under 9(3). Not coming under 9(3) means what? Regular FCM. And is the supplier registered? Yes, voluntarily he got registered. So let him pay GST. You got it? Suppose if the supplier is not registered, no GST. But if the supplier is registered, GST payable. Same logic, this also. Government selling the used goods to the unregistered person. Is it given in 9(3)? Not given in 9(3). Not given in 9(3) means what? FCM. Got it? FCM. And is the supplier registered? Yes, he will pay. Supplier not registered? No GST. Got it? That is how you need to interpret. Then, what if cashew nuts sold by agriculturist to registered person? So, not shelled, that is processed cashew nuts then, not the raw cashew nuts. Why agriculturist he will be called as? Hypothetical question it is. He will not be called as agriculturist. The moment he do the process, he will not be called as agriculturist, because who is called as an agriculturist? Who is engaged in supply of agricultural produce out of cultivation of land. The moment he does the process, then it will not be called as he will not be called as agriculturist. If he is not called as agriculturist, is he covered under this list? No. So naturally it will be FCM only. You got it? So therefore this question is a hypothetical question here. Now these are the points that can be tested. It's an amendment. Then next we will see services covered under RCM. You understood now? 4/2017. Now see the list of services under RCM. Take page number 29. So the list of services which are covered under RCM is given in notification 13/2017. You need to remember this list with this keyword, Sir CG got salads. So I have given this in a different manner. So previously I gave it separately and exemption separately. I have merged these two. So what are the services which are covered under RCM? Parallelly, what are the exemptions related to it, and what are the conditions for RCM, and what are non-applicability of RCM. So like this only you remember in your mind also. First, S refers to security lending as per SEBI by lender of securities to borrower of securities. There is a lender of securities who is lending the securities to the borrower. Why borrower will take securities? Because the borrower might have made a short sales. In order to execute the contract, he need the securities. Short sales means without having shares in his demat account, if he places a sell order, that is known as short sales, and there will be a huge penalty levied on him. Due to that reason, he will borrow the shares and he will make the delivery. Thereafter, he need to replace the borrowed shares, for which he need to also pay a lending fee. On this lending fee, lender will not pay GST, but borrower will pay GST under RCM. And do we have any exemptions? No, we don't have any exemptions. And any conditions for RCM? No. Any non-applicability of RCM? No, means always RCM will be applicable. Okay. Then second point, import of services. Import of services, there are some good number of amendments in this. In case of import of services, we have one exemption. That is, import of other than OIDR services by non-taxable recipient is exempted. This was there even before also. Other than OIDR services by non-taxable recipient. But what is the meaning of OIDR services? That got changed. OIDR services means any services which will be provided over internet, full stop. Not necessary that it should be automated. So whether it is automated or not automated, previously only if it is automated it will be called as OIDR. Now whether it is automated or not automated, it will be called as OIDR service. For example, live classes, whether live classes, online live classes requires internet, definitely requires internet. It's a OIDR service even though it is not automated. The one faculty should be there to take the classes, even though not automated, now it is OIDR services. And OIDR services, they are bringing lot of things into OIDR services like online marketing, digital data storage, like that. But remember one thumb rule, simple. To provide the service, internet is required. Then it will be called as a OIDR service. Services whose delivery is mediated by information technology over internet, then it will be called as OIDR services. Okay. And OIDR services imported by any person will be taxable. OIDR service is always taxable, but the exemption is what you read. Import of other than OIDR services, that too by whom? Non-taxable recipient is exempted. Who is a non-taxable recipient? Three people: individuals, trust, government. These three people will come under non-taxable recipient. So unregistered individual importing for any personal purpose, or a trust importing for charitable activities, and government for non-business purpose. So these three only called as non-taxable recipient. Let's take one example for each to understand. There is a CA student who is importing, so this Microsoft Office software for installing in his personal laptop. So it will be coming under import of other than OIDR services by unregistered individual. CA student is an unregistered individual. For what purpose? Personal purpose. So this activity will be exempted. So there is no GST on that. Second example, there is a charitable trust. Swami Nityananda Charitable Trust imports video conferencing software to interact with the pilgrims. So it will be coming under what? Import of other than OIDR. Video conferencing software that do not require internet. Okay. Software is being imported and it is not OIDR by trust. For what purpose? Charitable activities. Why? Advancement of religion, spirituality and yoga will be treated as charitable activity. Interacting with the pilgrims and touching them will be coming under spiritual activity. So therefore it will be a charitable activity and that import of service will be exempted. Okay. Then number 3, that is by government. So example, government is importing some software for the purpose of, like automation of the records. So like this, registration records or lot of records and all government will be maintaining na for automation of that records, they have imported some software. Now in this case, it will be coming under import of software, that is other than OIDR services by government. For what purpose? Is it for business or commerce? No, it is other than business or commerce. Again, it will be exempted. Then, do we have any conditions for RCM? No, we don't have any conditions for RCM. Non-applicability of RCM. Sir, in one case, RCM, generally import of service is coming under RCM. But in one case, RCM will not come, FCM will come. What is that? Import of what services? OIDR services. By whom? NTOR, non-taxable online recipient. Who is a non-taxable online recipient? Any unregistered person who is importing services for any purpose. Again, amendment is there. Previously, any unregistered person importing for other than business or commerce only, NTOR. But now, who is NTOR, non-taxable online recipient? Any unregistered person. So, any purpose he can import. One more point they added, registered person only for deducting TDS, then they will come under NTOR. So, who are NTOR? Any unregistered person or registered person who is registered only for deducting TDS. When you will apply NTOR, NTR, NTOR, extra is what? O for OIDR. Only when OIDR comes, you will apply NTOR. If OIDR is not coming, NTOR you will not apply. Okay. And in NTOR, importing services, will you come under non-taxable online recipient? Yes. You are a CS student, you will come under non-taxable online recipient because you are an unregistered person. When you import OIDR services, who will pay GST? The supplier located outside India will pay GST. It will not come under RCM. This is non-applicability of RCM. Understood here? So what you should remember first, import of services by any person will come under RCM. Okay, only one exemption we have. What is that one exemption? Import of other than OIDR services by non-taxable recipient is exempted. And in one case, RCM will not come, FCM will come. What is that? Import of OIDR services by non-taxable online recipient. Now, three definitions you need to know. What is the meaning of OIDR? So, any service which is mediated through internet is OIDR. Who is non-taxable recipient? Individual, unregistered, importing for personal purpose, trust. So, whether for charitable activities, government for non-business purpose. Then NTOR, non-taxable online recipient, any unregistered person or registered person only for deducting TDS. Then yes, I, then R, renting of motor vehicles. So, there is one query here. Sir, whether recorded classes will be classified as OIDR services. So, whether the service is mediated through internet? No, it is not mediated through internet. The moment you download the service, download the content, thereafter internet is not required for watching the lectures. So, due to that reason, it will not coming under OIDR. Means it should be provided over the information technology network through internet. So, means streaming will be there, live streaming. So, the lectures and all will be uploaded in one app and live streaming, like you can stream and you can watch. Okay. But to watch you need the internet, then it will come under OIDR. But usually recorded lectures which will run through one software. So, for downloading the lectures only you need internet, but not for playing. Sometimes you can go to the faculty's place and you can copy the entire content into your laptop also and you can play the lectures, correct or not, which means that do not require any internet. Once you have activated that, and if without internet also you can watch, correct. For that you should be watching. No, then only it is applicable, okay. But usually by default internet and all will be there. But specifically as I told you, that do not require internet, therefore it is not a OIDR service. Then next, renting of motor vehicles. Generally renting of motor vehicles, so we have supplier, owner of the motor vehicle, recipient, the one who takes a motor vehicle on rent, and we have 4 exemptions for renting of motor vehicles. See the first exemption. I have a motor vehicle that can carry more than 12 passengers that I am giving on rent to a state road transport undertaking. Okay. So, then it will be exempted. Hiring of motor vehicle greater than 12 passengers. 12 passengers means excluding driver seat or including driver seat? Excluding the driver seat. Passengers to state road transport undertaking. Second point, you see, what is the difference between first point and second point? Second point is electric motor vehicle. First one is motor vehicle. Second one is electric motor vehicle. And first one should be given on rent to state road transport undertaking, and the second one should be given to a local authority. Now you may get a question, sir, I have a electric motor vehicle, sir, more than 12 passengers. I gave it on rent to a state road transport undertaking. Taxable or exempted? I have an electric motor vehicle that I have given on rent to a state road transport undertaking, capacity more than 12 passengers. It is exempted. Correct. This motor vehicle includes electric motor vehicle also. Now I have a normal motor vehicle which can carry more than 12 passengers. Instead of giving on rent to a state road transport undertaking, I gave it to a local authority. Is it taxable or exempted? Taxable. Okay. So this somewhere you make note. Renting of electric motor vehicle greater than 12 passengers to state transport undertaking. State transport undertaking. What is it? Exempted, as motor vehicle includes electric motor vehicle. Then next, renting of motor vehicle greater than 12 passengers to local authority. So this will be taxable, as electric motor vehicle only exempted. Then next one. Third point, hiring of motor vehicle that can carry goods to a goods transport agency. What is the difference between third point and the first 2 points? First 2 points is about passenger vehicle. This is a goods vehicle, and that we are giving on rent to a goods transport agency. Fourth point, hiring of motor vehicle that can carry, like persons, providing transportation services to education institution, providing education up to 12th standard or equivalent. There is an education institution which is providing education up to 12th standard or equivalent, which means a school, and that particular education institution, one person is providing transportation service. Say you are providing transportation service to education institution up to 12th standard. Now I provided renting of bus to you. Now the rental will be exempted. So renting of motor vehicle to a person who is providing transportation service to an education institution up to 12th standard or equivalent. Why equivalent? Because in some places 12th standard will not come under school, it will be coming under colleges, but even that will also be part of this education institution only. So these are the 4 exemptions that we have, and in other cases it will be taxable. Wherever it is taxable, if 3 conditions are satisfied, it will come under RCM. What are the 3 conditions? Supplier should be other than body corporate, recipient should be body corporate, and the rate of GST should be 5%. If all these 3 conditions are satisfied, it will come under RCM. If any one condition not satisfied, supplier should be other than body corporate. What if supplier is body corporate? It will not come under RCM. Supplier should be other than body corporate, and recipient should be body corporate. What if recipient is other than body corporate? It will not come under RCM. Supplier is other than body corporate, recipient is body corporate, but the rate of GST is 12%. Then also it will not come under RCM. So rate of GST should be 5%. If any one condition not satisfied, it will not be coming under RCM, it will be FCM. Then another one, renting of residential property. I have a residential property which is given on rent. What are the exemptions in case of residential property? Just now we discussed 2 exemptions are there. Renting of residential property for residential purpose to an unregistered person or to a registered individual for his family stay. For his family stay. for his family stay, okay, not for his employee's family stay. You understood? If there is a person, employer taking the house on rent for his employees, okay, he cannot get the exemption. Why he cannot get the exemption? Some other person's family stay he is taking rent. It should be for his family stay, okay. Renting to registered individual for family stay. Here family stay means whose family stay? That person, that individual's family stay, okay. Then next. So in other cases it will be taxable. And any condition for RCM? Yes. What is the condition for RCM? Recipient should be registered. What if recipient is not registered? It will not be coming under RCM. Moreover, it is exempted. That's what we saw now. If recipient is unregistered, it is exempted, okay. Now in this regard, you should be knowing certain combinations. So see this. Type of property. Type of property, okay, type of property, and purpose, rented to, and what is the taxability? What is the taxability that we need to know? Type of property is commercial property, and purpose, commercial purpose, rented to registered person, What is the taxability? Is it taxable or exempted? Taxable. Will it come under FCM or RCM? Anywhere we have RCM for this commercial property? No. See, commercial property is not there in the list. Always it is residential property. Look into the table here. Residential property only it is there na. Commercial property not there. Therefore it will be FCM. Then next. Commercial property. For what purpose? Commercial purpose. And this is given to a unregistered person. Taxable or exempted? Taxable. But the moment you see unregistered person, you will remember, unregistered person exempted. So you will write it as exempted. No, commercial property will be taxable. So it will be taxable under FCM. And number 3, so that is commercial property. For residential purpose. Commercial property for residential purpose. How, sir? Commercial property is given for residential purpose. Hotel is a commercial property. It is given for temporary stay na residential purpose. So, to registered person. Taxable, we don't have any exemption, and again it will come under FCM. Then commercial property for residential purpose to unregistered person. Again it will be taxable under FCM. So in this case, this third point case, when the commercial property given for residential purpose, so this residential purpose is basically temporary stay to a registered person. Can the registered person take ITC with respect to it? Generally they can take ITC, we don't have any restriction. But one point you remember, CGST, SGST paid in the other state cannot be taken as ITC. Okay. So for example, I go to Karnataka for one work and I stay in a hotel there. Now that hotel will raise me GST invoice. What GST? CGST, SGST. Why CGST, SGST? The place of supply in case of service in relation to immobile property is location of immobile property. So they will raise CGST, SGST invoice. Now I am in Tamil Nadu, registered in Tamil Nadu. Can I take ITC with respect to that? No, I cannot take ITC with respect to that. Fine. Now as the connection came, I told you this. So commercial property will always be taxable and it will be coming under FCM. Clear? Now we are moving on to residential property. If there is a residential property, that residential property is given on commercial purpose. to an unregistered, registered person, to a registered person, is it taxable or exempted? It's a residential property, carefully interpret and tell. Residential property, commercial purpose to a registered person, taxable. Okay. Will it come under FCM or RCM? Will it come under FCM or RCM? It will come under FCM. But sir, there is no clarity related to this, sir. Yes, there is no clarity related to this for your exam for the time being, because there is no clarification as to whether it is FCM or RCM, as RCM is not specifically given. RCM is given only for residential property for residential purpose. So this is actually residential property for commercial purpose. Due to that reason, so it will be coming under FCM only. Okay. And if the supplier is registered, he will pay GST. If the supplier is not registered, it will be exempted. Sorry, it will not be no GST. Okay. But we don't have any clarity related to this. However, there are some contrary answers for this. So I have seen, so 2-3 other faculties in this place, they were telling that it will be coming under RCM. This taxable, but this will be coming under RCM. Kindly, follow FCM itself, because in the notification 13/2017, nowhere it is clearly mentioned. So due to that reason, when the RCM is not applicable, contrary is what? FCM. That's why you follow FCM only without any confusions. Okay. Then next, suppose if it is a residential property, if it is a residential property for commercial purpose, to a unregistered person, then also it will be taxable under FCM. This place also same. Actually, this is no clarity. Due to that reason, we follow FCM for the time being. Maybe in future, if the circular comes, it may change. Then residential property for residential purpose to a registered person. What is your answer? Taxable under RCM. It will not be taxable under FCM, it will be taxable under RCM. What if this registered person is registered individual? If this registered person is registered individual, okay, registered person other than individual, so no confusion. Now residential property for residential purpose to a registered individual, okay, registered individual, not for his family stay, then taxable RCM. Suppose if it is residential property for residential purpose to a registered individual for family stay, that person's family stay, then it will be exempted. And last point, 10th point, residential property for residential purpose to a unregistered person, so then it will be exempted. So this can definitely be tested, because again there is an amendment in this place. What is that amendment? Registered individual for his family stay, we have an exclusion, so that is exempted now. So now this you don't have to remember, this is the application. This is the application. But what you need to remember is what? Commercial property always taxable under FCM. Residential property, two cases exempted. Residential property, residential purpose to an unregistered person. Residential property to registered individual for his family stay is exempted. Remaining cases taxable. And when it will be coming under RCM, if the residential property is given to a registered person, then only it will be coming under RCM. That is with respect to this discussion. Then, so we have seen S, I, R. S for security lending, I for import of services, R for renting of motor vehicles, and another R for renting of residential property. Okay. Then, next C for copyright services. So, what are the copyrights that we have? So, total 4 copyrights are covered under RCM: original literary, dramatic, musical and artistic works. So, remember, in case of this original literary, dramatic, musical works and artistic works, basically, so in this original literary, the supplier is author. Dramatic works, so musical works and artistic works, basically they are individuals. Okay. So, because copyright will be given only for individuals. So, individuals, this is like actually original work copyright. So, the music company has got a copyright. So, I am the music director. I gave the music copyright to a music company. Now, it will come under RCM. Now, the music company will give the copyright to any other person. That will come under RCM? No, it will be FCM only. You got it? So, only when the individual as a music director or individual as a dramatic work or individual artist, if they are giving it to a supplier as a recipient, then it will come under RCM. Is it clear? So, basically these are by individuals. These are by individuals. So, because they are having the original work copyright. Okay. Now, is there any exemption with respect to this? No. It will always be covered under RCM. No conditions for RCM also. But in case of original literary, there is one non-applicability of RCM. What is that? If the author opts to pay GST under FCM, then the author only will be paying GST under FCM for the next 1 year from the date of exercising the option. So, lock-in period is 1 year from the date of exercising the option. If author opts to pay GST under FCM. Why will author opts to pay GST under FCM? Because if my outward supply is covered under RCM, I cannot take ITC on my inward supply. Due to that reason, I will opt to pay GST under FCM mainly to take the ITC. But if I opt to pay GST under FCM as an author, for the next 1 year, I only should pay. RCM to FCM, no lock-in. Anytime we can shift. But FCM to RCM, there is a lock-in for 1 year. In all other cases, there is no option. Always it will be RCM. Then next one, GTA services, goods transport agency services. So, basically, who is a goods transport agency? Any person providing the service by way of transportation of goods by roadways and issues a consignment note by whatever name called is called as a goods transport agency. In case of goods transport agency, there are 3 exemptions. Number 1, if they are transporting notified goods, it is exempted. What are those 6 notified goods? Agricultural produce, then food grains including flour, pulses, then milk and salt. Flour, pulses, milk and salt. Okay. Then organic manure, newspapers and magazines, relief material for natural or man-made disasters, and then defense and military equipment. These are the 6 notified goods transported through GTA. The freight collected will be exempted. Okay. So, again, what are the 6 notified goods? Agricultural produce, food grains including flour, pulses, milk and salt, organic manure, newspapers and magazines, relief materials for natural and man-made disasters, defense and military equipment. Then second exemption you see, if the recipient is individual, HUF or artificial juridical person who are unregistered, all 3, individual, HUF and unregistered like AJP unregistered, and they are not having factory, then also services, GTA services provided to them is exempted. Then if the recipient is registered only to deduct TDS, so this is not income tax TDS. Everywhere recipient registered only to deduct TDS means under GST section 51, then also it will be exempted. These are the 3 GTA services which are exempted. In remaining cases it will be taxable. Wherever GTA service is taxable, again GTA is having 2 options. Option 1, FCM, they can pay GST under FCM, or option 2, RCM, where the recipient will pay GST. In case of RCM, the rate, here rates you should remember, in case of RCM the rate will be 5%, and recipient who pay GST under RCM 5%, they can take ITC. For example, I am GTA service provider here, you are my recipient, now I am not going for FCM option, then it will be RCM. So you only require to pay GST 5%. Can you take ITC of that 5%? You can take ITC of that 5%, no issue. You are only going to pay and you will only take ITC. But there is FCM option also. So GTA can go for FCM option. Under FCM option, there are 2 rates available to GTA. What are the 2 rates? 12% with ITC and 5% without ITC. Okay. Now GTA can choose either 12% or 5% invoice wise, it is up to them. But this FCM option or RCM option, they need to choose for every financial year. 12%, 5% invoice wise they can choose. But this FCM, RCM option, lock-in period is financial year. If GTA opts to pay GST under FCM, then lock-in period is financial year. Means not like 1 year from the date of exercising the option. Can you tell me what is the difference between this and this? Here it is 1 year from the date of exercising the option. Here it is 1 financial year. Financial year wise they need to choose. And that too, when they need to choose, they need to choose between 1st January to 31st March of the preceding financial year they need to choose, which means it's like this. Say for the financial year 2023-24, for financial year 2023-24, GTA is under FCM option. GTA is under FCM option. Now for 2024-25, they want to go for RCM. They want to go for RCM. Then when they need to choose, if they want to go for RCM, in this 2023-24 last quarter is there na? 2023-24 Q4. What is it Q4? Jan to March. In this Jan to March, they need to select the option. Okay. So select RCM option. If they select RCM option, then for the financial year 2024-25, they will be under RCM. Again, 2025-26, they did not select anything in 24-25. So by default, they will be continuing in RCM option. If they have not selected anything, no need to select again. And 2026-27, and they don't want to go for FCM, so they don't have to do any selection. But in 2027-28, they want to go for FCM. So what they should do? Whenever they shift, now you need to take the Q4 of 2026-27, that is Jan to March. In this Jan to March, they need to select FCM option. Okay. Select FCM option. So this is how GTA has to choose. This is the amendment. Previously this point was not there and now they have added. So what is the selection period? Q4. Previous year Q4 is the selection period. Okay. So they have to choose either FCM or RCM, and that will be continuing throughout. Okay. So see this wording. So option to be exercised between 1st Jan to 31st March of the preceding financial year. Okay. And what is the rates applicable to them? So for GTA services, what are the rates applicable to GTA services? Either FCM or RCM. So GTA service divide into 2, option 1, option 2. Option 1 is FCM. Option 1 is FCM versus option 2. Option 2 is RCM, and this they need to choose with respect to each financial year, correct? Each financial year they need to choose. Again under FCM they have two rates. What are the two rates? 12% with ITC versus 5% without ITC. 5% without ITC. Now what about this with respect to each invoice? With respect to each invoice they will choose. And RCM always it will be 5% at the rate of 5%. Now whether 12% or 5% or 5%, all these cases recipient can take ITC. Whether supplier is paying 12% or supplier is paying 5% or recipient is paying 5%, recipient can avail ITC. Recipient can avail ITC. Then this with ITC, without ITC is for whom? To the supplier. So supplier cannot take ITC on his inward supplies. Who is the supplier here? GTA service provider. They cannot take ITC on their inward supplies. You understood or not? For example, GTA is purchasing a lorry, and on the lorry can they take ITC? Yes, if their outward supply is taxable at 12%. If their outward supply is taxable at 5%, can they take ITC on the lorry? No. So that with ITC, without ITC is to the supplier, not to the recipient. Recipient can always avail ITC with respect to this. This is what you need to remember for GTA services. Then next. So look into the next one. So far what we have seen is Sir CG, S for security lending, and I for import of services, and R for renting of motor vehicles, another are renting of residential property, C for copyright services, G for GTA services. In this, so we have some exemptions. Conditions so far we have seen in which place? Two places only we have seen conditions for RCM. That is, in case of renting of motor vehicles, supplier should be other than body corporate, recipient should be body corporate, rate of GST should be 5%. So if any one condition not satisfied, it will be FCM. Then again, renting of residential property also we saw condition for RCM. What is the condition for RCM? That the recipient should be registered. Okay. So we'll take a break because we have some more points, government services, etc. and all. A small break we will take, and then we will continue. Okay. Okay, we'll start. Generally, there is one point like CGST, SGST paid in the other state cannot be taken as ITC. So one student has asked me where is it specified in which section, etc. It's not actually specified anywhere in the section. So that is based on CBIC FAQs, and that point is there even in our study material also they have given. So we cannot take ITC with respect to CGST, SGST paid in other state. So believe me, that's correct only. Okay. Then next, G for government services. So we have been seeing list of services which are covered under RCM, in that the government services to business entities. Now if you see here, including services of parliament, state legislature, court or tribunal is now covered under RCM. Previously government service to business entities only covered under RCM, but now that includes even service of parliament, state legislature, that is assembly, then court or tribunal. But generally fees collected by court or tribunal is exempted, no? Fees collected by court or tribunal is exempted. Then how come this point is there? So usually court or tribunal fees will be excluded from supply. It's not exempted, actually it is excluded from supply. But apart from fees collected by court or tribunal in the form of legal fees, apart from legal fees, they will provide some other activities like renting of immobile property, etc. So those activities are covered under supply. So that's what I have given. In case of court or tribunal, it is services other than legal fees. What is other than legal fees? That is renting, etc. Then it will be covered here under taxability. Now, for government services to business entities, we have 14 exemptions, and in these 14 cases, GST not payable. So these are 14 specific exemptions. What are they? Right to Information Act charges, RTI charges. Usually you might be knowing about this a lot. So because you will be applying for your evaluated answer sheets, so that RTI charges which they are collecting, you have to spend money, na? It's not free. Some amount you will pay, 10 rupees or 20 rupees, etc. That amount will be exempted. No need to pay GST on that. Then interdepartmental services provided by one department of central government or state government to another department of central government or state government. For example, Indian Railways providing services to Ministry of Finance, or Ministry of Finance is receiving services from police department. So these are all examples of interdepartmental services which is exempted. Then right to use telecom spectrum. So government is having telecom spectrum, and that telecom spectrum they have allocated to telecom operators, and this allocation was before 1/4/2016. Both one-time charges and annual royalty will be exempted. Suppose if the telecom spectrum is allocated after 1/4/2016, so everything will be taxable. If the allocation is before 1/4/2016, then it will be exempted. Then fourth point, right to use natural resources. What is the difference between third point and fourth point? In the third point it is telecom spectrum. In the fourth point it is natural resources. In the third point both one-time charges and annual royalty is exempted, but in the fourth point only one-time charges is exempted. Then fifth one, right to use natural resources to an individual farmer. So will the individual farmer come under business entity? Yes. So generally business entity means any person engaged in business is known as business entity. Individual farmer will come under vocation. So vocation is also business, therefore individual farmer will come under business entity. So right to use natural resources to individual farmer. It can be assigned any time. Both one-time charges and annual royalty will be exempted. What is the difference between fourth point and fifth point? Fourth point is assignment of natural resources to other persons, whereas fifth point to an individual farmer. Fourth point before 1/4/2016. Fifth point any time. Fourth point only one-time charges exempted. Fifth point both one-time charges and annual royalty is exempted. Then sixth one, merchant overtime charges. So generally customs department will be working after office hours and on holidays, for which they will be collecting some merchant overtime charges for doing the clearances. This extra amount which is collected by customs department is exempted. Then safety certificate charges will be collected by the safety officer for giving a safety certificate for the premises where they need to obtain the safety certificate. So this safety certificate charges collected by safety officer is exempted. Then consideration for tolerating an act. When we enter into contract with the government, we breach the contract. When we breach the contract, government will expect us to pay some damages. So this damages which is collected by the government is called as liquidated damages or amount for breach of contract that will be exempted. That is known as consideration for tolerating an act. Then share of profit petroleum. This share of profit petroleum for assigning right to extract petroleum crude or natural gas is exempted. So in this regard, there is one more point, cost petroleum. Even cost petroleum is also exempted. So now what is this cost petroleum and profit petroleum is all about? So generally government, state government will assign right to extract natural resources, say like any government, it can be state government or central government. So government will assign right to extract petroleum crude or natural gas to leaseholders, and for that the leaseholder is required to pay consideration. That consideration will be annual royalty and share of profit. So government will be giving assignment of right to extract petroleum crude or natural gas. So petrol or natural gas, for which the leaseholder is required to pay a consideration. What is that consideration? Annual royalty. Annual royalty will be payable, plus even share of profit will also be payable. So this is the consideration. Now what will happen? They will form a joint venture. Who will form joint venture? Government and leaseholder will form a joint venture, and in this joint venture, government and leaseholder who forms a joint venture, that joint venture, leaseholder will be the operating member of the joint venture. So they will be generating the petrol or natural resources, that they will be extracting the petroleum crude or natural gas, and they will be getting some revenue from operations. They will get revenue from operations. So this is the joint venture revenue. Now what will happen with respect to this revenue from operations? Here this leaseholder will become operating member of joint venture. Operating member of joint venture. Now let's see what happens to revenue from operations. Revenue from operations, there are two parties. So that is government and leaseholder. Government and leaseholder. First, government will take away the annual royalty, and the leaseholder will take away his expenses. He incurred some expenses for extraction, so that expenses he will recover. That recovery made by the government is known as annual royalty, and that recovery which is made by the leaseholder, recovery of expenses, is known as cost petroleum. Cost petroleum is the name given. This is nothing but recovery of expenses. Recovery of expenses. Now in this case, this recovery of expenses will become supply under section 7(1)AA, whereas this will become supply under section 7(1)A. Why sir it will become supply under 7(1)A? Because before creating a joint venture, they will transfer the right to use natural resources, or they will transfer the right to extract petroleum crude or natural gas. So therefore this particular assignment of right is before creating a joint venture. So due to that reason, at the time when they enter into contract, it was not a joint venture capacity, so that is in the individual capacity only. So therefore it will be supply under 7(1)A. This annual royalty will be taxable or it will be exempted. This annual royalty is taxable. Why? Assignment of right to use natural resources before 1/4/2016 also only one time charges is exempted, but annual royalty will be always taxable. But this cost petroleum, so there is no GST on this. So no GST is what given in the circular. So we can remember it like, now from the revenue we need to reduce from the revenue, we need to reduce annual royalty, and then cost petroleum. Now, the balance that is left is known as profit petroleum. And in this profit petroleum, a percentage share will go to government, share of profit, whereas a share of profit will go to leaseholder. That share of profit which goes to the leaseholder is not a supply, because it is like return on investment. So he is investing and he is recovering his investment in the form of profit. So withdrawal of profit is not a supply. Whereas this share of profit received by the government is for the purpose of assigning right to extract petrol or natural gas. So this will be coming under exempted. So you need to remember total 4 points. Point number 1, and any annual royalty which is received by the government from the revenue, that annual royalty will be taxable. Then cost petroleum, recovery of expenses by the leaseholder, is exempted. And number 4, share of profit received by the leaseholder is not a supply. And third point is share of profit received by the government will be exempted. So 2 exemptions we have. What are the 2 exemptions? Cost petroleum and share of profit, that is profit petroleum. Then annual royalty will be taxable and the share of profit received by the leaseholder is not a supply. So this is about this point you should remember. See the note. Cost petroleum is recovery of expenses by leaseholder, which is also exempted. Share of profit petroleum. What is this profit petroleum? Revenue from operations minus cost petroleum minus royalty for assigning right to extract petroleum crude or natural gas. Even that is also exempted. Then 10th point, registration charges under any law for the time being in force. So for the purpose of incorporating a company or under any law, some registration charges will be collected, like vehicle registration charges or property registration charges. All those registration charges are exempted. Then fee for birth certificate, death certificate, driving license, visa or passport. Basically these are collected from the individuals, but here service is provided by government to business entity on behalf of their employees. So 5 certificates total: birth certificate, death certificate, driving license, visa or passport. Then 12th point, guarantee commission. Government will guarantee the loans taken by public sector undertakings, for which the public sector undertakings will pay a guarantee commission. That guarantee commission earned by the government is exempted. Then excess royalty collection contractor to the extent of variable royalty. Generally what happens is that whenever government is required to collect the royalty from the leaseholder, they will be appointing one intermediary called as excess royalty collection contractor. Government will give the right to this ERCC, excess royalty collection contractor, to collect the variable royalty against a consideration of fixed royalty. So this is like a swap arrangement. ERCC will pay the fixed royalty to the government and will be recovering the variable royalty from the leaseholder. So in this case, on variable royalty, anyhow the leaseholder will pay GST under RCM. So therefore ERCC is required to pay GST only on the differential amount. For example, if the fixed royalty is 50 lakhs and variable royalty is 40 lakhs, on 40 lakhs anyhow leaseholder will pay. Now what is the extra amount that ERCC is paying? So 10 lakhs. On the 10 lakhs ERCC is required to pay GST. What if the variable royalty is 60 lakhs and the fixed royalty is 50 lakhs? On entire 60 lakhs anyhow leaseholder will pay GST. So ERCC is not required to pay any GST, which means ERCC is exempted to the extent of what royalty? Variable royalty. ERCC is exempted to the extent of variable royalty. Then fee for granting national permit. So generally for goods which are traveling throughout the country, so they will be paying national permit charges. That national permit charges are state permit. Whenever we enter into another state taking a commercial vehicle, we need to take the state permit in that state. That state permit charges. These 2 permit charges, national permit as well as state permit charges, is exempted. These are the 14 points that we have under specific exemptions. Then there are 2 general exemptions. Apart from these 14 exemptions, any other activity you need to see whether it is provided to a business entity whose turnover during previous year does not exceed threshold limit. If it is renting of immovable property, this first point general exemption not applicable. So services other than renting of immobile property to a business entity whose turnover during previous year does not exceed threshold limit, then it is exempted. And second general exemption is if it is any activity apart from 14 activities. See, 14 activities always exempted. Apart from the 14 activities, any other activity provided to business entity where the value of supply does not exceed 5,000 rupees, then it is exempted. Whether this 5,000 rupees point is applicable even in case of renting of immobile property? Yes. But remember, in case of continuous supply of services, what is a continuous supply of service? A service which takes more than 3 months to complete and involves periodic payment obligations. So this 5,000 rupees should be seen for a financial year. This 5,000 rupees is not per invoice. This 5,000 rupees is for a financial year. Understood or not? Now, so for example, there is an advertising company. That advertising company, they started business during current year. Previous year, the turnover was 0. Now, government is providing the services by way of allowing the advertising company to place the hoardings, for which advertising company has to pay some charges. So, this services provided by government to the advertising company is not in the 14 exemptions, and it is other than immobile property, renting of immobile property. So, the charges collected by the government is exempted. Why it is exempted? Because that advertising company turnover during the previous year does not exceed threshold limit. Due to that reason, it is exempted. Second case, suppose Department of Police is providing security services to one hotel, and that hotel turnover during the previous year exceed threshold limit, but the charges paid to police department is only 4,000 rupees. Is it taxable or exempted? It is not covered under the first exemption because the turnover of the hotel during previous year exceed threshold limit, but it will come under the second exemption. Why second exemption? Because the value of supply does not exceed 5,000 rupees. These are the various exemptions with respect to services provided by government to business entity. Is there any conditions for RCM? No, and always it will be coming under RCM. Whereas in one case, two cases, RCM will not be applicable. What are those two cases? One point I told you, Indian Railways will always be coming under FCM. So in case of supply of goods or services by Indian Railways, always it will be FCM. One more case also RCM not applicable, that is renting of immobile property to an unregistered business entity. So there is a unregistered business entity. To that unregistered business entity, government has given immobile property on rent, then government only will pay GST under FCM. Suppose if the business entity is registered, then business entity will pay GST under RCM. So remember, basically all services provided by government to business entity, wherever it is taxable, it will come under RCM. But in two cases, it will be FCM. Number one, renting of immobile property to an unregistered business entity. Number two, services or goods supplied by Indian Railways will also be FCM. Then next, O for overseeing committee. Overseeing committee is providing services to RBI. Overseeing committee services to RBI. Now, in that case, liability to pay GST is on RBI, and we don't have any exemptions, we don't have any conditions for RCM, and we don't have any non-applicability of RCM. Then T refers to TDR, FSI and long-term lease of land. So, transferable development rights. So, whenever government takes over the property of a person, so instead of giving compensation, they will be giving a TDR to that person, transferable development right. What that person can do with the TDR? He can give the TDR to any builder to exceed the FSI of a property. So for that, the builder will be paying some money to this landowner, so who is transferring the TDR. Same way, I have some unutilized FSI that I will be giving to a promoter or builder, for which I will get some consideration. Or I have a land which I am giving on long-term lease, for which I am getting some upfront lease amount. So these three amounts, I will not pay GST as a landowner. The promoter or builder will pay GST under RCM. So in which case it will be RCM? Transfer of TDR, FSI and long-term lease of land. So is there any exemption with respect to this? Yes. Proportionate exemption to residential units booked before completion certificate or first occupation, whichever is earlier. How to calculate this exemption? So value of TDR or FSI or long-term lease. Okay, value of TDR, FSI or long-term lease into 18%. into what is the exemption? Area of residential units. Area of residential units booked before completion certificate or first occupation, whichever is earlier, divided by total carpet area of project. So this will be the formula for exemption. So first we need to see what is the value of the TDR, FSI and long term lease, and it will come under RCM. So who will pay GST? Promoter or builder will pay GST under RCM. So on this TDR, FSI long term lease, what is the rate of GST? 18%. Into to what extent it will be exempted? Area of residential units booked before completion certificate or first occupation, whichever is earlier, divided by total carpet area of the project. Say for example, 20 units are residential units and the 20 units carpet area is somewhere like 10,000 square feet and total carpet area of the project is 30,000 square feet. Then 10,000 divided by 30,000, that is a proportionate exemption which will be available, and remaining will be taxable, and the promoter or builder will pay GST under RCM. So this transferable development rights, floor space index or long term lease of land, who transfers it to whom? By landowner to promoter or builder. By landowner to promoter or builder. So the promoter or builder will pay GST under RCM. Then, so we have seen sir, CG got. Now we are moving on to this salads, in that yes, sponsorship services. In case of sponsorship services, who is the supplier? Organizer of the event is a supplier and the recipient will be sponsorer. And is there any exemption for sponsorship? Yes, sponsorship of a recognized sporting event is exempted and any other sponsorship will be taxable. And conditions for RCM, in case of sponsorship, if the recipient is body, corporate or firm, then only it will come under RCM. If the recipient, who is recipient? The one who pay the sponsorship money. If the recipient is other than body, corporate or firm, it will be coming under FCM. See that sponsorship services, exemption, sponsorship of a recognized sporting event, conditions for RCM, recipient should be body, corporate or firm, and non-applicability of RCM, recipient is other than body, corporate or firm. Basically in sponsorship services, who is the recipient here? Who is the supplier and who is the recipient? Because we get confused with respect to that aspect generally. So in case of sponsorship services, supplier is organizer of event. Supplier is organizer of event and recipient is sponsorer. Recipient is sponsorer. And then we have agent services. In that agent services, the first point is insurance agent. There is an insurance agent who is providing services to the insurance company, and on the commission, what insurance agent will get commission? On the commission, who will pay GST? Insurance company will pay GST. But there is one exemption. If the insurance agent is a business facilitator or a business correspondent working in rural area, the commission earned by this insurance agent will be exempted. So service of business facilitator or correspondent in rural area is exempted. Is there any condition for RCM? No. And non-applicability of RCM? No. Recovery agent. Remember, recovery agent. Here, insurance agent will be providing services to whom? Insurance agent to insurance company. Insurance agent to insurance company. Then recovery agent will be providing services to whom? Recovery agent to banking company. Okay. Recovery agent to banking company. Then only it will be coming under RCM. Is there any exemption? No. And is there any conditions for RCM? No. Non-applicability of RCM? No. Why I told you to banking companies? Basically recovery agents will be for banking company. There is a possibility that there is a trader who appointed a recovery agent to recover the outstanding debts, bad debts and all. Now in that case, this recovery agent services will come under FCM or RCM? FCM only. Only recovery agent who is working for a bank will come under RCM. So all these points, recovery agent, direct selling agent, business facilitator, agent of business correspondent, etc., all these people are in the context of a banking sector. Clear? So it is not related to other sectors. Everything is with respect to banking sector. banking sector, that includes banking company, financial institution and NBFC. Everyone will be covered in this, okay. So with respect to banking sector, it will be applicable. So recovery agent to a banking company or a financial institution or a NBFC, okay. Then direct selling agent, again direct selling agent will be providing services to whom? To a banking company. Basically, what is the work of a recovery agent? Recovery agent will do the recovery of outstanding loans, whereas direct selling agent will promote the banking products. Both people will get the commission. But see there, recovery agent always RCM, means bank will pay GST under RCM. But in case of direct selling agent, if the direct selling agent is, other than body corporate or firm, then only it will come under RCM. If the direct selling agent is body corporate or firm, it will come under FCM, okay. For example, individual direct selling agent gets a commission. Who will pay GST? Bank will pay GST. If it is a firm direct selling agent in a firm capacity or direct selling agent as a body corporate, if they get the commission, who will pay GST? FCM. The direct selling agent only should pay. Then business facilitator to a banking company. There is a business facilitator who is providing services to a banking company. If the business facilitator is working in rural area, the commission earned by that business facilitator is exempted. Basically, business facilitator will do what activities? Money remittance activities. They will not do anything. So on behalf of the bank, they will do money remittances, for which they will be getting a commission. And if they are working in rural area, it will be exempted. If they are working in urban area, it will be taxable. And who will pay GST in this case? Banking company will pay GST under RCM. And see that services by business facilitator in rural area exempted. We don't have any conditions for RCM, non-applicability of RCM. Whereas agent of business correspondent to business correspondent. Business correspondent is also an agent appointed by the bank to extend its banking operations in the places where there is no branch, and this business correspondent will do all the activities which as a branch manager will do, like account opening, loan processing, check deposit, check collection, etc. So this business correspondent services is not covered under RCM. Agent of business correspondent to business correspondent is only covered under RCM, where liability to pay GST is on business correspondent. But there is one exemption in this regard. If the agent is working in rural area, then that is exempted. And in other case, it will be taxable, and we don't have any conditions for RCM and non-applicability of RCM. Related to this business facilitator and correspondent, so some more detailed analysis is there. You listen. That is, there is a banking company, and that banking company is having rural area branch and urban area branch, and this banking company is having a rural area branch and urban area branch. Now, with respect to its rural area branch, they appointed a business facilitator. And business facilitator Mr. A is appointed for rural area branch, and Mr. B is appointed for urban area branch. Again, agent of business facilitator means agent of Mr. A and Mr. B. For Mr. A, Mr. X is appointed as agent, and for Mr. B, Mr. Y is appointed as the agent. Now say this. Now, A will provide services to the rural area branch, and for these services, the rural area branch will pay the commission. What is the answer for this commission? Is it taxable or exempted? It is exempted, because business facilitator getting commission from the rural area branch is exempted. Same way, here this agent of business facilitator Mr. X is providing services to Mr. A, for which Mr. A will pay some commission. What is the treatment of this commission? This commission will be exempted or taxable. This is also exempted. As the main agent's commission is exempted, sub-agent's commission is also exempted. So what you need to remember? Business facilitator or agent of business facilitator getting commission from the rural area branch is exempted. Now, Mr. B will be providing services to urban area branch. Mr. B will provide services to urban area branch, for which Mr. B will get some commission from the bank. Whether it will be taxable or it will be exempted. It will be taxable and it will come under RCM. Then who will pay GST on this commission? So the banking company will pay GST under RCM. Whereas Mr. Y provides services to Mr. B, for which Mr. B will pay some commission. So this commission is taxable or exempted. As the main agent's commission is taxable, sub-agent's commission is also taxable, and it will come under FCM or RCM. It will be coming under FCM. So where the liability to pay GST is on Mr. Y, and it will not be coming under RCM. So therefore agent only will pay, which means what is the conclusion we can draw? Business facilitator shall not pay GST on outward supplies and inward supplies. So that is the point you need to remember for business facilitator. Whereas if it is business correspondent, what will happen? So the same story, let's see it from business correspondent point of view. It is making me write again here. 1 second. I'll write again. So banking company, rural area branch, and urban area branch, and Mr. A, Mr. B, and this is business correspondent. Now agent of business correspondent, Mr. X and Mr. Y. Now Mr. A provides services in rural area branch and they get a commission. What is the treatment of this commission? This commission will be exempted. Sir, even for business facilitator, same point, yes. Business facilitator as well as business correspondent, everyone it will be same. If they are working in rural area branch, the commission what they are getting will be exempted. Same way, Mr. X will be providing services to Mr. A, and for which Mr. A will pay some commission. What is the treatment of this commission? This commission is also exempted. So business facilitator, what is the first point you need to remember? Business facilitator, agent of business facilitator, business correspondent, agent of business correspondent, earning commission from the rural area branch is exempted. Now in case of urban area branch, Mr. A, Mr. B will provide services to urban area branch, and for which this urban area branch will pay some commission. What is the treatment of this commission? This commission will be taxable and it will be coming under FCM or RCM. So we don't have any RCM in this case. So therefore it will be coming under FCM. So therefore liability to pay GST is on the business correspondent. Same way, Mr. Y provides services to Mr. B, for which Mr. B will pay the commission, and this commission will be taxable or exempted. It will be taxable. Why it will be taxable? As a main agent's commission is taxable, this is also taxable, but it will come under RCM. That's the last point. So agent of business correspondent to business correspondent means the GST will be payable by the business correspondent. So 3 points you need to remember. First point, business facilitator, agent of business correspondent, earning money from the rural area branch, exempted. Second point, business facilitator shall never pay GST on their outward supplies and inward supplies. On their outward supplies, bank will pay. On their inward supplies, agent will pay. Whereas business correspondent will always pay GST on their outward supplies, inward supplies. On their outward supplies to bank, they will pay GST. On their inward supplies also, they will only pay GST. That is the discussion related to this business facilitator and correspondent. Then look into the next one. So in that salads, yes, sponsorship services, A for agent services. Who are the 5 agents covered under RCM? Insurance agent to insurance company, recovery agent to bank financial institution NBFC, direct selling agent to bank financial institution NBFC, business facilitator to a banking company. For NBFCs and all, there is no concept of business facilitator, okay, due to that reason. So banking company only. Business facilitator to a banking company, agent of business correspondent to business correspondent. Then L refers to legal services. Legal services provided by individual advocate or firm of advocate, including a senior advocate. So here for individual advocate other than senior advocate and firm of advocates, we have 4 exemptions. First, for advocate services, we have 4 exemptions. What are the 4 exemptions for advocate services? If they are providing services to a person other than business entity, it will be exempted. Who is other than business entity? Individual. So individuals basically who receive the services for their personal purpose will be coming under other than business entity, and that service of advocate will be exempted. Second exemption, you see, if they are providing services to another individual advocate or firm of advocate, it is exempted. And third exemption, if they are providing services to government, so which is central government, state government, local authority, government authority or government entity, not government agency, government authority or government entity, not to the government agency, okay. So services to central government, state government, local authority, government authority or government entity, not to government agency. And one more point is that services provided to a business entity whose turnover during previous year does not exceed threshold limit. These are the 4 exemptions for advocate services, either individual advocate or firm of advocate. I will tell you how to simply remember this, okay. So for individual advocate or firm of advocate, we have 4 exemptions. What are the 4 exemptions? If they are providing services to a person other than business entity, exempted. If they are providing services to central government, state government, local authority, government authority or government entity, exempted. If they are providing services to another individual advocate or firm of advocate, exempted. If they are providing services to a business entity whose turnover during previous year does not exceed threshold limit, exempted. In that, the third point is there no exemption. The third point is not applicable to senior advocate who is providing services. Actually 4 exemptions, but in case of senior advocate, there is only 3 exemptions. That is first point, second point and the 4th point. So this third point is not applicable in case of services provided by a senior advocate. Means if senior advocate is providing service to individual advocate or firm of advocate, what will happen? Then that individual advocate or firm of advocate will in turn have one litigant, applicant or petitioner. That litigant, applicant or petitioner will be taken as the recipient, okay. And if that recipient is other than business entity, exempted. If that recipient is government, exempted. If that recipient is a business entity whose turnover during previous year does not exceed threshold limit, then it will be exempted. In other cases, it will be taxable, okay. So this point is not applicable to senior advocate. So if senior advocate is providing services, then what we need to do? So as this point is not applicable to a senior advocate, if senior advocate is providing services, if senior advocate is providing services to individual advocate or firm of advocate, individual advocate or firm of advocates, comma, litigant or applicant or petitioner deemed to be recipient. I have not given this point here because it's already covered in the exemptions. It's there in the exemptions. I have just given this as a connecting point here, but it's there in the book, don't worry. So this is about legal services. And any conditions for RCM? No. Any non-applicability of RCM? No. Then next one, arbitrator services. Arbitrator services, same, first, second, fourth exemption. What is that first? If arbitrator is providing services to a person other than business entity, exempted. If the arbitrator is providing service to central government, state government, local authority, government authority or government entity, exempted. If the arbitrator is providing services to a business entity whose turnover during previous year does not exceed threshold limit, it is exempted. Sir, what if arbitrator provides service to individual advocate or firm of advocate? Hypothetical, it will not arise, because arbitrator is doing out of the court settlement. Advocate is doing so through the court settlement. So through the court he will argue the disputes, so settle the disputes, which means that arbitrator will not provide services to an advocate, advocate will not provide services to an arbitrator. It is hypothetical. If at all service is provided, that will be provided to them in their personal capacity, means it will come under other than business entity, so therefore it will be exempted. Okay, so that is about this arbitrator services. Then look into D, in that salads, S for sponsorship services, A for agent services, L for legal services by individual advocate or firm of advocate, another A is for arbitrator services. Now D refers to director services to company or body corporate, and in that case do we have any exemption? We don't have any exemption, but one not a supply point is there. What is that not a supply? If the director is an employee of the company, there is no GST, because employee to employer in the course of employment is excluded from supply. If the director is an employee of the company or body corporate, then it is not a supply. And is there any conditions for RCM? No. And is there any non-applicability of RCM? Yes, one case, that's an amendment. What is it I told you? Director is providing services in the personal capacity. Then last, security services, security agency services. There is a security agency which is like a manpower supply agency which supplies the manpower called as security personnel. But not all manpower agencies are covered under RCM. Only security agency providing services to a registered person. Is there any exemption? No, we don't have any exemption. First condition, supplier should be other than body corporate and recipient should be registered. What if supplier is body corporate? It will not come under RCM, FCM. So supplier should be other than body corporate, recipient should be registered but not opting for composition scheme or not registered only to deduct TDS. Suppose if registered, recipient is registered, opting for composition scheme, then also FCM. If recipient is registered only for deducting TDS, then also it will be FCM. In other case only it will be RCM. If any one condition is not satisfied, automatically it will come under FCM. So what are the two conditions? Supplier should be other than body corporate, recipient should be registered but not opting for composition scheme and not registered only to deduct TDS. So this is about Sir CG got salads, list of services which are covered under RCM along with exemptions we have seen. These exemptions point, again it will be coming under exemptions, but we have to learn here itself, so that we need to learn it together. Okay, so this way only you remember while you are learning also. Then next one is 9 subsection 4. When 9 subsection 4 is applicable, I told you already, there is a inward supply by a promoter or builder from an unregistered person. So promoter or builder who is making inward supply from unregistered person, we need to check, is it capital goods or is it cement or balance inputs and input services. We need to do the answer, if at all we get a question, in the same format. First, step number 1, capital goods, whether it is purchased from a registered person or unregistered person. If the capital goods are purchased from a registered person, then no need to pay any GST under RCM, because already we purchased from a registered person, he will be charging GST to us. Whereas if the promoter or builder is purchasing capital goods from an unregistered person, that unregistered person will not be charging GST to promoter or builder. So promoter or builder is required to pay GST under RCM 9 subsection 4. At what rate? At the rate applicable to the capital goods. Then second step, cement. cement should always be purchased from a registered person, just like capital goods. If cement is purchased from an unregistered person, GST payable under RCM at the rate applicable to cement. What is the rate applicable to cement? 28%. Say this, cement purchased from a registered person, GST not payable under RCM. If cement is purchased from unregistered person, if cement is purchased from registered, GST not payable under RCM. From unregistered person, GST payable under RCM at 28%. Now, you have to see the balance inputs and input services from unregistered person divided by total inputs and input services. So, why balance inputs and input services? Cement already we considered. So, balance inputs and input service from unregistered person divided by total. In the total, cement also we need to take, and there are few things which you should exclude from the balance total. From the total, what are they? Total 5 things we should exclude. What are they? Electricity. Why? Because electricity is exempted. So therefore, definitely the supplier will be unregistered person. TDR FSI long term lease. Why? Because TDR FSI long term lease is anyhow covered under RCM. So why we need to again bring it under 9 subsection 4. Then petrol, diesel and natural gas. Petrol, diesel and natural gas, non-GST, there is no GST at all. So naturally, we would have purchased it from an unregistered person, so that should be taken out. Okay. So balance inputs and input service from unregistered person divided by total inputs and input service, including cement, excluding TDR, FSI and long-term lease, electricity, petrol, diesel and natural gas. Now you need to check how much is this. If it is less than or equals to 20%, no issue, it is allowed, because we can buy 20% from an unregistered person. So it is allowed. No need to pay GST under RCM. What if it is greater than 20%? We need to pay GST under RCM on the excess over 20%. What is the rate of GST applicable for that? 18% is the rate of GST. So this as it is, you will not be able to understand or get the clarity. We will see with one illustration here. Say you are a promoter or builder and you are making purchases from an unregistered person. Okay. So say this, promoter or builder is having inward supplies during a financial year. Inward supplies during a financial year. In that, from unregistered person and from registered person. From unregistered person and registered person. Capital goods. Capital goods, rate of GST is 18%. Rate of GST is 12%. 12%. From unregistered person, 40 lakhs, and from registered person, 20 lakhs. Then cement. Cement is purchased from unregistered person, 10 lakhs, and what is the rate of GST for cement? 28%, and from registered person, 30 lakhs. Then we have TDR, FSI from unregistered person, and what is the rate of GST for TDR, FSI? 18%, from unregistered person, 5 lakhs, nothing is from registered person. And then other inputs and input services. Other inputs and input services, we have different rates. Some are 5%, some are 12%, some are 18%. And from unregistered person, 20 lakhs, and from registered person, it is 30 lakhs. Okay. Now, this is the story. What is the total? What is the total that you need to do? So, in this case, what is the first step? The first step is capital goods. We need to check whether capital goods is purchased from a registered person or unregistered person. Capital goods, how much is purchased from registered person? 20 lakhs. Are we required to pay any GST under RCM? No. So we need to, so the question here is compute GST payable under RCM under section 9 subsection 4. So capital goods purchased from an unregistered person. So on that only we need to pay GST. What is the value of the capital goods purchased from unregistered person? 40 lakhs. 40 lakhs into 12%. That will be 4 lakh 80,000. Then second step, cement. Cement is purchased from unregistered person. Registered person, no issue. For an unregistered person, how much is cement purchased from unregistered person? 10 lakhs. 10 lakhs into 28%. That will be 2 lakh 80,000. And then we need to take TDR or FSI. TDR, FSI should be ignored, correct? Other inputs and input services from unregistered person. Other inputs and input services from unregistered person divided by total inputs and input services into 100. Total inputs and input services into 100. So what will be taken in the numerator? Other inputs and input service from unregistered person 20 lakhs divided by total. What will be taken in the total? 10, 30, 20, 30. Don't take 5. TDR, FSI will not come. Capital goods also will not come in the denominator. So but cement will come. So 30 plus 10, 40, and 30 plus 10, so that is 50. So therefore 90 lakhs. So 20 lakhs divided by 90 lakhs into 100. How much is the percentage? 22.22, which is greater than 20%. So we need to pay some GST under RCM. What is the GST that we need to pay under RCM in this case? So in this 90 lakhs, what is the excess amount beyond 20%? 2.22. Exactly 22 or 2222222? Okay. So then you do that in calculator. 90 lakhs into 2.222222 percentage into what is the rate of GST? 18%. Even though some of the goods are 5%, 12%, 18%, but we need to take always 18% only. So what is that 18%? 90 lakhs into 2.22% into 18%. That is 36,000. 36,000 will be taken as a GST payable. So therefore, what is the total GST payable under 9 subsection 4? So total GST under section 9(4) is 4,80,000 plus 2,80,000 plus 36,000. 7,96,000. So this is how you need to arrive at the answer. Step number 1. What we did for step number 1? Capital goods purchased from registered person. We are not required to pay. Excuse me. So we are not required to pay any GST under RCM. But capital goods are purchased from unregistered person. We need to pay GST under RCM at the applicable rates of GST. So that's what we did for capital goods. Purchased from registered person, we have not paid any GST. Purchased from unregistered person, we need to pay GST at the rate of 12%. That came to 4,80,000. Then cement. Cement purchased from registered person, GST not payable under RCM. Unregistered person, GST payable under RCM at 28%. So cement purchased from unregistered person, 30 lakhs. We are not required to pay GST, but on this 10 lakhs we need to pay 28%. That's why 2,80,000 we got. Then balance inputs and input service from unregistered person divided by total inputs and input services including cement but excluding TDR, FSI. So accordingly we have taken total. In the total 10, 30, 20, 30, 90 will come, and balance inputs from unregistered person is 20. So 20 by 90, 22.22. Is it less than 20% or more than 20%? If it is less than or equals to 20%, GST not payable under RCM, because 20% is allowed. If it is greater than 20% on the excess amount, GST payable under RCM on the excess over 20%. What is the excess over 20%? 2.22. So total 90 lakhs into 2.22% into 18%, that is 36,000. So 4,80,000 plus 2,80,000 plus 36,000, 7,96,000 will be GST payable under 9 subsection 4. So there are two questions here. Sir, will the GST paid under 9(4) will be CGST and SGST? Possible. If it is intrastate purchases, CGST and SGST will be possible. Whether 9 subsection 4 is applicable for government entities, to everyone it will be applicable. We don't have any relaxation, provided that government entity is a or the public sector undertaking is a promoter or builder, they should be engaged in construction. For them also it will be applicable. This is common for everyone, we don't have any relaxation. This is about 9 subsection 4. Then 9 subsection 5 you see, liability to pay GST on e-commerce operator in case of notified services. So what are the four notified services? Housekeeping services, accommodation services, transportation of passengers, and E for eating food from the restaurant. Now, in this case, how the supplier should be? For housekeeping services, supplier should be unregistered. Accommodation service also, supplier should be unregistered. In case of transportation of passengers, okay, supplier can be registered or unregistered. In case of eating food from the restaurant, supplier can be registered or unregistered. Now, there is non-applicability of 9.5. This is very, very important, you should remember. When 9.5 is not applicable, listen. When for housekeeping service 9.5 not applicable, if the supplier is registered. And when in case of accommodation service 9.5 not applicable, again if the supplier is registered. And in case of transportation, there is an amendment. When 9.5 is not applicable, if it is omnibus, transportation of passengers through omnibus by a company, there is a company which is transporting the passengers through omnibus. What is a omnibus? So a vehicle which is having a capacity of greater than 6 passengers is called as a omnibus. You can see there. So other than omnibus, capacity greater than 6 passengers by a company. Mainly why they brought it? Because there are a lot of travel agencies which are operating their businesses as a company and which will be providing transportation of passengers through bus. Okay, lot of travels are there na, Parveen Travels and then many travels. So Orange Travels like that is there, TAT Travels like that and all is there. Once you go to this bus station, you will be seeing if you want to go to any place in south like Madurai or Tiruchi etc. and all, lot of private bus operators you will be seeing. So these private bus operators mostly will be registered as a company. They will be incorporated as a company. So they don't want in this case e-commerce operator to pay GST. That's why it has been excluded from 9 subsection 5. So in case of transportation of passengers through e-commerce operator, whether the supplier is registered or unregistered, 9.5 will be applicable. Only one exception. What is that one exception? If it is omnibus by a company. What if it is transportation of passengers through omnibus by a firm? By a firm, it will still come under 9.5. 9.5. If it is only by a company, it will be coming under exception to 9.5. Exception to 9.5 means who will pay GST? Supplier shall pay GST. Then eating food from the restaurant. Generally in case of eating food from the restaurant, so whether the supplier is registered or unregistered, it will come under 9.5. But here also an exception is there. What is that exception? If there is a restaurant in a hotel, that hotel is having a declared tariff per day, per room greater than 7,500 rupees. So means it's like a 4-star or a 5-star hotel. Per day charges is greater than 7,500. Any one room. And in that hotel, there is a restaurant. That restaurant is selling food through Swiggy or Zomato. Who will pay GST? The restaurant only will pay. E-commerce operator will not pay. So if the restaurant is in the specified premises, that is in a hotel having declared tariff greater than 7,500 per day, so then 9.5 will not be applicable, supplier shall pay GST. So this is very, very important and this can be tested for the exam. Because 9.5 you already know what are the list of services which will come under 9.5. But what they will test is non-applicability of 9.5 they will be testing. Okay. Then see this, some important points in this regard. So there is one query. Sir, but in case of petrol, diesel and natural gas are non-taxable, but in 9.5 it is included in the balance inputs. Okay. So read there here, properly read here, don't ask me here. Had it been class, na, some other word would have come out of my mouth. Clearly I have given here, including cement, excluding TDR, excluding here, see here, properly you see here, excluding TDR, FSI, long-term lease. It's not including, okay. So all these are excluded, only cement will be included, okay. Next. That's why sometimes I should not see the query. Yes sir. Yes. It's already there under RCM. That's why 9.4 it will not come, because it is already covered under 9.3. So that's why we will not be bringing it here. Sir, if a bus has greater than 6 passengers, it will be treated as omnibus. Yes, it will be treated as omnibus only. That's what I said. Capacity greater than 6 is omnibus. So if you ask me the same question, I don't know what to reply. So capacity more than 6 passengers is omnibus only. In case of omnibus, by company 9.5 will not come. By any other person 9.5 will come. Then see these important points. First one, whenever e-commerce operator is liable to pay GST on the above services, they are not required to deduct TCS. There is a concept of TCS under section 52. Remember, TCS under section 52 and 9 subsection 5 are mutually exclusive. Wherever 9.5 comes, TCS will not be applicable. Wherever 9.5 is not coming, TCS will be applicable. Where sir 9.5 not applicable? Many cases. Supply of goods through e-commerce operator, 9.5 will not come. Supply of other than these 4 notified services through e-commerce operator, 9.5 will not come. These 4 notified service also we have exceptions wherein 9.5 will not come. In that case, TCS will be applicable. E-commerce operator is required to pay TCS, remit the money to the supplier after reducing the TCS. Okay. So when e-commerce operator is liable to pay GST on above services, they are not required to deduct TCS. So remember, section 9 subsection 5 and section 52 are mutually exclusive. Then only in case of notified services, e-commerce operator is liable to pay GST. In other cases, who will pay GST? Supplier will pay. For example, Amazon or this Flipkart, Meesho, etc. Supplier of goods through e-commerce operator, who will pay GST? Supplier only will pay. E-commerce operator will not pay GST on the goods. Then e-commerce operator will pay GST on what? Commission. If supplier pays GST on the transaction, e-commerce operator will pay GST on what? Commission. Then every e-commerce operator who is liable to pay GST or who is liable to deduct TCS is compulsorily required to get registered irrespective of their threshold limit. Which e-commerce operators? 2 e-commerce operators are compulsorily required to get registered. One e-commerce operator who is liable to pay GST under 9.5. Another e-commerce operator who is required to deduct TCS. Literally, whenever 9.5 not applicable, TCS will come, which means naturally every e-commerce operator is compulsorily required to get registered. Also, every supplier of goods through e-commerce operator is compulsorily required to get registered under GST, irrespective of their aggregate turnover. However, here also there is one amendment. Sir, previously, supplier of goods through e-commerce operator is compulsorily required to get registered. But now they brought in one amendment which says that if he is making only intra-state supplies, that supplier of goods through e-commerce operator, then he is not required to register compulsorily. He can register only when he cross threshold limit. Until that point of time, he will be obtaining a unique enrollment number, and using that unique enrollment number, he will list his goods with the e-commerce operator, which means can he make interstate supplies? No. So just like that composition scheme, supplier of goods through e-commerce operator can opt for composition scheme, but they should not make interstate supplies. Same way, supplier of goods, if that supplier is making only intrastate supplies, then they should register as and when aggregate turnover exceeds threshold limit for registration. What about service provider? Supply of notified service or supplier of other than notified service through e-commerce operator is required to get registered only when their aggregate turnover exceeds threshold limit. So, therefore, this fourth point is important that can be tested, wherein if there is any supplier of goods through e-commerce operator, if they are making only intrastate supplies, they are not compulsorily required to get registered. They need to register only when aggregate turnover exceeds threshold limit. So these are the points we need to remember. In this regard, there may be a confusion related to who will pay GST on what amount. Okay. So now we can categorize this into two aspects. Okay. 9.5 is applicable, 9.5 is not applicable. You understood? Supplies through e-commerce operator. Say this. Supply of goods or services through ECO. Supply of goods or services through e-commerce operator. We will divide into two. 9.5 applicable, 9.5 not applicable. Section 9.5 applicable. You know now when section 9.5 is applicable and section 9.5 not applicable. Wherever section 9.5 is applicable, on the transaction who will pay GST? GST on transaction. Who will pay? E-commerce operator shall pay. Whereas if 9.5 is not applicable, supplier shall pay. Got it? ECO shall pay GST to government. On what? On the transaction. Whereas here, supplier shall pay GST to government. Now, what is the liability on other person? What is the liability on the other person? Liability on other person. So, e-commerce operator shall pay GST na here, correct, on the transaction. Now, who is the other person? Supplier. What will be the liability on the supplier? There is no liability on that supplier. Why there is no liability on the supplier? Because on the transaction e-commerce operator will pay, but the supplier will receive some share na. On that whether supplier is required to pay any GST? No. Then supplier will just to show it as non-GST outward supplies in the return, but they will not pay any GST on the share. Okay. So liability on other person not applicable. Amount collected by supplier, amount collected by supplier shown as non-GST supplies. Non-GST supplies. Then here, what about the liability on other person? The liability on other person, who is the other person? E-commerce operator. E-commerce operator shall pay GST on what? Shall pay GST on commission and raise invoice to supplier. And raise invoice to supplier. Okay, which can be availed as ITC, which can be availed as ITC by supplier. Simple here. This is what you need to remember. Supply of goods or services through e-commerce operator, wherever section 9.5 is applicable. On that transaction, who will pay GST? E-commerce operator shall pay GST. Now, as a supplier, I will be getting some share. So, for example, you take accommodation services through e-commerce operator, GoIBibo or MAY24 or OYO. OYO will pay GST on the transaction. Whatever money they collect from the guest, they will pay GST. Now, they will give me some share. Say, for example, 75-25 is the ratio. They will pay GST on full amount. Then they will remit 75% to me. On that money which is remitted to me, should I pay any GST? No, not required. And I will just account it in my books as non-GST supplies. There won't be any GST. Just for accounting purpose, I will account it as non-GST supplies. Is it clear? Whereas section 9(5) not applicable. So for example, if I am selling goods through Amazon or Flipkart, I will pay GST on the transaction, whereas that Amazon or Flipkart will get a commission. On that commission they will pay GST and they will raise invoice to me, and I can take ITC with respect to that. Okay, that is with respect to supply of goods or services through e-commerce operator. And we completed segment 3, that is RCM and its related exemptions. Look into segment 4, levy and collection under IGST. So there are few sections of IGST that we need to know. First, section 7 and section 8. Section 7 talks about interstate supply. Section 8 of IGST talks about intrastate supply. What is the meaning of interstate supply? If location of supplier and place of supply is in 2 different states or 2 different union territories or a state and a union territory, then it will be interstate supply. And import of goods and import of services are always deemed as interstate. Apart from that, there are few more deemed interstate also. That is, if location of supplier in India and place of supply outside India, then also it will be deemed interstate, where the supplier should be India and the recipient should be outside India, then also it will be deemed interstate. Then supply to SEZ or supply by SEZ, that is also deemed interstate. Then 75C, 75C says supply in India and not elsewhere covered. In the 2 points are there. Number 1, supply beyond territorial waters and up to 200 nautical miles from the baseline. So that is also deemed interstate. And place of supply is determined under section 13, and that place of supply is in India, then also it will be deemed interstate. Okay. For example, say this. So what happens is that generally the place of supply in case of service in relation to immobile property is location of immobile property. So there is a supplier who is an architect. There is an architect, and this architect is located in Mumbai, Maharashtra, and this architect is providing services to Elon Musk, Mr. Elon Musk. So who is a person located in US, and to this Elon Musk, this architect is providing services in relation to a property. Where is that property located? That property is located in Mumbai, Maharashtra. Now, in this case, we need to determine the place of supply under 12 or 13. So, place of supply will be determined under section 13. Why place of supply will be determined under section 13? If any one person in India and the other person is outside India, the place of supply is determined under section 13. And that place of supply will be location of property. So, what is the location of property? The location of property is Mumbai, Maharashtra. That will be taken. What is the location of supplier? Location of supplier also Maharashtra. When location of supplier is Maharashtra, place of supply also Maharashtra, logically we will think that it is an intrastate supply. No, as the place of supply is determined under section 13, it will be deemed interstate, means it will not become intrastate, it will be deemed interstate, and section like IGST will be applicable. Okay, so once the place of supply is determined under section 13, and if the place of supply is in India, don't apply intrastate, it will always be deemed interstate. That is about this. Then next, suppose if the supply takes place in the territorial waters, what will happen? So this is the baseline of India, and from the baseline of India up to 12 nautical miles will be called as territorial waters. Up to 12 nautical miles is known as territorial waters, territorial waters, and beyond 12 nautical miles and up to 200 nautical miles is known as, up to 200 nautical miles is known as exclusive economic zone, exclusive economic zone, and beyond 200 nautical miles is known as high seas, is known as high seas. And India extends up to 200 nautical miles from the baseline. So up to 200 nautical miles is called as India. Now there is a supplier who is located in India and the place of supply is in territorial waters. Supplier in India, place of supply is in territorial waters. It will be either intra or inter, depends. What is that? We need to see the nearest coastal state or union territory. If the nearest coastal state or union territory is the same state of supplier, it will become intra. If the nearest coastal state is some other state, then it will become inter. For example, supplier is located in Tamil Nadu and he is providing repair services to a ship which is in territorial waters, and the place of supply is location where services are actually performed. If the ship is nearest to Tamil Nadu, then that is coastal state, Tamil Nadu, then it will be taken as intrastate supply. If the ship is near to Andhra Pradesh, then it will be taken as interstate supply. Like that we need to determine in terms of section 9. Suppose if location of supplier is in India and the place of supply is in exclusive economic zone, always it will be deemed inter. That's another point. As India extends up to 200 nautical miles, if the supply is beyond territorial waters and up to 200 nautical miles, it will be called as deemed inter. Suppose if the supply takes place in high seas, so place of supply is in high seas, then also it will be called as deemed inter. Why it will be called as deemed inter? Location of supplier in India, place of supply outside India, because it is outside India, na? This will be called as outside India. So therefore, then also it will become deemed inter. This is as per section 75A and this will be because of section 75C. Okay, but both will be called as deemed inter. So that is what you need to remember. So tell me out of this, what are the activities which are treated as deemed interstate? Number 1, import of goods or import of services. Number 2, location of supplier in India, place of supply outside India. Number 3, supply to SEZ or supply by SEZ. And number 4, so supply beyond territorial waters and up to 200 nautical miles from the baseline. And number 5, supply, place of supply is determined under section 13 and it is in India. That's a deemed interstate. Now one more point also. Export of goods. Export of goods means what? Taking goods from India to a place outside India is known as export of goods. In case of export of goods, where is the location of supplier? India. What is the place of supply? The place of supply for export of goods is location outside India. As supplier in India, place of supply outside India, export of goods will come under deemed interstate. So as location of supplier in India, place of supply outside India, consequently export of goods will come under deemed interstate. Also, what is the meaning of export of services? 5 conditions should be satisfied for export of services. Supplier should be in India, recipient should be outside India, and place of supply should be outside India. Consideration should be in convertible foreign exchange, and wherever permitted by RBI it can be in Indian rupees. Supplier and recipient are not two establishments of the same person. In that, if you see, for export of service, where the supplier should be India, where the place of supply should be outside India, then export of service also will come under deemed interstate. So you need to add one more point into the list of deemed interstate supplies. What is that? Export of goods and export of service. So import of goods, import of services, export of goods, export of services, place of location of supplier in India, place of supply outside India, supply to SEZ or supply by SEZ, then supply beyond territorial waters and up to 200 nautical miles, place of supply determined under section 13 and that is in India. One more point which we learnt long back, priority sector lending certificate. Trading in PSLC will be through e-Kuber portal and the supplier don't know who is the recipient and the recipient don't know who is the supplier. Due to that reason it will be treated as deemed interstate supply. Then security lending under SEBI. So in case of security lending, RCM will be coming na. The lender of the securities don't know who is the borrower because this will happen through stock exchange. The borrower don't know who is the lender. So therefore the security lending also treated as deemed interstate supply. Then one more point we have with respect to deemed interstate based on section 8. So please see section 8. Section 8 talks about the meaning of intrastate supplies. So what is the meaning of intrastate supplies? If the location of supplier and place of supply is in the same state or same union territory, then it is intrastate. And there are few activities which are treated as deemed interstate as per section 8. Supply of goods or services to or by SEZ. Already we know that. Import of goods, already we know that. Extra we have is supply of goods to a tourist. This is the 9th point. Supply of goods to a tourist will be coming under deemed interstate. So there is a tourist who is coming from outside India to India, and his stay in India is for a period not more than 6 months, and he will be procuring some goods in India. So for that we need to charge only IGST, even though he is located in the same state and we are also located in the same state. Supply of goods to a tourist is deemed interstate. They created this provision because in section 15 they brought in one tourist refund scheme. For the sake of that they created, but the tourist refund scheme is not applicable at present, but this point of deemed interstate alone will be applicable. Okay. Then apart from these 9 points, any advance which is collected, and at the time of collection of advance we don't know whether it is intrastate or interstate, then also it should be deemed as interstate. So this is about deemed interstate supplies. Total 10 points, you can see next page. Very important, because in case of this 10 points always it should be IGST, and you should not put it under CGST, SGST, you need to put it under IGST. So what are the 10 deemed interstate supplies? Supply to or by SEZ. Import of goods or import of services, export of goods or export of services, location of supplier in India, place of supply outside India, supply of goods to a tourist, and supply of goods or service beyond territorial waters and up to exclusive economic zone, location of supplier in India and place of supply in India as per section 13, security lending under SEBI, trading in priority sector lending certificates, then advances received which cannot be categorized into intra or inter. These are the 10 deemed interstate supplies. Got it? Then next, supplies in territorial waters. What will be taken as supply in territorial waters? The location of supplier or the place of supply will be the nearest coastal state or the union territory that will be taken. That's the example I have given. If a marine engineer is registered in Tamil Nadu, provides repair services to Mr. Musk located outside India for his ship located in territorial waters of India, and place of supply will be location where services are actually performed. Sir, but in case of repairs to ship, we have an exception, sir. We need to take location of recipient. That is when. So repairs, overall and maintenance in relation to ship or vessels and its parts. If it is for business purpose, then only that exception will come. Location of recipient will be taken. Otherwise, it is location where services are actually performed. So don't look at me like this. So this is one provision which is there, and here it is location where services are actually performed. That is location of the ship. But as the ship is in territorial waters, place of supply shall be the nearest coastal state where the ship is located. And if the nearest coastal state is Andhra Pradesh, where this marine engineer is located, Tamil Nadu, nearest coastal state Andhra Pradesh means it will be inter. What if the nearest coastal state is Tamil Nadu? Then it will be coming under intra-state supplies. Then look into previous page. We have the meaning of export of goods and export of services. What is the meaning of export of goods? Taking goods from India to a place outside India is known as export of goods. Is consideration essential to be calling it as export of goods? No. Consideration is not essential to call the transaction as export of goods. However, if you are not able to realize the foreign exchange proceeds within the time limit under FEMA, you will not be able to enjoy any benefit. Even if you have already claimed any refund, that refund will become payable. Say this, taking goods from India to a place outside India is export of goods. Consideration in foreign exchange is not a condition. However, if foreign exchange not realized within the time limit under FEMA, what is the time limit under FEMA? 9 months from the date of export. Then already we would have claimed refund at the time of export of goods. That refund, whatever we have claimed, will be recovered from us. So shall be recovered. Then what is the meaning of export of services? In the meaning of export of service itself, they are telling that consideration should be in foreign exchange. That's why in case of export of goods, very important point, concentrate. In case of export of goods, we will claim the refund immediately upon export. and if you are not realizing the proceeds, that refund will become recoverable. But in case of export of services, we will claim refund only when we realize the consideration in foreign exchange. Otherwise, we cannot. That's the reason why for export of goods, realization certificate or foreign inward remittance certificate is not a supporting document. But for export of services, bank realization certificate or foreign inward remittance certificate is one of the supporting document. Means in case of export of services, you can claim refund only on realization of forex. So this time limit for realizing the forex is not there for export of services. Why? Because consideration should be in forex is one of the condition itself for export of services. So what are the 5 conditions for export of services? Where the supplier should be in India, recipient should be outside India, place of supply should be outside India, how the consideration should be convertible foreign exchange. But in 2 cases, it is permitted by RBI that the consideration can be in Indian rupees. What are the 2 cases? Number 1, if the services are provided to Nepal and Bhutan, the consideration can be in Indian rupees, it's okay. Second, if the payment is credited in special rupee escrow account maintained by a bank outside India. So this special rupee escrow account will be maintained by a foreign bank, wherein any amounts that we need to get in foreign currency will be credited in that account. Any amount which we need to pay in foreign currency will be debited from that account, so that the exchange fluctuation will not be happening, that conversion will not be happening. So this money which is credited into that special escrow account which is maintained by the foreign bank is as good as the money received in convertible foreign exchange, even though in our account the money will be received in Indian rupees. The money will not be received in convertible foreign exchange. The money will be received in Indian rupees, means what is credited in our bank account is Indian rupees. But this Indian rupees we got from a foreign bank, that foreign bank is maintaining special escrow account, and there it was credited in foreign exchange, it is okay. That's what RBI is telling. So in 2 cases, even though the money is credited in your bank account in Indian rupees, it's okay. It is as good as it is export of service. What are the 2 cases? If the service is provided to Nepal and Bhutan and payment is credited in special rupee escrow account maintained by a bank outside India. But in other cases, the consideration should be in convertible foreign exchange. And 5th condition is that supplier and recipient are not merely establishments of the same person. For example, there is a holding company in India and subsidiary company outside India. Will it become export of service? Yes. Yes, it will become export of service, because holding company and subsidiary company are 2 different companies. If the head office is in India and the branch office is outside India, then they both belongs to the same company. So in that case, it will not become export of service. What if the branch outside India is separately incorporated as per the law of that country? Then in that case, will it become 2 establishments of the same person or different persons? Different persons. Example, I have opened a offshore unit in Singapore. This offshore unit in Singapore is incorporated under the laws of the Singapore, means it has got a separate legal existence in Singapore. Now, even though it is my branch, when I provide service from here to there, it will not be treated as 2 establishments of the same person. It will be treated as 2 separate persons. See this note. Supply from a company incorporated in India to its establishment outside India, which are incorporated under the laws outside India, would qualify as export of services subject to fulfillment of other conditions. Then look into the next area, that is 0 rated supplies. As per section 16, what are considered as 0 rated supplies? Export of goods or services and supply of goods or services to a SEZ unit or developer will be taken as 0 rated supplies. And in case of 0 rated supplies, whether GST is paid on inward supply. So yes, because we have discussed in input tax credit, if the outward supply is 0 rated, we can avail the ITC on inward supplies. And there are 2 options available in case of 0 rated supplies. What are the 2 options? Option 1, on 0 rated supply, pay IGST. And we will get the refund. That IGST we can pay using our ITC. For example, my liability is 8 lakhs and I have an input tax credit of 3 lakhs. How much net I will pay? 5 lakhs. 8 lakhs gross liability IGST, 3 lakhs I have input tax credit, so net liability will be 5 lakhs. How much I will get as refund? Entire 8 lakhs I will get as refund. Entire gross IGST I will get as refund. The logic here is simple. On purchases already I paid 3 lakhs. Now on export I am paying 5 lakhs. So this 3 plus 5, 8 lakhs I will get as a refund. So my burden will become 0. That is what 0 rated option 1. Option 2, I will make outward supplies without payment of GST under bond or LUT, without payment of GST. In this case, what will happen is that, so I will be having some unutilized ITC on my inputs and input services, that I will get as refund, because on outward supply I am not paying any GST, but on inward supplies I have some unutilized ITC, that I will get as refund. Don't pay any GST on outward supply and supply it under bond or LUT, but get refund of ITC with respect to GST paid on inward supply, that is inputs and input services. Then next, generally online money gaming is specified actionable claims. Specified actionable claims will come under goods. So this is a very interesting point, it is an amendment, please concentrate. Specified actionable claims are treated as goods. Online money gaming is also goods. Then when the supplier is outside India, online money gaming supplier is outside India and you are located in India, will it become import of goods? Logically yes, because specified actionable claims are treated as goods, it will become import of goods. When it is import of goods, customs duty is payable na, but they have created a carve out provision which says that even though specified actionable claims are goods, on import of specified actionable claims, customs duty not applicable, only GST is applicable. You got it? See this. The central government has notified supply of online money gaming as the goods, on import of which IGST shall be levied and collected, and not in accordance with the provisions of Customs Tariff Act. So on import of specified actionable claims, there is no customs duty, there is only IGST. Is it clear? Then this is the point which I told you, OIDR services includes online money gaming, but OIDR services excludes, OIDR service includes online gaming, but OIDR service excludes online money gaming. Therefore the provisions of OIDR service is not applicable to online money gaming, but online gaming will be treated as OIDR services. Okay. So these are the various points that we have related to charge under IGST. So there are few queries here. That is, sir, RCM deposited on capital goods under 9(4), is it blocked for ITC under 17 subsection 5? See, listen. Actually, wherever 9(4) is applicable, 9(4) is applicable to whom? Promoter or builder. And 9(4) is applicable only in case of residential properties. Wherever the GST rate is 1.5% or 7.5%, for those kind of projects only 9(4) will be applicable. So 1.5% or 7.5% rate is what? With ITC or without ITC? Without ITC, which means that can they take ITC of RCM paid under 9(4)? No, they cannot take. Please listen, concentrate. It's a very, very good question. That is, sir, 9(4) is applicable to me. I am a promoter or builder. 9(4) is applicable to me. Now, when 9(4) is applicable, if the type of construction that I am making is residential construction, only 9(4) is applicable. For commercial projects, 9(4) is not applicable. For residential projects only. Why? Because the residential projects rate of GST is 1.5% or 7.5% without ITC. So whenever I make payment of GST, I cannot take ITC. So naturally I will buy from an unregistered person. That's why to stop these people from buying from unregistered person, they brought this 9 subsection 4, where even though you buy from an unregistered person, you need to pay GST under RCM. That GST we pay under RCM under 9(4), can we take as ITC? No, impossible. We cannot take ITC. It's not because of the blocked credit. It is because the rate applicable to the promoter or builder is 1.5% or 7.5% without ITC. Then another question. Sir, in fast track batch where 9(5) was applicable, you mentioned supplier will pay GST on the amount received from e-commerce operator. Yes, that is only in some specific cases. That is in case of supply of food through e-commerce operator, and the second case is that omnibus, transportation of passengers. In case of these two, even if the supplier is registered, it will be coming under, like e-commerce operator liability. Now the supplier will receive some money from the e-commerce operator. On that, whether supplier is required to pay GST. So for that, we have one CBIC FAQ which says that yes, the supplier is required to pay GST on that, because he is a registered person and he gets that share from the e-commerce operator. Okay, but that is actually specific provision. You don't worry about that. You remember whatever I have discussed. Then, sir, on 9.5 supplies, whether supplier can avail ITC in respect of inputs used by him. In case of 9.5, who is liable to pay GST? E-commerce operator is liable to pay GST. So naturally, e-commerce operator can take ITC on their inward supplies, whatever inward supplies they have. And in case of restaurant service, the rate of GST applicable is 5% without ITC. In that case also, e-commerce operator can take ITC on inputs and input services. There is no restriction. Okay. Then next, under 9.3, are residential property given on rent for registered individual for his own stay, not his family. His family includes his own stay also. So his family does not mean something else. His family means own. What if he is a single throughout his life? He is a single, but he live with many girls. Then also he will be called as family only. His family means him for his purpose. Okay, I don't want to add anything extra beyond this. So it will be coming. Yeah, coloring away. So therefore, his family, I mean, what if he is not married, sir? He will stay there. That is, his family means it includes him also. Okay. Then, what if he is having different families, sir? Okay, fine. Anything, yeah. See, export of service, I did not say related and all. What I said is that in case of export of service, the fifth condition is that supplier and recipient are two establishments of the same person. So then it is not export of service. The moment you say holding company, subsidiary company, holding to subsidiary or subsidiary to holding, they are two separate companies. So definitely it will become export of service. There is no restriction on that. Then, so you have energy? No, half an hour, just a half an hour. Yes. So we will see one small area, we will complete that. That's why I am asking you. So have a look into time of supply, page 59, segment 6. Time of supply, there are total 3 sections we have. Section 31, which talks about what is the due date of invoice. Section 12 talks about time of supply in case of goods. Section 13 talks about time of supply in case of services. Section 14 talks about time of supply in case of change in rate of tax. What is the purpose of time of supply? Time of supply is for the purpose of determining the due date of payment of GST, and time of supply is for determining the exchange rate, and time of supply is for determining the rate of GST. If for any transaction, time of supply falls in this month, then by next month 20th, I need to pay GST on the transaction. So the due date of a transaction depends upon time of supply. And already we have seen rule 34, value of supply, which says that the exchange rate prevailing on the time of supply as notified by CBIC or GAAP should be taken. So therefore, time of supply is relevant for determining the exchange rate. Third, time of supply is relevant for determining the rate of GST. On different dates, there could be different rates of GST, but we need to take the rate of GST prevailing on the time of supply. And the time of supply for a transaction depends upon the due date of invoice. That due date of invoice is given under section 31. In case of goods, we have 3 provisions. So, normal cases, continuous supply of goods, sale on approval or on return basis. 31 subsection 1 talks about normal cases. In normal cases, supply involves movement of goods. The due date of invoice is at the time of removal. So on or before the date of removal, the invoice needs to be given. If supply does not involve movement of goods at the time of delivery. So supply involves movement of goods, supply does not involve movement of goods. What is the difference? Under the contract of supply, if the goods are taken from one place to another place, then it is known as supply involving movement of goods. Basically, this door delivery contracts or e-commerce transactions will come under supply involving movement of goods. Supply does not involve movement of goods means we go to the seller's place, we buy the goods and the supply is terminated there. Thereafter we bring the goods. That is supply not involving movement of goods. In case supply involves movement of goods, the due date is at the time of removal. If supply does not involve movement of goods, the due date is at the time of delivery. This is 31 subsection 1 normal cases. 31 subsection 4 continuous supply of goods. In case of continuous supply of goods, what is a continuous supply of goods? There will be successive supply of goods for which the payments are settled on a periodic basis. So frequently I will be supplying goods, but I will not collect money. So either fortnightly or weekly or monthly or quarterly, I will be collecting money. That is called as continuous supply of goods. In case of continuous supply of goods, we need to check whether the payments are received based on account statement or the payments are received irrespective of account statement. What is this account statement? As I am making successive supply of goods, so for a periodic basis, I will prepare one account statement and I will be giving that account statement to you. Now that account statement will contain on which date, what is the value of goods that I have supplied to you. Now, some payments are collected as advances irrespective of this account statement. So for those amounts, it is the date on which payment is received will be taken as the due date of invoice. Whereas some amount will arise based on account statement. For example, 6,52,000. In that 6 lakhs already you paid 52,000. The differential amount you need to pay based on account statement. For that 52,000, the account statement will be taken. It is not whichever is earlier, because lot of people are understanding that account statement date or payment received date whichever is earlier. No, it is account statement date or payment received date as the case may be, which means if the payments are arising based on account statement, it is account statement date, date on which account statement is issued. If the payments are received irrespective of account statement, then the payment received date as the case may be, it is not whichever is earlier. Then sale on approval or on return basis. In case of sale on approval or on return basis, when the invoice to be given 6 months from the date of removal or date of acceptance by the buyer, whichever is earlier. Today I deliver the goods to you, and if you confirm, then only it is considered as sale. Until that point of time, it is not sale. You confirmed within 6 months. The date on which you confirm, that is the date of sale, I will raise invoice. Suppose you have not confirmed within 6 months, deemed that on expiry of 6 months you confirmed and I will raise invoice. Now, say after 6 months you return the goods, but already on expiry of 6 months I prepare the invoice. Now you return the goods. What should I do? In that case, I need to give you a credit note cancelling this invoice. So what is the due date of invoice in case of sale on approval or on return basis? 6 months from the date of removal or date of acceptance by the recipient or buyer, whichever is earlier. Then in case of services, we have 3 subsections. Subsection 2 is normal cases, subsection 5 is continuous supply of service, and subsection 6 is cessation of service. In normal cases, so we need to check, is it banking sector or insurance sector or others. In case of banking or insurance, the due date of invoice is 45 days from the date of completion. In case of others, it is 30 days from the date of completion. So banking or insurance, 45 days from the date of completion. Other cases, 30 days from the date of completion. Then continuous supply of service. What is a continuous supply of service? A service which takes more than 3 months. Remember, more than 3 months and involves periodic payment obligations. Both should be there. If a service takes more than 3 months to complete and there is no periodic payment obligations, it is not treated as continuous supply of service. Or if the service takes less than 3 months to complete but involves installments, that is also not continuous supply of service. Both the conditions should be satisfied. It should take more than 3 months to complete and should involve periodic payment obligations. Then in case of continuous supply of service, whether the due date of installment is ascertainable from the contract. Yes, the due date of installment will be taken as the due date of invoice. If due date of installment is not ascertainable from the contract, but the installments are based on some milestone events. So that is completion of an event. As and when the event is completed, that date will be taken as the due date of invoice. Suppose if the payment due date is not given in the contract, or even the payment is not linked to completion of an event, as and when the installment amount is received, that date will be taken as the due date of invoice. Date of installment ascertainable from contract, such due date of installment. Due date of installment not ascertainable from contract, as and when payment is received. Payment is linked to completion of event, as and when the event is completed. Then in case of cessation of service, immediately upon cessation, we need to give the invoice. Cessation refers to abruptly stopping the service is known as cessation of service. Immediately upon cessation, with respect to the proportionate amount retained, the invoice needs to be given. So this is about due date of invoice in case of goods and services. Then section 12 talks about due date of invoice, time of supply in case of goods. Section 13 talks about time of supply in case of services. In that we have some situations. First situation is time of supply in case of FCM. Second is time of supply in case of RCM. Then time of supply in case of vouchers, and time of supply in residual cases, and time of supply on account of interest, late fee or penalty for delay in receipt of consideration. And in that, this vouchers point, residual cases and interest late fee is common between 12 and 13. There is no change in the provisions. Whereas in case of FCM and RCM, there is a change in the provision. First look into 12 subsection 1 and 13 subsection 1. So this subsection 1 says that liability to pay GST is determined on the basis of time of supply. So the purpose of time of supply is given in subsection 1. Then subsection 2 you see. 12 subsection 2, when 12 is applicable, goods. Subsection 2 is applicable when FCM. You have to remember with subsections. So 12 is goods, subsection 2 is FCM. Goods FCM, what is the provision? See there. In case of a person opting for composition scheme and specified actionable claims, that's an amendment. In case of a person opting for composition scheme and specified actionable claims, what will be taken as the time of supply? It is due date of invoice, actual date of invoice, or date of payment, whichever is earlier, which means whether GST payable on advances. Yes, for a person opting for composition scheme and for specified actionable claims, GST payable on advances, because date of payment is also one of the date there, you understood. Whereas for others, so what will be taken as the time of supply? Due date of invoice or actual date of invoice, whichever is earlier. This date of payment is not there, which means GST is payable on advance or not payable on advances? Not payable on advances. So be careful with respect to this. In MCQ they will test time of supply in case of FCM 12 subsection 2. In case of person opting for composition scheme and specified actionable claims, time of supply is ADOI. ADOI means actual date of invoice. DDOI means due date of invoice or date of payment, whichever is earlier. So GST payable on advances or not? Yes, GST payable on advances. Whereas in other cases, it will be only two dates. Date of payment is not there. So actual date of invoice, due date of invoice, whichever is earlier, GST not payable on advances. Whereas in case of services under FCM, that is which section? 13 subsection 2. 13 subsection 2, services FCM. Simple. Whether invoice is given within the due date. Yes, invoice is given within the due date. Then take the actual date of invoice or date of payment, whichever is earlier. If invoice is not given within due date, take the completion date or payment date, whichever is earlier. What is the time limit within which invoice to be given? General cases, 30 days from the date of completion or 45 days from the date of completion is there, na? That is the due dates. So if the invoice is given within the due date, date of invoice or date of payment, whichever is earlier. If invoice is not given within the due date, then completion date or payment date, whichever is earlier. As date of payment is one of the date for determining time of supply, whether GST payable on advances. Yes. Then look into subsection 3, 12 subsection 3. When 12 subsection 3 is applicable, when 12 is applicable, goods. When subsection 3 is applicable, RCM. In case of goods RCM, what will be taken as the time of supply? 3 points. The date on which goods are received. In case of RCM, we need to determine from whose perspective? Recipient perspective. The date on which goods are received or the date on which payment is made to supplier, or 31st day from the date of invoice, whichever is earlier. Date on which goods are received, date on which payment is made to supplier, or 31st day from the date of invoice, whichever is earlier. As date of payment is one of the date here, so GST payable on advances. Then next, in case of 13 subsection 3, when 13 is applicable, services. When subsection 3 is applicable, in case of RCM. So what should be taken as the time of supply? Date on which payment is made to supplier, or 61st day. Here 31st day, here it will be 61st day. Here date on which goods are received, that is not there. Okay. Date on which payment is made to supplier, or 61st day from the date of invoice, whichever is earlier. Again here, as date of payment is one of the date for time of supply, GST payable on advances. Generally GST is payable on advances in all cases. Exception only one case, GST not payable on advances. What is that? Goods, FCM, other than composition scheme or specified actionable claims. Then subsection 4, 12 subsection 4 and 13 subsection 4, that is common for both goods and services. This is in case of vouchers. In case of vouchers, what will be taken as a time of supply? Check whether it is identifiable voucher or non-identifiable voucher. In case of identifiable voucher, at the time of issuance of voucher. Identifiable voucher means against which product or service you are going to redeem that voucher is known at the time of issuance. So at the time of issuance itself will be taken as the time of supply. Whereas non-identifiable voucher means you can redeem it against any product or service of the supplier. Therefore, we don't know against which product you will be redeeming. So due to that reason, the time of supply will be at the time of redemption. So identifiable voucher at the time of issuance of voucher, non-identifiable voucher at the time of redemption. And then 12 subsection 5, residual cases. In residual cases, again this is common between goods and services. Residual cases, you check whether they are required to file any periodical return. So if they are required to file periodical return, who is required to file periodical return? A registered person is required to file periodical return. The due date of that return itself will be taken as a time of supply. Where periodical return is not required to be filed. Who is not required to file periodical return? So unregistered person. So unregistered person is not required to file periodical return. Whenever they pay GST, that date will be taken as the time of supply. So where periodical return has to be filed, due date of filing such return. Periodical return not filed, date of payment of GST. Subsection 6, residual cases. In residual cases, what will be taken as the time of supply? Sorry, subsection 6 is interest, late fee or penalty for delay in receipt of consideration. Interest is always taxable on receipt basis. Whenever we are actually receiving the interest, we need to pay. Which interest? Is this interest on loans, advances, deposits? No, because interest on loans, advances, deposits is exempted. This is interest on account of delay in receipt of consideration. So GST is payable on receipt basis. Under GST, everything will be payable on accrual basis. Only this interest on late fee, interest or late fee or penalty for delay in receipt of consideration payable on receipt basis. This is with respect to 12 and 13, and there are some additional points in this regard. What will be taken as the date of payment? So usually date of payment from the supplier point of view is date of entry in their books or date of credit in their bank account, whichever is earlier will be taken. Whereas from recipient point of view, if you see opposite, what is that? Date of entry in the books or date of debit in their bank account, whichever is earlier. Then in case of goods covered under FCM, on advances GST not payable generally, correct? Exception is we have seen composition schemes, specified actionable claims, and GST is payable only upon invoice, as the time of supply is date of invoice or actual date of invoice, whichever is earlier. But in case of service under FCM, GST is payable on advances. As GST is payable on advances in case of services, if you are receiving any excess amount beyond the invoice, for that excess amount, what will be the time of supply? For example, I raised invoice for 11,200, but you paid 12,800 rupees you paid extra. For that 800 rupees, this month I am receiving 800, but this 800 will be reflected in the next month bill. So invoice is next month, payment is this month. Whichever is earlier means I have to pay GST this month. But it will be administratively inconvenient. For that there is one proviso which says that if the excess amount is up to 1000 rupees, what is the excess amount here? 800, which is up to 1000 rupees. Either we can pay based on invoice itself, or as per the normal provisions. As per normal provisions means invoice or payment whichever is earlier, or the date on which invoice is raised, as the case may be. Supplier has the option to choose. See this, up to 1000 rupees received in excess of the invoice. In case of services covered under FCM, time of supply can be date of invoice or determined as per 13(2), and the supplier has option to choose. Then in case of supply of services between associated enterprises, who are associated enterprises as per section 92A of Income Tax Act, we have now a list of associated enterprises. Basically it is 26%. One company or one person holding 26% in the other will become associated enterprises. In case of associated enterprises, import of services, generally import of service will come under RCM. So what will be taken as the time of supply? Import of services, RCM. RCM services, what is the provision? 13 subsection 3, date on which payment is made to supplier or 61st day from the date of invoice. But in case of associated enterprises, we are removing 61st day from the date of invoice, and we are taking the date of entry in the books of the recipient whichever is earlier. So what is the provision? So the date on which payment is made to supplier or date of entry in the books of recipient whichever is earlier. Then when the goods are taken outside India for exhibition, is it supply or not a supply? Not a supply. But if the goods are not brought back within 6 months, the deeming fiction under 31 subsection 7 will be applicable, like sale on approval or on return basis. As the goods are taken for exhibition, not brought back within 6 months, on expiry of 6 months, it is deemed to be supply and invoice needs to be raised. That is this. When goods are taken outside India for exhibition, it is not a supply. But when the same is not brought back within 6 months, it is deemed to be supply in terms of 31 subsection 7. Then the last section that we have is section 14. So section 14 talks about time of supply in case of change in rate of tax. So in case of change in rate of tax, when the section 14 will be applicable? Mainly section 14 is applicable in case of services. Okay. So applicable only in case of services, and it is also applicable in case of person opting for composition scheme and specified actionable claims. Okay. So first you should know to whom this section 14 is applicable. This section 14 is applicable only in case of services. Also applicable in case of composition scheme and specified actionable claims. But practically it is irrelevant. Why? Because in case of composition scheme, the rates will be always same, 1%, 5%, etc. And in case of specified actionable claims also, the rate will be always same. What is that rate? 28%. So this change in rate concept will not be coming. So practically the section 14 is applicable only in case of services. Now when 14 will be applicable? Services. What is the situation where 14 is applicable? Between 3 dates there is a change in rate. What are those 3 dates? Date of completion, date of invoice, or date of payment. Between these 3 dates there is a change in rate, then 14 will come. And in that we have 2 scenarios. What is that? 14A, supply before change in rate, means the completion is before change in rate. And then what should be taken as the time of supply? Very simple, invoice or payment, whichever is earlier. Say this. Suppose if the completion is before change in rate, then invoice date or payment date, whichever is earlier. Suppose if the supply is after change in rate, then what you need to do? Then check whether both invoice and payment is before change in rate or one before, one after. If both invoice and payment before change in rate, whichever is earlier. If one is before, one is after, then it will be taken as whichever is later. Invoice date or payment date, whichever is later. Now, what will be taken as the date of payment? Generally, what is the meaning of date of payment? Date of entry in the books or date of credit in the bank account, whichever is earlier. However, in case of section 14, if the payment is credited in the bank account within 4 working days from the change in rate, then only it will be entry date or credit date, whichever is earlier. Okay. If the payment is not credited within 4 working days from the change in rate, then the date on which payment is credited only will be taken as the date of payment. So date of payment for section 14 is date of entry in the books or date of credit in bank account, whichever is earlier, when if the payment is credited within 4 working days from change in rate, or date of credit in the bank account if the payment is credited after 4 working days from the change in rate. Now let's see how this section 14 will have an impact. So there is a change in rate. There is a change in rate with effect from 1/5/2023. There is a change in rate with effect from 1/5/2023. Now date of completion, then date of invoice and date of credit, date of credit, date of entry, date of credit where? In bank account, date of credit in bank account, date of entry in books. Now based on this you need to determine what is the date of payment, and you need to determine what is the time of supply and what is the rate of GST, whether old rate or new rate is applicable. Okay. Now let's see this. Date of completion is 15/4/2023 and date of invoice is 30/4/2023 and date of credit in the bank account is 2/5/2023, but the date of entry is 28/4/2023. Okay. Now what should be taken as the date of payment? So as the payment is credited within 4 working days, we will assume that all days are working days from 1st May, because 1st May we don't have any holidays and all, so all days are working days. So 2/5 is within 4 working days, correct or not? As the payment is credited within 4 working days, so due to that reason we will take date of credit in the bank account or date of entry in the books, whichever is earlier, which is earlier 28/4/2023. Now in this case if you see, completion is before change in rate, invoice also before change in rate, payment also before change in rate, correct? Normal provision. What is that normal provision? Invoice or payment, whichever is earlier. Which is earlier? Which is earlier? So 28/4/2023, that is invoice date or payment date, whichever is earlier will be taken. And what is the rate that will be applicable? Old rate will be applicable. So like that we need to determine. Now see, 14/15/4/2023, invoice is 5/5/2023 and date of credit in the bank account is so 3/5/2023 and the payment date of entry in the books is 28/4/2023. Now what will be taken as the date of payment? Same, 28/4/2023, as the payment is credited within 4 working days. So therefore we need to take 28/4 and 28/4 or 5/5, whichever is earlier, even though invoice is given at the new rate, but old rate only will be applicable. 28/4/2023, old rate will be applicable. Next, another example. Say if the completion is 15/4/2023, date of invoice is 5/5/2023 and the credit is happening on 10/5/2023, but the entry is 28/4/2023. Whether the payment is credited within 4 working days? No, not within 4 working days. When it is not within 4 working days, what will be taken as the date of payment? Date of entry in the books only will be taken, or date of credit in the bank account will be taken? Date of credit in the bank account will be taken. Now what will be taken as the time of supply? Date of invoice or date of payment, whichever is earlier, So 5/5/2023, what is the rate that will be applicable? New rate will be applicable. Okay. Then next, suppose if the completion is 8/5/2023 and the invoice is 28/4/2023, payment is credited on 3/5/2023 and 29/4/2023. So what will be taken as the date of payment? Is the payment credited within 4 working days? Yes, the payment is credited within 4 working days, and as the supply is after change in rate. Supply is after change in rate. Carefully see the provision. Supply is after change in rate. And one before, one after, or both before? Both before. Both invoice and payment before change in rate. So we need to take date of payment is 29/4/2023, no change. But we need to take whichever is earlier or whichever is later. Whichever is earlier. Why whichever is earlier? Because both is before change in rate. Whichever is earlier, that is 28/4/2023, old rate will be applicable. Now suppose 8/5/2023, so 28/4/2023, the payment is credited on 10/5/2023, but the account entry is 29/4/2023. It is not within 4 working days. Now what will be taken as the date of payment? Date of payment will be 29 or 10? 10. So 10/5/2023 will be taken, and date of invoice is before change in rate, payment is after change in rate. So one before, one after, means we need to take whichever is later. Why? Because this is supply after change in rate. So whichever is later. Which is later? 10/5/2023. So what will be the rate that is applicable? New rate will be applicable. Like that, any combination they can give in question. You be careful on the provision. What is the provision you need to remember? Completion before change in rate. Invoice date or payment date, whichever is earlier. Completion after change in rate. Both invoice and payment before change in rate, whichever is earlier. One before, one after, whichever is later. What is the meaning of date of payment? Payment credited within 4 working days from the change in rate. So credit date or account entry date, whichever is earlier. Payment not credited within 4 working days. Date of credit in the bank account only will be taken as the date of payment. So that is about 14. Then with this we completed this time of supply also. And let's see the queries and we will wind up the session. Why section 14 is not applicable in case of change in rate of goods? Because of notification 66/2017. There is one notification 66/2017 which says that, so for goods covered under, supply of goods, always we need to take due date of invoice or actual date of invoice, whichever is earlier. Even though section 14 is applicable for goods, but we need to take always due date of invoice, actual date of invoice, whichever is earlier, because of the notification 66/2017. Then next, based on square feet of house and SDV of house, rates will be determined 1.5. So 1.5, 7.5 is not in syllabus. When 1.5%, when 7.5%. So don't break your head. Whatever is there in syllabus, that itself we don't have time to learn. Okay. So don't think too much about it. It will be given in the question itself. Okay. That's it. Fine. Thank you. And we will continue with the exemptions tomorrow. So in tomorrow's session, we will be completing exemptions under GST and followed by place of supply and even refunds and other topics. Okay. It will continue. Thank you. We'll meet tomorrow.